Okay, Jeff, you are live on YouTube.
I should have finished eating that steak.
You all just have a sip of coffee.
All right. All right. Good morning, everybody. Hope you're doing well. It's good to see you. We like to start a few minutes early, and we are going to give away a prize. I'm just getting my prize spreadsheet real quick.
You know, I think Jeff is so busy, he's remiss in welcoming you and identifying exactly what he's welcoming you to.
Welcome.
Today is day 5 of the Traders Conference, the last and final day. And before we start, officially, we like to start a little early to do a little prize giving away.
Yes.
And let people kind of see behind the scenes of all the action.
I can't see you guys, but I bet you look amazing as well. Okay. Prize offers. I got it. I found it. Thank you for the assist, Greg.
You're welcome.
No.
My randomizer.
You got it. Guess whose birthday it is today? Or was?
Ringo Starr.
That might be true. I cannot objectively prove that without searching the internet. It's actually Steve Bigelow's birthday today.
Oh, that's right. You mentioned that yesterday.
Happy birthday, Steve.
Happy
Steve was a great partner of Metastock. We absolutely love Steve. And I think to commemorate his birthday, we're going to give away some of his books. So
that sounds awesome.
Steve was a great partner of Metastock. He was a great mentor of mine. Absolutely love him. I love the patterns of the work that we did, and kind of he was instrumental in me understanding more about kind of the candlesticks and how they can help read investor sentiment. So big love to Steve. Let's go ahead and give away one of his books. So Greg, what I need, or actually we're going to give away 3 of them. I've got a mouse pad right here.
All right.
Has his major patterns on there. I have Eliminating Emotions with Candle Profits. And then High Profit Candlestick Patterns. We're going to give away all 3 of them. And we're going to give them to you if you're random. And Greg is going to determine that. So Greg, what I need from you to kind of put this together, and it looks like we're kind of running up on time, but I just need a number between 1. And for some reason, Google's not giving me the end, but I think it was 8309.
8309. Okay, 1 and 8309, and that number is 7127. Lucky 7. 7127.
And that is Peggy C. Without a country.
Peggy C.
Yeah, no country on that one, but an AOL address. I bet it's, America.
Jeff, before I go and let you start the event, I'd just like to remind people that they can enter to win prizes today, the last day. If you haven't yet, if you're listening to this on YouTube and you haven't entered, you can go to metastock.com, go to the banner at the top and register at that page. It's very simple, it just takes a second. And if you're listening to this on GoToWebinar, you don't need to register because you already did.
All right. Thank you very much for that. Also, did you like and subscribe?
I'm sorry, Jeff?
Did you ask people on YouTube to like and subscribe because it helps a great
deal?
Oh,
and make sure, yes, please make sure to like and subscribe if you're enjoying this event, and ring that bell so you can be notified when we have other events just like this one. And with that, I shall let you have control of the situation, Jeff.
The situation.
Break a leg.
Let's go time. Welcome, everybody. Good to see you. Thank you for coming. Day 5. It's been great. The conference so far has been going amazingly well. I appreciate all of you that have been here every day, kind of watching. I appreciate all of the great guests that we've had. And I appreciate all of the sponsors that have helped make the event possible. And we have another great lineup today. So let me get you to the favorite part. I know it's my favorite part. I know it's also your favorite part. Let's read a legal disclaimer together. Today's demonstration is designed to instruct you on using Metastock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock and its employees and its presenters shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. Metastock and its employees do not endorse the purchase of a security, nor are they paid for the promotion of a security. No information contained in this presentation should be construed as an investment advice or the solicitation to buy a security. So there we go. Welcome. Big thank you to some of our sponsors today. I've talked about them all week. AAII.com. AAII is the American Association of Individual Investors. You've probably heard about the AAII Investor Sentiment Survey. They do that. They also do a lot of fundamental and report-driven stuff on their website. They also have an active investor division where they look at technical analysis and that kind of stuff. So very cool, very well-respected organization. And AAII.com is how you can find out about those guys. A big thank you to Stocks and Commodities Magazine. Stocks and Commodities Magazine has been publishing since 1982. They've done 17,000 articles. A subscription to Stocks and Commodities gives you an access to all of their archives, all of their digital archives, I guess. That's the best word. If you a subscription for a year is $89. www.traders.com. Thank you for Greg for helping me out and for putting all these links in here. The Traders Forum is a new partner, a new project that I've been personally heavily involved in. But if you want to come join us, you can learn about the markets. You can trade live with other traders. It's a community of traders helping other traders. And we've got a lot of stuff up there. And a lot of it is absolutely free. TheTradersForum.com. I look forward to seeing you up there. And then last but not least, I want to say thank you to the CMTAssociation.org. CMT Association is another well-respected nonprofit organization. And if you have assets under management, or you want to have assets under management, or you just want some cool initials like Jeff gave you CMT, I'm not a CMT, you can go to CMTAssociation.org. So there you go. If you have questions as we go today, make sure you type them in the chat. Either in YouTube, we're monitoring those, or in GoToWebinar, we're monitoring those, and we'll be happy to answer. We're, of course, Metastock. We're going to be talking about Metastock all day. All of the offers that we talk about for the software, and even a special buy one, get two free are available at metastock.com/conf promo. Bill says, good morning, really appreciate you guys doing this. It's been a fantastic week. Thank you, Bill. It's good to have you. I really appreciate your being here too. Good morning, Satish. It's good to see you. Let's go ahead and we'll start. Dan Passarelli is our first guest today, and he's going to talk about a methodology that he uses that's basically a momentum resumption is the way I like to kind of phrase it. He does a really, really good job. He's been a really good friend of Metastock for a number of years. And I'm just going to let him start talking. So Dan, let's go ahead and get you started. How you doing today?
I am doing just swell, Jeff. How are you doing today?
Awesome. I'm doing great.
Excellent.
It feels like we've run a very, very successful event, and we're almost done with it. But it's been really good, and I'm ready for a day off actually, if I'm honest. But anyway. Yeah, I can see you. Yeah, I can see your screen. I can hear you. I'm going to let you go. It's your turn.
All right. Hi, friends. How are you today? You feeling good? I'm Dan Passarelli, and I'm really glad to be with you right here in this presentation, right now at this very moment, and really honored to have this opportunity to speak about this key way that I've simplified my trading. It's the easiest, most straightforward system Market Taker has ever created, and I'm really excited to share it with you today. You should read Characteristics and Risks of Standardized Options before trading. Get a copy of that by emailing investorservices@theocc.com. So momentum trades are a totally classic trade. Thousands of traders have collectively made billions of dollars trading momentum trades over the years. And the beauty of it is the concept behind it's easy. All you have to do is identify the setup, see when the trade triggers, get a confirmation, get in and set a target. By at the end of this presentation, you will be able to easily identify the specific momentum system. I was listening to a podcast not too long ago, and they were talking about the difference between mindset and skill set. And both are important. Henry Ford once said, whether you think you can or you think you can't, you're right. Something to that, isn't there? So I thought, how can I make one of those things, mindset or skill set, really simple? How can I do a lot of the work for you so that you don't have to focus on both of these things at the same time. So I put my time into the only one of those that I can do pretty much entirely for you, the skill set. I put this into a system that if you follow along, you don't really need much skill at all. The skill part's built in. So now all you have to do to move forward in reaching your trading goals is to think you can. This is my promise to you. I'm going to share with you how to easily spot high profit momentum trade opportunities using stocks, ETFs, futures, or Forex. So your trading is completely simplified using this tested, evolved trading system that we've created for our traders, that hundreds of our students have used to go from that demoralized feeling we've all felt at some time to that feeling of satisfaction and self-assurance that we all know is possible. At the end of this presentation, I'll share how you can take the next step so that you can start getting immediate results. Is that a fair, what do you think? Is that a fair deal? Do me a favor, hit that questions box and give me a yes if that sounds pretty darn good to you. Hit that questions box. Give me a big old yes. We'll see who's bright-eyed and bushy-tailed here this morning as well, this way. Jane says yes. Tommy says yes. Alan says yes. Edward says yes. Excellent. Some of you guys are awake. All right. Now, also, in order for you to get the most out of this, I ask that throughout this training and afterwards, make this about you. Consider turning off your cell phone, close Facebook, all your open tabs, and let yourself get immersed in what I'm about to share. Let it in. Let it become part of you. And I'm going to hold all questions to the end. Now, this gives you an idea of who I am, what I do, some of the organizations I've worked with. I wrote 2 of the most popular books on option trading. I've worked with every major options broker in the US and abroad, as well as pretty much all the options exchanges in the world as well, and get to be on TV a lot. I got my start down on the trading floor of the Chicago Board Options Exchange. I traded there for years. These pictures literally span 30 years of being involved with the trading floor. I traded some huge stocks like the Ford Motor Company, AT&T, Carnival Cruise Lines. I traded some little ones that no one's ever heard of. And the secret here is the little stocks that no one's ever heard of is where you can make the big money, where you know about opportunities no one else does. All right, now I want to jump into this discovery I've made. Does anyone know what this formula is? No? Good, because we're not going to talk about it again. We don't need to, and here's why. So I have an extensive background in trading, but the fact is I am no mathematical genius. Would it be okay if I share a short story with you about when I was in high school? Would that be all right? Give me a yes on that. I'm going to make some assumptions here and move forward. Assume you're going to be okay with it. Now, when I was a kid, I was a bit of a troublemaker sometimes. Seriously, I got good grades. I didn't really have to study usually, but this is a story about a time when I should have. In my senior year of high school, in my advanced math class, instead of paying attention to the lecture, I and a few other kids in the class, we would instead play poker in class. That's all we did, all hour long, the whole class. And you know what? I made a lot of money in that class. But the problem is, with math, the lessons build. If you miss something this week, you're lost next week, and you're hopeless the week after that. So needless to say, I didn't learn a lot of advanced algebra concepts that year. I crammed, I passed, but I didn't learn much. Now fast forward to freshman year of college, and I tested in such a way where I had to take an algebra refresher course, which was really embarrassing. I always prided myself in being smart, and algebra is not really that tough, right? But I had to take the refresher course. Now, one thing you might not know about me is that I was the first Passarelli to graduate college. And I almost wasn't. Here's where the story gets a little interesting. Now, I'm a competitive kind of guy, mind you. So sophomore year of college, my cousin, Michael Passarelli, who was 1 year younger than me, was in my calculus class. Calculus. I was very intimidated by calculus. I was afraid that I would struggle. But more importantly, I knew that if I failed the class and had to retake it, my cousin Michael would be a credit ahead of me. And maybe, just maybe, he would end up graduating before me. And there was absolutely no frickin' chance I was going to let this happen. So I put on my A game. I was ready to work as hard as I could to win. And I'm guessing there are some of you here who can relate to that, right? So there was one other factor that came into play that was a saving grace. I had a good teacher, one that I could relate to. He made it easy for me to learn, and I did. And I ended up acing calculus and had the honor of being the first in my extended family to graduate college. Thank you very much. Now, like I said, I'm no mathematical genius by nature. I've spent a lot of time in option trading, 30 years, and I do whatever it takes to create great systems for myself and for you. So I studied the math of things like relative strength index to see how they tick. And I realized there's some hidden keys within these equations that can help predict when momentum is likely to continue. So now I'm going to share that hack with you. We start out with the red knockout, which is a momentum trading strategy that can lead to outsized profits. The simple 4-part chart pattern, easy to identify. The profit targets are very, very easily set, and it works with options, stocks, ETFs, indexes, futures, and even foreign exchange. So let me start by listing the steps in the red knockout system, and then we'll zoom in and go through some examples. So we're getting into the important stuff here. This is important. Write this down. So step 1 is the setup candles, which is 3 or more green candles that make up the green run. Step 2 is the red knockout or RKO candle. That is a red candle with a smaller body than each of the 3 preceding green candles. Then we have the trigger candle, which is a green candle that takes out the high of the red candle's high on higher volume. And then we have the confirmation candle, which opens above the high of the RKO, and that signals trade entry. So let's break the strategy down and go through how it works. So first we have what? The setup candles, right? So those are 3 green up day candles. There's a difference between green and up day. An up day is today's close is higher than yesterday's close. Green means it's trading at a higher price than where it opened. So we need both of those. Then we have the red knockout or the RKO. And it's, you know, like we like to see like almost dojis here. We like to see a smaller body than each of these other 3 candles. And if we get that, that's an RKO. Now this can open higher or low and it doesn't matter. Now here is the trigger candle, and that just has to trade above the high of the RKO if this pattern is continuing. And then finally, we end up with the confirmation candle, and as long as that opens above the high of the RKO, then game on. 1, 2, 3, go. All right, so this is Bloom Energy Corp. If we have a red knockout setup, what is the first step we look for? Well, setup candles, right? Setup candles are 3 or more green update candles in a row. Do you see that on the chart anywhere? Look right. Here's the first one, and here is the second one. Now, what is step 2? You remember? Bingo, RKO candle, right? If a red knockout candle shows up on the chart, it's easy to identify, and it means the setup might be materializing. Again, it's got a smaller body than each of these other 3 ones, right? And it's down from the open, thus it's red, which is really important to this, by the way. Step 3, right there, is the trigger candle. trades above the high of the red, and step 4 is the confirmation candle, opens above the high of the red. All right, now let's slow this down a bit and go over the roles of each of the 4 components of the setup, why this is important. So first, there are these setup candles, right? This is what sets up a mini trend. A green candle means that the closing price is higher than where it opened. So basically, like, we have like a bit of some momentum going. Now, 3 green update candles in a row is not that uncommon, and it's not necessarily that big of a deal, but here's the thing, and here's where like RSI comes into play. The problem with a lot of momentum strategies is they can burn themselves out if they get too hot. So we always want to see like a mini pullback. That's why the RKO is so important. It gives people who missed getting in those first 3 days a chance to get in, which then fuels more momentum. And so if we get that momentum continuing, now there might be something to that. And then when we have confirmation that it's continuing, now it's 1, 2, 3, go. So now let's run through several examples to see how this might play out in real life. So this is Thomson Reuters. First of all, is there an RKO setup on this chart anywhere? Do you see one? Bingo. Right there is the first one. Right there is the second one. Nice work. And do we have an RKO candle? You know, we're not always going to see them, only if it's continuing. And we do right there. And then we have this one trading above the high of that one. And then, boom. Finally, right there. And what we're trying to do is we're trying to capture like continued momentum. And I'm going to explain a little bit more on how that works in just a minute. But we need to always set a profit target. So if we follow our profit target rules, which I'm going to go over in a second, we would take it off right at this level. I mean, we'd hit that level earlier. We'd probably hit it maybe on this day right here. So we'd be able to ride this out pretty good. Okay, now how about here in Humana? Is there an RKO setup anywhere? Look closely, bingo, there's the first one, and there's, holy cow, this is, remember I said it's at least 3 green update candles. We got 1, 2, 3, 4, 5, 6, holy moly. Next comes a really beautiful RKO. This is a total doji right here, right? It's down a little bit just to stall in the, because like RSI is upward strength versus downward strength. So like, you know, we're kind of pausing that upward strength so it doesn't burn out, right? And then does the trend continue? Well, that's what the trigger candle is all about. And then we're confirmed. So the red candle, what's important about it, it's like this fulcrum here, right? It just kind of gets knocked out of the pattern, which is exactly what we see here. And basically what we're trying to do is we're expecting this first part of the pattern to repeat itself after the red knockout. All right. Now let's check it out on the dark sleek screen, shall we? Pretty cool, huh? So this is APEI stock. You ever trade some of these stocks I'm talking about? Probably not, right? And that's really one of the big strengths about this whole thing, is being able to see opportunities that you would never see otherwise. When they come up in like these smaller stocks that people haven't heard of, Like these are opportunities that everyone would miss without this, which is kind of the best thing about this, right? So we've got this candle, we've got this candle, we've got the RKO candle, we've got the trigger candle, and then bingo, we've got the confirmation and we see it continue to play out. It's like as soon as we get the confirmation candle, it's 1, 2, 3, go. And here's one thing that's really important. We like to get in on the open on that trigger candle. All right. We like to get in on the open because it's my observation that usually when we get to this confirmation candle, it tends to go higher throughout the day. And here, I mean, it just went a little bit higher. A lot of times, you know, we really see the momentum picking up. Here, it took a couple of days to really start picking up, and then it hit our target, our profit target. Oh, another thing. Now, we don't have it on this chart. Let's see. Oh, we don't have it on that chart either. I'm going to give you a little tip. So those of you who are actually taking notes, writing things down, like I suggested, write this down. One thing that will make this even stronger is this. Is if any part of this pattern crosses up above one of the 3 key moving averages, which is a 21-day, 50-day, or 200-day, that makes this an even stronger pattern. And here, you know, you can see with the RSI on this one, by the way, it's building, 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 and instead of continuing up above the, you know, the 70 line, which starts to get into overbought territory, which is overbought territory, this candle softens it up a little bit so that the momentum can continue and it doesn't really burn itself out until we're out of the trade. The RKO indicator works in all time frames. It's versatile for day traders, swing traders, short-term traders, even long-term investors. Now, when I started working on improving what criteria to use for the setup candles, red knockout, trigger, confirmation candles, I spent a lot of time on this. And it was a pretty great and humbling experience. It reminded me of my old boss, Steve Fawcett. You see 2 people here. One, of course, is Sir Richard Branson, and the other is Steve Fawcett. Now, for those of you who don't know Steve Fawcett, the late Steve Fawcett, I should say, he was not only a famous trader, but also a famous adventurer. He held many world records. He attempted to set one flying around the world in a hot air balloon with Sir Richard Branson. So I remember one day Steve took all of his traders out to dinner. There were about 45 of us. Pretty big bill, I guess, huh? And after dinner, he asked us, why do you trade? Because, you know, the answer is never the money or whatever, right? Money's just a tool. The real reason, why do you trade? Because like as floor traders, standing all day long, your feet hurt, your back hurt, there are people yelling in your ear, they get their spit on you when they yell. Why do you trade? Why do you put yourself through that? What's your real reason? Is it to have more freedom to take time off and do the things you like to do, sailing, golf, whatever? Or is it to secure your retirement or to put your kids through college? And that really stuck with me. And I think it's important to focus on that. So I ask you, hit that questions box for me, all right? Like I'm curious, please share. What is your reason for trading? What is your deep-seated reason for trading? Why do you do it? Because trading, you know, it can be hard, right? It can be hard. It can be emotionally draining. What is your deep-seated reason for trading? Let's see. Tommy says college bills. All right. I don't know if those are your college loans or your kids, but I get it. Especially today. Oh my goodness. I had a kid in Northwestern and a kid in Boulder. I can't even tell you. I can't even tell you. Jane says retire early. I like that. Edward says financial freedom. Good. And I'm glad you're sharing this morning. This is really, really great. Adam says for retirement. Nice. Okay. So Steve was a great mentor. Without having him in my life coaching me, I could not have become the trader that I am today. But there's one thing that Steve would always say. He was known for this. He said, I am still learning. When I met Steve, he was a gazillionaire, super successful trader, but he was always tweaking his process, always learning, always moving forward, always making his trading better for himself and his traders. And I'm really thankful for that because I was one of his traders, but he kept improving. So I started the process of improving this too. And let me tell you how I improved the exit point. Here's how that works. Setting price targets is really, really easy. Here's how it's calculated. We take the low of the first green setup candle, and we subtract that from the high of the last green setup candle. And again, we're looking for that run to repeat itself after the red knockout candle. Okay. So we're going to take that sum, the first one subtracted from the highest one, and we're going to, because we expect it to repeat itself, as traders, like, yeah, we want to be greedy and make as much as possible, but we also want to be conservative enough to lock in as many wins as possible. So we're going to multiply that amount by what is called a haircut, which is just a percentage, like 70%, 90%. Really aggressive traders might do 110%. And then we're going to add that haircutted amount to the high of the RKO, and that sets our profit target. So immediately after buying the stock or call, because we can do either, we're going to put in a profit-taking order that we just calculate, and you don't actually have to do the calculations on like a calculator. We can just print it right there on your Metastock screen. I'll tell you more about that in a minute. So we're going to put in our profit-taking order as soon as we get into the call or stock. And then we're going to set a possible stop loss. And we're going to put both of those in GTC, which is good till cancel. And we're going to put them in OCO. One cancels the other. So if we get filled in our profit-taking order, we're going to cancel that stop loss. If we get filled in our stop loss, we'll cancel the profit-taking order. Otherwise, theoretically, we could accidentally get filled on both and end up short, which we don't want to do. So this is a system. We're going to work the system because the system works. And if you're not familiar with some of these terms or exactly how to do some of these things, later I'll share how you can learn how to easily do all of this to make your exits super simple. Now, I want you to leave here today with all the tools you need to be massively successful with this. And, you know, I bet you do too, right? Would you like me to share with you what we've discovered makes RKO trades even better? Yes. Would you like me to share that? All right. Let's do it then. So the first thing, and I've already kind of shared some of this with you, is we want to see the pattern from the green, you know, from beginning to the end, go through one of the major moving averages, 21-day, 50-day, 200-day moving averages. We want to see that the RKO is not above the 70 line. We prefer seeing, well, we have to see at least 3 green setup candles, and more is better. So when we get some of these setups, you know, it's pretty simple and straightforward, right? And it's, I think by now, after just watching the last 30 minutes of this, I think you could probably spot these on a chart pretty easily. It'd probably take you about 45 seconds or so to spot these on a chart. Because all there is there's the setup candles. Went through several examples. Red knockout candle, trigger candle, confirmation candle, and then the profit target, super easy to calculate. But here's the situation. There's a problem. So there are 6,366 stocks that are listed and available to trade. If it takes you like 45 seconds to spot an RKO setup on a chart, and you just, pull up every stock out there in alphabetical order, and it takes you 45 seconds to spot one of these, it would take you about 80 hours a day to go through all the opportunities out there. And by the way, that's only looking at one time frame. This works on, hourly charts, daily candles, weekly. You don't like missing opportunities, do you? There's got to be a better way, right? I bet you know that. You wouldn't be here right now if there wasn't a better way. Are you ready for it? So the RKO system is officially here. We've spent the past 3 years, we've created both the scanner that would easily identify the RKO trades, as well as an indicator that displays the pattern right on the chart, along with price target. We wanted to make it so simple, it's impossible to mess up. So you now have a new opportunity to easily scan for top momentum trades you wouldn't be able to find without this screener. With over 6,000 stocks out there, it's almost impossible to just happen to come across one of these great setups. But with this easy to use 3-step scanner, it makes it possible because I've made the investment for you. You see, I know what it's like to struggle as a trader in the market. I've had the pleasure of training thousands of traders, and I wanted to develop a scanner that made it very easy to find profitable trades with great potential. And even for myself, before creating the RKO system, I'd come across one of these setups maybe once every 6 months. I would miss most of the opportunities, almost all the opportunities I'd miss. There's 6,000 stocks. But finally, I've invested both time and money to develop this simple, easy to use scanner that you can harness in just 3 simple steps. Imagine what your trading account would look like if you could sit in front of your charting software and have a powerful trading tool that identified both the trade entry and exit points in just seconds. Imagine if you could block out all the noise in the market and only focus on trades that have been identified for you. What would that mean to your trading business? Well, that's exactly what the RKO scanner does for you. And here's a list of trades that, over this 1 month period or whatever, just to give you some examples on how this works, both for stocks and for options. So this one here in Lemonade, we set up. The trader could have bought the stock at $15.43 and sold it 12 days later at $21.09 for a 36.7% profit. VFF could have bought the stock at $1.04, sold it 8 days later at $1.54. Now, okay, big deal, that's 50 cents or whatever. But you know what? Yeah, it's 50 cents, but it's $1 stock. You buy 5,000 of those shares and make 50% on it, you're doing pretty good. CNK could have bought the stock at $14.55, sold it 7 days later at $16.56 for a 13.8% profit. Now, for me, I'm an options guy. But when stocks are at these low prices, when they're like below $20 a share, I prefer just to go and buy the stock. But higher priced stocks or indexes or ETFs, I can get more leverage by buying the calls. So in XLE, a trader could have bought the 91 calls at $1.82, sold them 12 days later for $3.45 for an 89.6% profit. In Intel, a trader could have bought the 39 calls at $1.43 and sold them 8 days later at $3.15 for 120.3% profit. Crocs could have bought the April 130 calls at 5, sold them just 6 days later at 680 for a 26% profit. Look, even if you make like 3 of these trades a week and your results are half as good, how much impact can this have on you and your family's financial future? Really? I want you to start getting the results that you deserve. This is Nick. Now, our head coach, John, who's a brilliant guy, ex-Goldman guy, John and I shared with Nick what we were thinking. Nick was the first human ever to see the RKO, and in fact was extremely instrumental in helping us. Nick said, using scanners, in particular the RKO daily, helps me find trades when I'm busy or might not be fully locked in the market. I run the scanner, do the checks, and decide to take the trade or move on. It only takes a few minutes and helps me find the best trades consistently. So I want to invite you to join us and start using the RKO system right away. So first, you're going to get the red knockout scanner. So every day you'll be able to have a list of the RKO trades that are available in the market. This simple scanner scans the universe of over 6,000 stocks for the setup and makes it possible to find the best setups and to find ones that you would never have access to without it. That is full value, $2,500. Now, I want to make sure this works for everyone. For you to profit with the RKO system, I need you to know how it works. So I created a training course that shows you step by step exactly how to install it on the platform, how and why the RKO system works, how to set up the trades, the filters and cross scans to optimize the strategy, and of course, targets and trade management. So what that means is today, first you're going to get the red knockout system. And then you're also going to get accelerator videos, really short little videos to watch, shows you exactly how to do it. It's going to get you up and running fast. Now I can put the tools in your hands. I can tell you how to use them, but I know for me, I learn faster when someone shows me exactly how to do it. So the best thing I can do for you is give you hands-on training. Every Friday for the next year, for 1 full year, you're going to attend our online live group coaching class and watch our head coach, John Kamisic, the ex-Goldman guy, set up RKO and other trades right there while you watch. So John not only worked with Goldman Sachs, but First Options of Chicago, Lynn Waldock traded for a hedge fund. He is the expert on the red knockout. In fact, he helped me develop it. He's just the kind of person that you want to listen to. But I wanted to make sure that you hit the ground running and get the hands-on training to start getting those immediate results. This is what Dennis Meixel from East Peoria, Illinois said about John's class. Thanks, great class. Exactly what I was looking for. The class gave me a lot of insight into options and the Greeks. I'm a fairly new trader, but I've been putting in the work to move my skills forward. How would it feel to have top picks of the day picked out by John Kamisic every single day? Pretty good. So what that means is today, first, you're going to get the red knockout system. You're going to get the accelerator videos, and you're going to get the hands-on training every Friday in group coaching. Do you mind if I over-deliver? What I really want you to do is to be as successful as possible trading the RKO, and I imagine you do too. So every day, we're going to rank the day's RKO trades and list them out and give you our top RKO picks so you can see what we think are the best of the best. This is the RKO watch list, and it's a $1,297 value. Plus, John will also add a bonus trade from his daily group coaching class so you can diversify your trading and get all the top trades of the day by simply clicking one link to access your curated watch list. So that means you're going to get the red knockout trading system, your scanner. You're going to get the accelerator videos. You're going to get the group coaching. And we're just going to show you every day which ones we think are the best of the best. Now, finally, in addition to the red knockout scanner part of the system, this completes everything you need to make the RKO simple to trade. With the RKO indicator, we put the arrows right on your chart to show you the trigger candle, the confirmation candle, even the price target. It calculates the price target right there for you, and you can set your own haircut to your own risk tolerance. This literally could not be easier. So first, you're going to get the red knockout system, the scanner, the accelerator videos, the hands-on training and group coaching. We're just going to tell you which ones we think are the best. And then we're going to put the indicator right there on your chart. Speaking of charts, this works, RKO works on the following platforms. Metastock, of course. It'll also work on your Thinkorswim, NinjaTrader, TradeStation, and even on TradingView. Now, you may have noticed these red knockout trades are all for when the stock is rising. And for that reason, they tend to work better in bullish markets. But the market doesn't always go up, does it? And not all stocks always go up. In fact, some can have some pretty bearish moves. So I've created the green knockout to double your chances of success. So today you'll get both the red knockout and the green knockout. So you will have the tools to trade any market up or down. So that means you're going to get the red knockout scanner. You're going to get the accelerator videos. You're going to get the group coaching. You're going to get the watch list. And you're going to have the indicator right there on your chart. And you're going to get all of this for the green knockout as well. Plus, you're going to get updates every time we optimize the strategy to make it better for 1 full year. Buy now. You can see why the RKO trading system is a steal even at $10,041. If all this did for you was identify trades that had a profit of 182.1% or 83.7%, even 25.1%, the question you need to ask yourself is, would it be worth it? Yes. But you're not going to pay $10,041 today. Because you've made the investment of being here live on this training and for being one of my action takers, you're the elite. You could have done a million other things today. So I want you to have the results that you deserve just for showing up. Get started today for a one-time, small, easy investment of only $997 by going to markettaker.com/meta. 1, 2, 3, go. That's market. Oh, actually, I make this even easier. Since you're here on Metastock, go to metastock.com/RGKO, red, green, knockout. Go to metastock.com/RGKO right now and join today for just $997. And that is for just the first 25 members who join right now. Now, just to recap one more time, when you open your browser and go to markettaker.com, or excuse me, to metastock.com/RGKO, here's what you get. First, you're going to get the red knockout scanner that's going to identify trades with the entry and exit points. On top of that, when you're one of the first 25, you're going to get all the bonuses too. You're going to get instant access to the RKO Accelerator course to get you up and running right away. You're also going to get access to the weekly group coaching where we will go live in the market together so you can see exactly how me and my team use the scanner to generate profits in the market. You will also get access to the RKO watch list with our top picks of the best trades that John and I are looking to trade with the scanner. This way you'll have the best opportunity to generate profits from the scanner by following the exact trades that I'm looking to place. Further, when you open up your browser and type in metastock.com/RGKO, you will also get access to the RKO indicator itself. This way, while we're coaching you live in the market each week, giving you access to our top watch list, you will have access to this powerful indicator right there on your charts 24/7 across multiple markets to take full advantage of this great and easy to trade indicator. Also, as we run more tests and do more tweaks, as the RKO continues to evolve and we get it performing even better, you will get automatic updates for a full year to both the scanner and the RKO indicator. Now, lastly, when you join us right now, you will get the green knockout. You'll have the confidence of knowing that you can trade in any market, up or down. But you have to take action today and be one of the first 25 members to join us right now. All right, now I am going to take questions about the RKO or GKO scanners, about this entire platform. Please hit the questions box and type in your questions. While we're doing that, I'm going to answer some frequently asked questions. Well, what if I can't install it properly? We send step-by-step instructions of exactly how to install it, how to use it. There's a video, you just watch it. It's super, super easy. Is it time consuming? No, that's the whole point. I know you have a busy schedule. I've designed RKO so you can literally trade this system in about 60 seconds per trade. What if I can't figure it out? Well, you get a video tutorial plus hands-on training live every Friday morning. We make it so that it's you can't screw it up. What time is that weekly group coaching? The weekly group coaching is live every Friday from 9 to 10 Central, which is 10 to 11 Eastern, 7 to 9 Pacific. And if that time is not convenient, the class is recorded so that you can watch it at any time that is convenient for you. Now, one other question that we get a lot is, Dan, hey, look, I have a small account. I can see that RKO can be a great way to grow that into a bigger account, which is exactly what I want to do. But Dan, I have a hard time coming up with the $9.97 right now. Is there a way to finance it? And that answer is yes. You can use PayPal and PayPal credit. We have a deal with PayPal to offer you both PayPal as a payment option and PayPal credit, so you can lock in the red knockout today when you check out using PayPal and just choose PayPal credit. Just go to metastock.com/RGKO and click the PayPal button to get started right now. Now, how do we sign up? How do we join? Go to metastock.com/RGKO, or we've actually got people standing by at 800-882-3040. That's 800-882-3040, or you can just get on sales chat. Just go to metastock.com/sales chat, and we're going to get you signed up. We're going to get you going and put these tools right into your hands. What other questions can I answer to help you make the decision to move forward today and to start using the RKO in your trading?
I have a few out of YouTube, if that's okay.
That's okay. Sounds great.
Jay wants to know on the TRI side, the RKO day is a close below the open and not a down close. Is that okay?
Well, let me find that one. I love when people pay close attention.
Yeah, right.
Say his question again.
Okay, yeah. The RKO day, the red knockout day, is a close below the open and not a down close. Is that okay?
Yeah, the RKO, yes. Okay.
I think I understand.
Yeah.
So I'll let you answer though.
Tarzan.
I think he's confused. A down day would be a close compared to the previous close, but we're talking about a red candle day, in which case we're just looking for a close below the open. I think that's the clearest answer.
Yeah. And to expand on that, it's kind of interesting with the RKO day, because it's got to be down from the open, which is what makes it red. But it can, this is interesting. He's paying very close attention. I love that. It is pretty interesting, isn't it, that this actually opened higher, and then, it had this long wick to the downside, but still closed red. So the RKO candle can actually open higher than yesterday or lower than yesterday. It doesn't really matter where the placement is. It's just that it's down for the day, so that it cools the momentum just enough. That's why it's got to be a small body. Cools the momentum just enough to keep the RSI low, so that the momentum is able to potentially continue. Yeah, great question.
All right, let's see. A couple of questions about the stops for RKO, and they're both from Georges, but they're different Georges. So that's pretty interesting. George wants to know, what is the stop for the RKO system?
The stop?
Yeah, what stop are you using?
Wait, is that word end with a P or CK?
STOP, stop. Where is the trailing? Where is the stop loss?
Yeah. So that's all in the accelerator video course, and it's going to vary on a couple of different factors. But one thing that I want to point out is that, so very low priced stocks, I just trade the stock and I use the stop order. With options that have very tight bid-ask spreads, a lot of times I will just buy the call and I'll use a stop on that as well. But if I use a bull call spread, which I will sometimes, and that's all in the accelerator video course too, when it's better to do those, we never use stops with those. We never use stops when it comes to option spreads, because there's two bid-ask spreads and you end up, getting the worst price on that. And so, we don't use stops when we trade the debit spread version.
Ricky had a question. He said, obviously, Metastock's going to be the best platform to use this on. But what other platforms do you use? He may not have phrased his question exactly like that, but.
Yeah. Yeah. So, this is available on pretty much any platform that you have, but we do script it so that you can use it on Think or Swim, which is, that's the most used option platform out there. I don't know if you use that one or not, but Think or Swim. And where's that slide that shows what other platforms you use this on? I don't know. Think or Swim, Ninja Trader, Trading View. Oh, here it is. Trade Station. Yeah, it's you can use it on all of those. Yep.
Okay, cool. Let's see. I think that's the end of the questions that I see. Except for, how do I do this?
Yes. So look, here's how you do this. You go to metastock.com/RGKO or call 800-882-3040. Or if you just like to chat online, metastock.com/sales chat. And here's what's going to happen. You're going to get signed up. You're going to get an email that has a link in it to go to our student portal. You're going to have a username and password, and then you just simply click the RKO icon on there. And you're going to first start with the accelerator videos. You're going to go through those because that shows you how to install it on the platform, and it shows you exactly how to use it, how to set the the price targets and such, how to change the haircut. You're going to install it on your chart so it's there, and then you're going to first, when you open up your trading platform for the day, you're going to look and you're going to see, you're going to run the scanner. You're going to run a scanner for the RKOs. You're going to run a scanner for the GKOs. And you're going to see the ones that pop up. Now, in the accelerator videos, it shows you exactly step by step how to screen them so that you can cherry pick the best of the best of them. Sometimes, I mean, here's another frequently asked question. People will ask me, well, Dan, how many of these RKO or GKO trades do we see in a day? And so you'll see anywhere, I mean, it's interesting on like pretty good up days, you know, you could see anywhere from 3 to 10 RKOs, but not really any GKOs. Or actually, usually you'll still see 1 or 2 GKOs. And on down days, you'll see, you know, 2 to 8 or whatever RK or GKOs and maybe a couple RKOs. So you really get to kind of diversify your trading, and for option traders, especially, you know that you can make money whether the market's going up or down. So you never miss an opportunity. Not only do you never miss an opportunity, but this opens the door to so many opportunities that like it would just be impossible to find on your own. Like that's why I created this. I didn't create it just for fun. I created it because I realized that this is such a great pattern, and I can't find them without scanning for them. And so like this just opens up a whole new world of trade possibilities for you. And I mean, I created it so that it opened up a whole new world of trade possibilities for me. But now I'm sharing it with you as well.
Okay, very good, Dan. Thank you.
All right. Well,
All right, let me go ahead and I'm going to kind of talk a little bit more about the scanning because I think that's one of the things we do really good here at Metastock. I'm going to show a little bit of the implementation, but we are almost out of time. Thank you for spending an hour with us. I appreciate you.
Yeah, thank you. Thanks for having me.
All right, prepare for ejection.
All right.
All right, thanks, Dan. Okay, let me do this. Okay, and let me go ahead and share my screen. Okay, I just want to show real quick, like I said, we're kind of running almost up to time, which is fine. But I do kind of want to show how this is implemented in Metastock. I have just a couple of slides for that. Every time you start to get one of these setups, which would be like 3 down days in a row, you're going to start to see this diamond. So as long as that happens, when you get kind of the green candle, you're going to have kind of a different diamond. And then when it finally triggers, you're going to get the trigger. Once the trigger happens, you're going to have your kind of your exactly where your stop losses or your target's going to be. And that's all going to be outlined here in the commentary. So here you can see there's a short green candle knockout. Your profit target should be at 87.44. And it kind of breaks everything down, helps you make sure that you're doing it right. Everything that you need to kind of run that is included, including the indicators. You can actually go in and adjust and tweak some of the settings if you want to. It's got an expert advisor, a commentary, and of course scanning. Because with this pattern, it's incredibly important that you be able to scan a lot of information, a lot of stocks to be able to find them. I won't run the scan right now, but you can scan for the entries, the triggers, the red or green, everything that you need to kind of go in and get there. As part of the package, Dan kind of already talked about this. He's going to include that video course, 12 months of coaching, the RKO watch list, all of that is included in the price. And normally, the price of this would be $14.95, but as part of the conference, you can get that for $9.97. If you're not using Metastock, you want to try it, you want to find out why Metastock's been rated the #1 software in its price category for 31 years in a row, we'll throw in a free trial of Metastock as part of this package. We'll give you a money-back guarantee on it for 30 days. And if it's something that isn't helpful for you, you can return it, get a refund. No real obligation there. Give us a call, 800-882-3040, metastock.com/conf promo, or metastock.com/sales chat. So again, we are Metastock. You can get all of the discounts today at metastock.com/conf promo or metastock.com/saleschat. If you have questions, if you want more information, give us a call, 800-882-3040. So, Helen, you have some really, really good questions, but I'm going to send you an email so you can send those over to Dan and get them answered. So, real quick, before we move on to our next speaker, I want to say thank you for the American Association of Individual Investors. You can find those at AAII.com. You've heard of the AAII Investor Sentiment Surveys. It's the same organization. They do a lot of research, analytics, newsletters, et cetera, et cetera, et cetera. They also have an active investor division where they actually work on real-time strategies, or let's not say real-time, short-term technical indicator-based strategies. You can find more about the AAII at aai.com. So our next guest is a good friend of mine, Rahul Mohindar. Rahul actually created the RMO system that's in Metastock. We did some major revisions to it for 19, some very visual updates that Rahul did an awesome, really, really good job with. Rahul is a big, huge friend of Metastock. He's been using and a dealer of Metastock for as long as I've worked here, and maybe even longer. I'm on 26 years right now, but over the years, Rahul created the system that I've invested my first dollar with, the RMO system, and today he's going to talk to us about some of the other stuff that he does. Rahul is a panelist, sometimes on CNBC and CNN India. He's trained thousands of customers in India over the years and is a force to be reckoned with. So let's go ahead and get you started, Rahul. How are you doing today?
Thanks, Jeff. Doing great. It's always good to be back. And what a great lineup of speakers. And you know what I love is once you know how to make the money, you got the tax man coming next. So you have all those strategies on tax in the next webinar. So great lineup. I mean, appreciate all that you do. And I must say that one of the things we all have to pay attention to is the fact that sometimes you have companies that just sell you software, and here you have a company that's committed to its customers who want to go out there and educate in person, whether it's online, whether it's in person. I love being part of the events all across Asia, America. It's been a great experience. Thank you again for having me.
For sure. We had a request earlier this week that we come back to India. So that's maybe something we should put on the list.
Ever ready? Yeah.
All right, cool. Did you get the share your screen request?
Yes, I did. Let me just go ahead and...
I'll make sure everything's running, and then I'm going to set you loose.
Okay. I seem to be having a bit of an issue. I'm on the travel beat, so please allow me a minute, and I should be ready.
Oh, good. I can resend it too if we need to.
Yep. Okay, it's popped right back.
All right. I can see your desktop and your PowerPoint's loaded, and wow, that's a really good looking art software you're looking at. Okay, everything seems to be good here. I'm Rahul. Rahul, yep. I'm here if you need me. I'll get out of the way for now.
Perfect. Thanks again.
Of course.
All right, friends. Today is all about talking about the ATM 4.0, and you know I've got little time, but a lot to express. And I speak to you more from a practical perspective on how you could use the program a lot better in terms of, you know, not just setting up your screen in a way, the trading style. Someone here trades intraday, someone could be an investor, someone's on the end of day platform or the DC, and someone could be on something as small as a 5-minute chart. So the idea is to get across a few rules, a few solid rules, which should take out the complexity of analysis and bring in a good deal of automation. So what I'd like to start with is, if I just pull up a standard chart, now I could, you know, always move to just using the PowerPoint, but I'm going to keep flicking between the two so that we could, you know, use a lot of Metastock because that's what you're finally going to be using. But let's actually shoot with the basic RMO, and I know you probably have, a lot of you are already using the basic RMO, so it's a good idea we do a quick 5-minute run through. So the RMO is all about detecting primary trend. And the primary trend or the longer term trend is detected by the oscillator, or the RMO stands for the Rahul Mohindar oscillator, which if above zero is bullish and if below zero is bearish. So when you look at the RMO, it looks a bit like this, like a green histogram. In this case, the histogram has primarily been above zero, and therefore this is a bullish setup. So the RMO is inbuilt into Metastock, and you would be able to access it for free. But the ATM, or the automated trend modules, is an add-on that you need to sign up for if you want to use the ATM set of tools. Today is about what's new with the RMO ATM 4, and I'm going to try and give you an idea of that, but I'm still running you through some basic. The idea of showing you this chart is, friends, this is a pretty old chart, and it's more just for educational purposes. You can see that there are phases of this market where a stock like Apple moved up from $25, $30 all the way to 150, in 2020, 21. In that phase, you can see the RSI, or the relative strength index, on the top. Each time the market made a new high, you had what we call the classical RSI divergence, where you're in overbought region, above that 70 line, falling tops on the RSI, but rising highs on the price chart. And that kind of deters you sometimes. You keep extending that divergence. So right till the end of 21, 22, you can see the market's making newer highs, but you can keep extending that RSI line. And that sets in a pile of fear. It often doesn't let you hold through a position. It often doesn't let you take new positions. And that's very challenging. Well, even if I rotate back all the way to 2017, 2018, you can see right through the year you had negative divergence, but the prices just kept crawling up. And I found practically when I would look at charts is that, are the classical tools of any utility to me, or is it that they're a deterrent to me? And in my personal way of looking at things, I felt that I was looking at a lot of tools. Sometimes I'm looking at the MACD, the RSI, the stochastics, the typical setup a lot of people look at. But what it tends to do is it flips around signals very often. You have an MACD. If you look down, you have a sell there, then you have a buy, then it quickly turns back into a sell, and it throws me off gear. The RMO being above zero, if you look at the RMO above zero from 2016 right up to 22, which is open on my screen right now, has been above zero right through, which means all it wants me to do is concentrate on where to look at a long position and not focus on the short position. So the idea of giving you something like the RMO is to help you detect that primary trend direction so that we can trade in the direction of the stronger force. So just looking at an RMO, do not worry about the curls that you see. You're just looking at the value. If the value is above zero, we're really looking at bull strength. So the RMO trade model has a template that you apply, and that's how you would get the chart. So what are the three advantages? And I always talk about this because it's so important to ingrain the essence of the indicator. When you trade in the direction of the primary trend, you are trading in the direction of the stronger force. You're increasing your odds of winning. It's a bit like the river going upstream, but you are trying to go downstream. That's a fight. It's not going to work. So if the river's flowing upstream, let's go upstream. That's the whole idea. Let's, move in the direction of the stronger force, move in the direction of the big picture, and therefore increase our odds of winning. That is the philosophy with which we work with the RMO. Now let's talk about the other elements. The other elements you see on the chart is you have the blue colored bars, which represent the medium term trend. So the bar colors are the medium term trend. The arrows that you see on the chart are the short term trend. So imagine the idea of having one suite, which gives you a short term signal, a medium term signal, and a longer term signal. The whole idea is I don't need to look at multiple time frames, because one of the things that I always stress is if we are focused on a few systems or even one system and one time frame, it makes life easier for us from the point of view that not only is the effort less, but the confusion is often less. Because if you look at too many time frames, you're often confusing yourself. You're also not being disciplined to align to one time frame. What tends to happen is you look at a signal on a daily chart, but when that doesn't work, you move to a weekly chart to give yourself some solace and comfort. But the way I look at it is if you took a trade on the daily, you should have a proper lineup of the indicators. Use something with short-term, medium-term, and long-term indicators in one suite. And that was the whole idea, that I don't need to look at too many other things. So lighten up, make it a hands-free approach, and try and look for all the three things when you buy: an arrow, a blue bar, and where the arm was bullish. Needless to mention, you must always pay attention to where is my stop, and you should use the immediate 5-bar low if you would like to do an automated stop, or the immediate pivot low that's near to you, right? So keep in mind that money management is also equally important. We need to line up when we don't just take that buy without a stop. We got to put a stop in, lock that in, and then move forward. So it doesn't matter if you trade the futures or you trade options, direction is key. And these three things aligning, these three signals aligning, the color of the bar, the arrow, and the armor bullish, that all put together is going to give us a nice setup. So we call this the 3D buy, where you have an alignment of all three signals. Now, if you look at the ATM, one of the things which we did add in the recent updates was the fact that you can have a scanner where you can detect these 3D buys. So if you have the power screener, so when you have the ATM, we have a live scanner, and you could put it on any number of symbols you want, on any time frame you want. Detecting these opportunities becomes very automated. You're able to find out where you have this alignment of three. And if you have an arrow marker over there, that actually tells you that's the first time that it's coming in. Now, why does this show the first time over here? Because the arrow comes in here, that's the short term. The color comes in here, that's the medium term. And when does the oscillator get above zero? It's over here. So when you reach here, that's when you'll get the Armo 3D buy with two arrows. That's more like indicating to you this is potentially your first point and not just an add-on. Like this is what I would call an add-on or a secondary signal. This is a more primary signal or your initial signal, which you may want to give greatest weight to, right? The other good thing is in the power screener, you can also block sort. When I say block sort, imagine if you're looking at, say, the NASDAQ 100, or, let's say you're looking at a particular index. Maybe you're looking at the ASX 200 or the Nifty 50 if you're in the Indian market. You're able to gauge on one screen where is the majority of this market tilting towards. So within my stock list, and this is no particular order in which I've put these stocks, but it's automatically block sorted, and you can see broadly 70% of my list seems to come in the green color. That tells you that on the RMO, and these are not up to date, this is just a past screenshot, it tells you that we have vast majority of symbols aligning on the positive or the bullish side of the market based on that RMO. Mind you, here the RMO is set to 30-minute. Now, it's not necessary that you have to use 30-minute. Each one's going to use a time frame of his or her choice. I always get the question as to what's a good time frame to use, to which I clearly answer, there is no perfect time frame, but you should try and work with a few time frames to find out which are you most comfortable with. The idea is try and use a time frame that suits your trading style, your heartbeat, your risk profile. This is very important. Don't try and be someone that trades any time frame or any signal, right? Just because you didn't get a signal on the 5-minute, you just went to the daily, or vice versa. That doesn't make sense. You need to, have some level of specialization internally to which you want to work to. Now, of course, when we give you the ATM, we even have scanners. So pretty much what I did through that watch list, if you're someone who's more comfortable using the scanners, you have the ATM RMO signals, which could be scanned through the explorers, and that could give you a ready stock list for stocks or futures or whatever symbols you want that meet the criteria. Notice I'm going to talk to you now about the ATM RMO super filter. This is one of the newer tools which makes it more adaptive. And the reason why the super filter really came about is, it's a bit of an equation like this. In theory, you may say a trend has these typical peaks and troughs where you have a perfect rhythm. But in the real world, when you look at the rhythm, it's more jagged. It's not perfect rhythms. Sometimes it's not even possible to draw a trend line like I've drawn. And that's why we bring about the concept of a super filter. The super filter is really 4 different bar colors that we're putting on the chart. And what are these 4 bar colors? There's a light blue, a dark blue, an orange, and a red. Self-explanatory, but the light blue is bullish, the dark blue is the best in terms of a bullish sign. Similarly, orange and red are the bearish ones, red being the most. So when you see a red colored bar, you should look at that with a bit of negativity. You're looking at that if I breach the low of that bar, and that's a simple confirmation. Don't just see a red and attack it. Look at the red, see if I breach the low. You can also check the oscillator. If the oscillator is also leaving the positive turf, you further understand that things are looking negative. Similarly, when you have dark blue bars, that's when the market's turning into bullish mode, and that's where you want to buy. Now, why is there an arrow over here? Because that's the alignment of the RMO, where you can see everything is aligned, where you got the blue bar, and this blue is a dark blue. So this is the super filter. The super filter is a great filter to the original RMO system itself. Now, what do I mean when I say to the original RMO system itself? If you look over here, friends, in this patch, you have the RMO which is above 0. But if you look at the bar colors contained itself. If I went to the original inbuilt RMO that you have, you probably would have clearly flicked into blue color, and this would be a buy trade. And the super filter is that adaptiveness. So think of it this way. It's a tailor-made suit versus a ready-made suit. It's fit to that instrument. In other words, it's found out what's a better value to be using with this symbol in this chart and then adapted to it. So the super filter is optimized truly to the chart that you have open, right? So that's already filtered out. You won't be able to go long because none of the bars are blue in color, right? So the good part about the super filter is you always have a more precise view. Think of it. No, I hate comparing it, but it's important that you understand this is the inbuilt RMO. You have, of course, we introduced it quite a few years ago. This is dark blue, red, right? And you have a bit of a flick which is on the upside, and you may end up going long there. But the minute you use the super filter, look at the alignment. Same chart now, all orange. So what did it do? It refined an already solid indicator, already good oscillator over there, right? It's not like the RMO is doing a bad job otherwise. It still does a fairly decent job. But that little whip was well taken care of. And you continue to believe that in a choppy market where you can see 30, 40 bars, literally in that range, it contained us from changing our directional thought process, right? So it helped us align to the bearish side of the market and not look for buy signals instead. So the whole idea is to have a tool which can potentially clean this up. Mind you, when you do use, let's actually jump into the program. And when we do use, so let's say if I pull up a symbol, how do you actually bring up the setup? So you have various templates available to you. So typically all the templates would start with ATM. And if you're using the ATM, obviously that's how it would work. So you can see there's quite a few studies. This one that I'm talking about, the super filter, is ATM RMO, and you may use that template and hit open chart straight from there, right? So the idea is to have a, well, it looks like I'm not opening for some reason. Let me just give it a quick restart. I've probably had that open the whole day. Bear with me one quick moment. We will go into online mode and check that it works through. Okay, jumping right back in. Yeah. When you look at the holistic view, you have a clear understanding how it dissects the market into bullish and bearish phases. You're able to understand that the market's moved from a dark blue, light blue, and finally transitioned into that whole red setup. Okay, you just continue with slides in the meantime. And all the time that the market has moved, through the RMO going from bullish to bearish, you can see that the x-axis over there has flipped around. Each time the RMO went from bullish to bearish. The super filter was a lot more in control because truly, as I said, it's tailor-made, it's custom fit, and therefore it's always going to try and use the values that best tune up to the chart that you're using. So often I get the comment that, does it mean that the super filter is a more refined or a slower indicator? No, that's a wrong statement. The super filter is not slower. It could be faster. Look at this. You have a dark blue straight away here. And what is the RMO? The traditional RMO is still negative. So you got an early indication here of trend change, which you can act upon, right? And that's because the dark blue is coming out of the super filter, which is the more refined one. So once you have the ATM RMO super filter with the 4-bar colors, you may feel that, why do I need to use that oscillator? Well, it's just that you can use that oscillator to understand if that confirms true. If you feel that you're more comfortable aligning, it's fine. But otherwise, the dark blue and red is pretty good on its own. So similarly over here, the indicator, like it was faster here and giving you a signal, here it's slowed down because maybe the volatility of the market slowed down. So notice over here the RMO went bearish, bullish, bearish, but this is stuck to light blue. It's stuck to one color. Only over here did it change to a dark red. That's when you understood, okay, I've got out of this transitional phase, and now that I see red, I'd like to use the low probably as a good confirmation. If I breach that low, I would confirm that I'm red. So you could say that the sell came a lot later in comparison to that, but better. But otherwise you'd be getting one sell here, then another flip, another flip. So it's about having more control. And that's what I like the most about the super filter is, and again, I keep comparing because what you see at the bottom is the traditional, and that's the new super filter. The light blue just helps you stay aligned to that chart so much better, right? So if let's hope this one works this time. Let's click that in. And this time again, I'm trying to use the ATM RMO as the chart. It doesn't seem to be for some reason, but again, I've got a lot of slides here which should help us through. So here's another example where the red comes in a lot quicker than the red bar comes in a lot quicker than the traditional RMO, giving you that early heads up that you have flipped directions, right? So this is an important, very important tool in my mind. And what you also need to pay attention to is the fact that the super filter does come up through the application. So the application is like a desktop app. You can double click on the ATM icon. And what happens over here is you would be able to open up some sample pages, work with that, and that way get a clear understanding as to where you're getting potential buy and sell signals, right? So you'll be able to see where there's an upshift means light blues become dark blue. Where there's a new down break, which means from a bullish, you've gone into a bearish. Downshift would mean where from an orange, you've shifted to a red. Now, in case you're wondering, where do I gather all this information? This year, we updated our manual along with the program. So with that, you also have now, where can you access this from? So if you go to metastock.com/downloads, or basically you click on My Downloads, you would be able to access the manual that we've written up, and that would take you through the various indicators. So every indicator, so right from the installation process, right up to every indicator. So, I've taken examples like this today. These are all put in for you so that you can understand what do these various terms mean, what are the various settings you could be using. It's a very constructive manual. What does an up break mean? What does a down break mean? An upshift, downshift. So we've got illustrations along with a lot of explanations for you in that manual if reading is your preference point. So, please take your time to go through this. This is available to you. And, please make the most of that because, one has thought of trying to put across every single setup that would probably, or signal that would come across into that manual. So again, we got block sorting, and when I say block sorting, you can see it puts the stocks in different blocks. So you've got red blocks, orange block, blue block, dark blue block. And the best part is you're able to understand that the majority of this market, in this case, I could safely say 60-65% of my screen is covered between the light blue and the dark blue, right? Anything with a new signal will have the word up break, upshift, and they will push up right to the top. You can also double click on any column to sort. So let's say you want to sort by alphabet, tap, tap, or double click on the symbol column. If you want to sort by percent change. So you can construct these columns exactly the way you want. So if you say, I want a column to give me, the RMO super filter, a second column to tell me what the SWI is doing, a third column to tell me what the counter trend indicator is doing. You can have all of them work in real time even. And mind you, if you're not a real-time customer, if you're someone who uses end-of-day data or DC, you can certainly use the program with the end-of-day data feed. It's just that it won't be ticking live. That's the only difference. Let's talk about one of my newest and my most favorite indicators now. This is the trend flares. And what I really like about this system is you've got various elements on the chart, and the baseline, the green baseline that you see, think of it as a baseline which dissects bullish and bearish region. But where I'd like to give you a early indication is where we have a little diamond out there. The diamonds are where we have flares down. So as as the name suggests, flares, that's why orange. We think that there's a potential that the trend is attempting to breach down. So the minute you see a breach down, you get an orange diamond. And how do you confirm an orange diamond? If the low breaks of that orange diamond and you break the baseline too, the green baseline, which happens over here, the market's going bearish. Similarly, if you have a blue diamond or a flare up, you cross the high of that bar, you should continue in strength. So the first sign of weakness actually in this chart stems from here. You had a blue flare up here. You can look at that diamond. High of that bar is not crossed, and that itself is a red flag, right? Same thing here. You have a blue diamond, high is not crossed, but the baseline gets punctured. That's another sign. The other thing you've got to pay attention to is what I call to TSL. So there are three elements on this chart. The baseline, which is the green color, that's the easiest to understand. Above it, it's bullish, below it is bearish. The flares, which indicate the breakouts in the short run, right, which are marked by diamonds. So if you don't like the diamonds, you can also refer up wherever you have the orange flares. And the last thing is the TSL, which is the trailing stop loss level. So that is called TSL plus, because if it's above the baseline, TSL is for your trailing stop loss for your long positions. So in other words, if you breach any of these circles which are below the bars, you want to get into a short position, or at least look at getting out of your trade. So TSLs help me even exit. So Trend Flare is actually the newest system which I designed, and the whole idea is to give you a system which is a quantum leap over what you already have. And it's a beautiful amalgamation of various ATM techniques into one screen. So the idea of doing this for you is, rather than going to different ATM indicators, even though they're just 6 or 7 templates, it's about giving you one screen which does a beautiful alignment. So through the TrendFlash scanners, you're able to look for all of these signals. TSLs are just trailing stop losses. So if it's a plus, that means if you're long, that's a point where you want to use a trailing stop. Then you have wherever you have a baseline upshift. So in other words, what's a BL upshift? A baseline upshift occurs when price was below the baseline and now is above the baseline. Similarly, a baseline downshift is when price was above that baseline and is now trading below it. So there's a lot that you can see in this scanner. And if you're using the Explorer, you have a lot of information out there which would show you what exactly is happening. So if any of these are at a value of 1, that tells you you have that as qualified. If you prefer, I personally prefer using the watch list, and that's because I don't need to manually run a scan, or I don't need to select when to run it. It's always open, always updating, always real time, right? And again, um, if you look at, the most important thing is to detect these trades, because you may have great indicators, but if you don't have a tool to detect these trades in time, that becomes, a huge issue. So let's look at another recent addition that I did, which was the automatic support resistance zones. And this is an expert advisor. We also have a template for you. And again, I'm kind of traveling, so I'm unable to really put these on for you at this point because I'm not on my main scale comp. But we do have one which is listed as, I think it's called ATM SR, and that would be, somewhere down that list, right? So Auto SR. So that's the one that you want to be applying. And what you get to see is various support and resistance levels marked out for you automatically. And why this is extremely relevant is when you look at the automatic support resistances, I need you to understand the blue ones are what we call resistances and the purple ones are supports. So as we always talk about in the Dow theory, if you read any solid book on the Dow theory, it always talks about one thing, that price discounts everything. The price is inclusive of various factors. After all, a price is made owing to demand and demand and supply could have many reasons. It's the way people perceive the stock to be. Someone's looking at fundamentals, someone's looking at technicals, someone's looking at astrology for all I know, someone's trading on gut feel, someone's trading on news, rumors, etc. And all that goes in to make a price. So we say price is supreme. And I corroborate with that statement very strongly because a lot of times, and again, nothing against fundamentals or any other school of thought, they all have their merits. You cannot tell the broker that I want to buy the stock when the EPS hits this or the PE hits that. Find me your trading price. You have to give him a price at which you want to buy or sell. If all your actions are price, why are we not studying price? What's the most important thing we need to study is the price. So that chart is more relevant and is more summative, is more inclusive than anything else. So when you see the blue resistance levels, you are basically getting an indication that if the market's not going to cross that over here, you're probably going to have a drop. Similarly, when you break the supports, you experience a further drop. Now, the great part is you can mix two baselines, which is exactly what you'd get on your chart. So this is pretty much what, when you apply that auto SR, that's how it should look. You would be able to gauge a green and an orange line. That's the short, what I'd like to call the normal baseline is green. The orange baseline is more refined in the sense it's slightly longer term, and therefore it's slower, if I could put it that way. So one is normal mode, one is slow mode. But the best part is when you combine the baselines with the support resistance, think of it this way. When you get the potential to, when you see that level being crossed, right, that resistance being crossed, that is a great indication because price is not only crossing the resistance, it's also above both the orange and the green. It's also above the dual baselines, right? Similarly, when you see support here and you see that this support is holding, right? You watch that level, it's above both baselines. That makes sense, right? Of course, let's move on further. Here's another support level. This was the first warning that, okay, I've potentially broken a support. But is it something to be excessively worried about? No. Maybe some short-term rotation would be there. You got the baselines to still protect you. Then you have another one over here. But let's say the market does break this one too. You may have another rotation down. But at the end of it, what I'm trying to tell you is, let's focus on where we can actually cross a resistance, right? That's the point I want. That's the point I want. Cross the resistance and be above both baselines, right? Or we break both the baselines and we break that support level. That tells you a beautiful alignment. So for me, this is an extremely inclusive study because we are doing this on price data, and price data, as I said, price is supreme. We want to look for where these supports and resistances are breaching or breaking out. And manually, when you try and detect support resistances, our biggest folly is we tend to just draw them randomly, right? We tend to just draw them where we want. So if we are someone that wants to buy, you might want to say, okay, let's draw this as a resistance and think that, oh, that's nicked out. This is a resistance. So there's a lot of thinking that we put in on our own. Now, this is automated, right? You are not plotting it. You don't even have the option to tweak it, which is great. And the reason I say that that's great because sometimes when we tweak it, and most of the time when we tweak it, it's basically because we want to see that level because it aligns with our thinking and our trade. We get emotional. But here it's automated. You have both the baselines coming out for you and you trade in a more aligned form. The other very interesting suite that you have is the trend decider suite. And when I build a suite, I build a template, I might call it one name. But even if you looked at the trend flare, we did a lot there. We had a trailing stop loss for long, a trailing stop loss for short. We had a baseline, which was in normal mode, a baseline that was in slow mode. So, we had a TSL, which is your trailing stops. We had the flares, which were up flares and down flares. So it's like one template, but there's a lot going into it, a lot of indicators that go into creating that one template. So even when you look at the trend decider suite, we're looking at trend decider daily, we're looking at trend decider weekly, 15-day, and monthly. It's not necessary that you use all. The original is actually the daily versus the weekly, but you could get innovative with this. Let's give you an example. If you're trading a stock, and this is a weekly level, and again, this is delayed data, so just remember that. You are looking at that red line as your barrier for the week, right? The minute you break out of that red line, that tells you that the most important or the trend decider, as the name suggests, the level below or above which you have a clear trend direction likely has broken out. So the trend decider level is like your, do or die point, if I could put it that way, that for the trend, if there was one level for the week that was most important, that is penetrated, right? It gives you a holistic view for the week. Similarly, you could put this on even a closing chart and you could use it for the day, just for the day. So if you're someone who's a day trader and just wants to look at just for one day, this updates every day. So the green line that you see comes up every day. The best part is when you combine both of them, right? When you put in the daily and the weekly together. Let's actually go through each of the vertical lines I've drawn. So the one that I'm circling over here, what is so important over here? This is the first time where the price is trading below the daily level and the weekly level. So in other words, the price here, okay, is trading below both. So let's keep in mind that what I'm really looking for is a setup where price has broken both the levels. Now, likewise, over here, this is the first time where after that we've got a movement above both the levels. So every line that you see has a movement where the price has exceeded both the daily and the weekly level, right? Now you got a wonderful expert advisor also doing the job for you. Metastock has this amazing ability to allow you to see the interpretation and commentary as well. So we've built in those experts with the commentary, with the labels. So when you look at that x-axis, you can see the bullish and the bearish zones. And you must understand why is it bearish over there and why is it bullish over there. So why is it bearish over here? Because price is trading below the daily, price is trading below the weekly trend decider as well. And the green line itself, the trend decider daily itself, is below that weekly level, right? So all the three things that I just talked about. So price trading below daily, price trading below the weekly, and the green line being below the weekly level. Since all are true, that's why it's marking it bearish. Similarly over here, all are true. Price is above both. The green is above the red. That's why bullish. So you're able to get that traction, right? You're able to get that traction in terms of price action. So the trend decider, when you combine this whole suite, it becomes really interesting. And this is what I was showing you. The expert advisor gives you this commentary where you're able to see exactly how all the indicators are lining up, whether it's the RMO, whether it's the trend decider levels. So of course, if you're someone who's new to this, take your time to use the expert advisor commentary, look at those x-axis markings, go through the manuals. I would urge you to, use these aids, especially to start with. You could also get to using a very long-term approach. When I say long-term approach, you could be using the trend decider weekly versus the monthly. And who uses this? Maybe you're on the DC version. Maybe you're not really looking at intraday charts, or you're not too interested in just the short-term trend of the market. Not everyone's a short-term trader, right? It could be that you're looking at this market with a very long-term focus. So this is a weekly versus a monthly. So you pretty much follow the same rule set. Look at points where price is above both the trend decider weekly and the monthly. In this case, the red color is the trend decider weekly, and the purple or lavender color is the trend decider monthly. So if price is trading above both, that may be a good longer term indication for you. Now, again, I'd remind you that when you buy the ATM add-on, you also get the scanner. And the scanner can find these for you. Not only would it categorize your stock as bullish or bearish, but if you see a bullish with an asterisk sign, like you see at the bottom, or a bearish with an asterisk sign, these indicate that these stocks or symbols have just shifted. So from a bearish to a bullish, right? Or from a no signal zone to a new signal zone. So if you're looking for fresh opportunities, try and look for the ones with the asterisk sign. If you're looking for opportunities which are, or you just want to be conditioned as to how this market is looking, well, you got the words bullish, bearish, and plus, plus, plus. So plus, plus, plus over here would indicate what? So that's another kind of signal, which this means that it's bullish, but not all the factors. It could be that, the price is above daily and the weekly, but maybe the trend decider daily is still not yet above the weekly level itself. So all the three things that I talked about, if they are factored in, then only will it categorize it as bullish. If two conditions are met, then it would categorize it as plus, 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 right? So that's the trend decider. Now, we've done a lot of price-based tools. Another great tool which we have, and again, I'm running through these a little quick because the idea is to give you some understanding as to why we have these tools and why this combination works and why we need it. The SWI is a volume-based tool, unlike the trend decider, which works off price essentially. The SWI is got a single ingredient of volume. And why I say a single ingredient, all it's measuring is the price moving up with volume or not. Now, I'm sure if you've done your early reads on technical analysis, you would have always heard a statement, if price goes up with volume, that's a good sign. Similarly, if price moves down and the volume is increasing, that indicates the order being more bearish. So any increase or decrease in price accompanied with volume is a great confirmation. This statement, if I could marry in to my chart using the SWI indicator, think of it this way. It's measuring that when the price is coming down, so let's say here the price is coming down, it's checking how much volume is there. Is it so much that it knocks out this uptrend, right? So it is doing these things for you in an automated format. This line is dissecting again bullish and bearish region just based on volume, nothing else, right? So that's why it could sometimes give. So maybe you got a big pop up in volume suddenly over here. It's probably analyzed it and said, okay, this breakout has so much volume that it's toppled this downtrend. Maybe this downtrend was on very subdued price, subdued volume. So that whole measurement of how is the equation of price and volume running is married into this SWI, or what we call the strength weakness indicator. It measures the strength based on the volume, and that gives you a bearish and a bullish pulse. So it's very interesting to get a perspective just on volume alone, because remember, volume is a driving force. If a stock has to go up, you may have a price breakout, you may have a trend breakout, but if you don't have volume, you don't have money on it, right? Volume is equal to participation, volume is equal to money, and without money, nothing's going to move, right? So the whole idea is to have a setup or a template set which brings in trend, momentum, and volume. And when I say trend, today we looked at the RMO super filter as something which gives you those 4-bar colors, which is a tailor-made approach for your chart. You had the light blue, the dark blue, orange, and red. That gives you an excellent assessment of trend detection. Momentum, that means pure price momentum. Trend decider, you got the trend decider daily versus the weekly. We looked at that. And then I talked about volume. And now volume is very important, and that's why I have the SWI. Not to mention, within this slide, I haven't talked about trend flare because that on its own is quite an interesting setup. That's a universe of its own, actually. So the trend flare is in addition to this. If you would like to add that to the trend component over here, you're more than welcome to. Suit yourself as to which one you are more comfortable with. So when you use any system, it's important that you blend in price, momentum, and volume, right? Extremely important we blend in all three elements. Often we are so tilted towards, let's say, using a particular type of indicator, say moving averages, or price driven studies, support resistance, but we forget using the volume. So any indicator needs to have any setup that you use, any rule set that you build around for yourself. Make sure you've got the three elements factored in. So easier said than done. We always say trade to a plan, but I think the reason I put this slide up for you is the most important part of this is to even identify these trades. And to identify these trades, we've got a lovely screener for you, which does the identification actually on an automated basis. You set up a stock list of your choice, you set up a time frame that you wanted to work to, and pop, it will give you exactly those stocks which are meeting your criteria, allowing you to spend time on weighting those signals. When I say weighting, you may have three signals. You could take your time to see where you have more alignment in terms of indicators. And finally, I need you to focus on trade management. The whole idea of ATM, or automated trend modules, is so that our analysis is automated so that you can focus on money management, weighting that trade, rather than worrying about getting the trend. The ATM does find that trend for you in a fairly automated fashion and even identifies and puts it to you. We're working on that final piece of weighting it up and managing those trades. Jeff, I'm going to open it up for questions now. And you could talk about how users could potentially sign up for the program if they're interested. Maybe some of them are not on it, some of them are on it. I'll hand it over to you, Jeff, and we
Yeah.
could take it from there.
I will say, if you have questions, we don't have a lot of questions. So if you have questions for Rahul, let us know right now, and type fast. Sri wants to know, though, do you have any recommendations on a new entry positions if a stock's been up for a while?
So if you're looking at a stock that's already been in an upward trend, what's very important for us to do is to try and find a re-entry opportunity. If I could put it that way, you probably are looking for an opportunity to re-enter the stock if what I'm gauging. And the trend flare would probably be your best bet in such a case. So my suggestion is try and work with the trend flare, and that should help you in terms of getting a new opportunity. Uh, so look at the trend flare signals. That's one easy way. Or if the SWI gets negative, you have a re-entry opportunity again. It often does happen. You have a little bit of a flick down and you get back up. Support resistance, another tool that I talked about today. Maybe you have a new resistance that appears. You break out that level, that could be another indication. So a lot of ways actually. Sometimes I would say if you don't like any of these ways, if you're just simply looking for re-entry, get down one lower time frame. That should help.
Cool. Very good answer. We do have a lot of questions that come in just because of the broad nationalities and countries that people use Metastock in. Do these methodologies work really well in an Indian market? I'm just kidding. But also, like we get a lot of customers from Australia and Asia, and so can these be applied to lots of different markets, like futures, international markets, et cetera, et cetera, et cetera? Can you speak to that for a minute?
Great question. And the reason I kind of gave a little smile to that one was you have to appreciate that these indicators are designed around any market that moves. It's all about momentum. The indicator doesn't know the name of the stock really. It just knows the data that it gets. So it doesn't matter whether the stock's in Australia, the stock is in India, the stock is in Japan, Hong Kong, China, Americas. It should work. It doesn't matter if it's a futures. So I've used it on futures. I've used it on options. I've used it on sex data, Singapore data. In fact, we go all around the globe showing it, and Jeff does a great job to it, road showing this globally, and we have users using it everywhere, and it does work. So there's no seasonality to it, to where it would work, where it wouldn't work. Don't worry about that. I think, as I said, a lot of these indicators are adaptive. The best part about the ATM is it adapts to the chart that you're looking at.
All right. Helen wants to know how, if you can combine ATM SWI with other trading strategies for maybe a more comprehensive market analysis.
My favorite combination, I mean, again, this is just my personal take on it, is within the ATM suite. If you're using the super filter, that does a fantastic job in terms of trend detection. If I clubbed in the SWI with the super filter, that's a great combination because the super filter is giving you that whole, approach of price and indicator-based breakouts where you see a light blue or dark blue. But what if that is also confirmed by the volume? That gives you a fantastic setup. So, I personally like to build a template where I, apply the super filter and I plonk a SWI on that chart. And that kind of gives me a more holistic approach where I can see where are both really aligning. Because sometimes you get a breakout on the volume, but you don't have it on the price. How about if I could just wait where both of them align? And that gives me a lot more confidence and structure to that trade.
Great. And we're just about, I do want to take some time to kind of talk a little bit about the offer because we have some really good offers today. But before I let you go, Rahul, I want to thank you for like all the things you've done over the years and been for such a great partner in Metastock and friend and awesome. So thank you for spending
Thank you, Jeff. You're always very, very kind with me. Yeah.
All right.
Thank you for all you do too.
Of course, yeah. Let me go ahead and do this. I'm going to take over the presentation. And just want to kind of reiterate everything that's actually included in the ATM Power Screener. Harry says, nice presentation, lots of Microsoft, lots of dissection has been done. Looks great. Thank you for that comment, Harry. I really appreciate that. I do want to kind of reiterate all the stuff that's included in ATM, and a big part of that is the Power Screener, which you kind of see a still example of this. Power Screeners are really good kind of almost like way to kind of keep an eye on all the stocks you're interested in and see what they're doing. Very customizable, very user friendly, super easy to set up. Rahul and his team over there did a great job with it. In addition, I want to kind of just, and I won't have enough time to highlight all of these, but there's a lot of methods that are included. You have the breakout catcher, the strength weakness index, the super filter, the trend decider, RMO2, the counter trend indicator, the trend flare, and then now you have the trend flare and the support and resistance that are automatic. And so these are really, really good systems that have been designed by Rahul. They fit well into the program, which means they have the ability to go in and scan. You have expert advisors that kind of tell you what's going on with them. And they really take advantage of not only having like a real-time radar screener, but if you want to filter through a large amount of instruments, you can do that with the scanners that are available. Very, very thorough job. I think this is the only add-on that we've had that has gotten to the 4.0 version. So there's plenty that are at the 3, but if we're still working on it, it just means people like it. It's been well accepted and all that kind of stuff. So here's a list of kind of all the methods that are included. I want to reiterate all those methods have scanners and expert advisors, expert advisors, signals, alerting, that kind of stuff that's included. And so what we're doing here, there's actually a couple of different things. Normally with this, it would be $149 a month. We're going to do a $129 special here. That's a permanent rate for you. If you do a prepayment, you get a bit of a discount on that. It would be $12.99. If you do that, you'll get a free one-on-one training with Veritech, and you'll also get the master class with it. So that's a super good offer. If you're ready to do it for a full year, commit to it. You'll get all that training in the initial master class as well. The master class that we did a few sessions. The first session we did kind of talked about the core breakout models. We talked about RMO ATM4, the trade flare, the refining of the strategies. You can kind of read the bullets here. Session 2, we did trade detection and integration. And Rahul does such a thorough job with this. I love kind of sitting down and going through the trainings that he talks about, simply because I always seem to learn something new. Even though I've known Rahul for decades now, he always does such a thorough job of kind of explaining. And he's one of those speakers that when he's great in terms of a trainer, because once he teaches you something, he teaches it in a way that you can kind of in a way that I can easily grasp it. So you can do that annual if you want. It's $12.99. I'd recommend it. If you just kind of want to try it, we do have a special that we're doing where if you pay $4.99, normally this would be $8.96, but if you pay $4.99, you'll get 3 months of access to ATM, which is worth $159 per month right there. But you also get access to those master classes that we just sat down and recorded. So RMO ATM4 will be included with that.
Hey, Jeff.
Yes.
I'm sorry to interrupt. I just checked the website metastock.com/ATM and it's not coming up correctly. Is that the site you wanted to use, or maybe Veritech A, or maybe they need to call in?
I thought we had ATM working.
I'll tell you what. Let me see if I can get it working, and I'll get back to you.
Well, I'm glad you chimed in. ATM. I thought for sure we had that site. Oh, it had an expiration on it.
I could probably fix that right now while you're talking.
Yeah, we shouldn't do expirations if we can avoid it. I think, let me see if Veritech A does work though. If it's
Veritech A works, but I'm not sure it's the same offer.
It's not the same offer. Yeah, this is a call-in offer. We'll just leave it at that.
I'll leave that information.
Let me go ahead and do this.
Sorry to interrupt.
Yeah, you're fine. I'm glad you said that. So this offer is so special, you must call in. Let me go ahead and take this off. And Greg, if you will work, maybe let's kind of fix that page. Okay. So $886 would be the normal price. You'll pay $4.99 now. That'll be 3 months of access, plus a masterclass, plus a lifetime discount price of $129 per month with your subscription. You'll get those 2 live trainings that are included. Give us a call. You want to go, call us at 800-882-3040, or you can chat online with us at metastock.com/sales chat. Our sales guys would love to help you get that in. So there you go. Helen says, I have some more questions about ATM SWI. Helen, let's have you get in touch. Just because of time, we're out of time again. But we would love to kind of help you. Get in touch with us right here at metastock.com/sales chat. and we will give you a hand with that. Thank you for your questions. Fortunately, we just sometimes, time is always a friend, I guess. I don't know. Anyway, metastock.com/sales chat, 800-882-3040. Greg, we're going to give away a small prize right now. I'm going to go ahead and leave this information up while we do it. And I think it's time to give away another TAS prize.
That sounds great.
Technical, I say TAS, I mean task. Technical analysis of stocks and commodities. We're going to give a 1-year subscription to have it. There we go. Here, I even have a slide that says task on it. So what I need from you, Greg, is I just need a number between 1 and, well, that's not right. It's summing up. Thanks. Let me do this. 1 in 40 million. 1 in 8,021 is the numbers.
Okay. The number is 991.
Okay. Well, I would say that Google is quite random.
Hmm.
Last time we had a very high one. Now we have kind of a low one. We've been all over the place. 991 is a James R. With
Congratulations, James R.
in the USA. So let me go ahead and make a note of that. So the prize, just to reiterate, is Technical Analysis of Stocks and Commodities magazine. It's a 12-month subscription. You'll get a magazine sent to you since you're in the USA every month. You'll also have access to all 12,000 articles. I would recommend that you get a subscription to Stocks and Commodities magazine because it's a good way to make sure that you're learning every month and improving, and they have great articles. As part of your subscription, you have access to 17,000 articles. So with that being said, I'll also want to talk real quick about the forum. Thanks for the assist, Greg.
Yeah, I'm sorry, really quick before you move on, before I leave, I did talk to Kevin, and our speaker this afternoon who lives in Florida. He said him and his family are safe and fine, and thank you for asking. We would once again like to send our well wishes to everyone in the path of Hurricane Helene. I didn't know it was Helene until I listened to the news. I thought it was Helen. And I'll let you continue, Jeff. Thanks.
They do those alphabetically, the namings. I find that interesting.
They also reuse them, I just found out too. Helene has been used several times before, but then they retire them when they're, I guess, when they become super large, they retire them. That's what I read.
Like, no more of you, Helen. If you haven't yet, join our forum, join a partner of ours, the Traders Forum, www.thetradersforum. There you can live chat, market chat with other traders. You can learn about markets, where it's a community of traders. We do some cool live events up there. There's always people up there talking. I'm usually one of them. There's no cost to join. There's some really good materials up there, and there's going to be more coming. So www.thetradersforum.com. Our next speaker is very interesting. This is going to be different, I promise, than any other presenter we've ever had. Or not ever had. Jerry's been in here quite a few times, but we've had this week because we'll come in, and Jerry's going to talk about tax strategy and kind of whether or not it makes sense for you. Hey, Jerry.
Hey, how you doing, Jeff?
I'm doing great. To trade as a professional or not, whether you should incorporate, and if that's a decision that makes sense for you, it's a service that they offer as well. Convenient, right?
Yeah, absolutely, yes. So
let me go ahead and what I would say is the very first time I had, it was like there was a Thad there, I think. But the very first time I heard them talk about, I was like, I didn't even know most of this stuff. And it's very, very interesting to me. I will say, Jerry, you always get the most questions. Always.
Well, good.
Let me make you the presenter. And then I will make sure that should pop up a thing. I can hear you well. I'll just make sure we can see your screen. I can. It's a pencil.
All
Trading
right,
2024.
Fantastic. So I appreciate the introduction, Jeff. And hello to everybody out there. I'm glad to be talking with all of you. I will say at the outset of this that I am in North Carolina getting some of the remnants of Hurricane Helene. So there is a possibility that my power could go out. So Jeff, you want to be on standby just in case something happens. But let's hope that doesn't happen.
I'm here if you need me.
All right, sounds great. So what we're going to do is we're going to run through the PowerPoint presentation here. Actually, let me back up a slide here because I want to do something before that. We're going to talk about tax strategies and treating your trading as if it's a business. Now, some of you may be saying, taxes, why are we talking about taxes in September, late September, early October? Well, really, this is something that you really want to talk about early in the year. Or late in the year, not in tax time, let's put it that way, because you need to plan structures, you need to plan for things and get them set up. And that does take a tad bit of time, plus there are benefits actually to doing it now. We have some strategies where individuals have traded all year long and they've built up wash sales, and they're worried about those wash sales getting carried over. And there are strategies later here in the year that we can actually move you into an entity and get rid of those wash sales. There's ways to do that, but we'll talk about some of that in a little bit. So what we're going to do is we're going to go through the presentation. At the end, I will open it up for questions, and then Jeff will come back on at that point, we'll talk about things, and we'll take a few questions given the amount of time that we do have. First of all, disclaimer, to our knowledge, the information given in its presentation is accurate as of the presentation date. Tax changes do happen often, so you need to consult with the tax professional before you do anything. This presentation does not establish a professional or confidential relationship between you, myself, or Traders Accounting. And Traders Accounting is the firm that I am here representing. And Traders Accounting is not a law firm, so the information provided here should not be construed as legal advice. So let me give you some contact information here, and there's a link. I'm also going to send that to the presenters so that they can copy that to everybody. Our website, we have a very special website page. I doubt that you want to type this one in. So Jeff or somebody else can actually take this link and send it out to all of you. And if you click on this link, it's a link to Traders Accounting site, but it's a special page for you all so that you can get a free ebook out of this that talks about a lot of the things I talk about and a few other things here, and really kind of goes through, what's best for certain people under certain situations. Our phone number here is 800-938-9513. We do staff that from 8. Well, it's Arizona time, so they depends on which time zone. Right now they're on Pacific time, so 8 in the morning till 4:30 in the afternoon Pacific time. When time change happens, that'll be 7 in the morning Pacific, or they go to Mountain time, so that'll be 7 Pacific time all the way up to 2 or 3:30. Sorry, I had to think about that for a second. And we also have an email address at learn@tradersaccounting.com. And I'm going to put this slide back up at the end so that you have the contact information there. And certainly this is being recorded, and I'm sure you're going to be allowed to watch this later on, so you can always look at this and catch this information as well. All right, let's talk about some basic information. Now, I'm a former college professor, and I used to teach business classes, and I always like going back to the fundamentals. And so I kind of label this as a business 101 class, beginning business. And the reason I do this, because if you're serious about trading, you need to treat it like a business. A lot of people go into trading, obviously to make money. I mean, and that's not a problem. Making money is the goal here, whether as supplement to your income or saving up for retirement or as complete income, as we have certain clients that actually do that. But if you're serious about it, you need to treat it like business, because there's two sides to business. You've got the income side, or the gain side, if you will, that most people think about, but you also have the expenses side. And that's the part that some people don't think about. So we want to actually think about this like a business, as inflows, cash inflows, and cash outflows. And as I pretty much mentioned, you have to be concerned about cash flow. Any business, whether it's a trading business or a mechanic shop or a grocery store, whatever it is, you have to be concerned about cash flow. And it doesn't matter really so much what your books look like, it's whether you're getting cash in or not. And if you're losing money in the market and then you're also spending money on whatever, then you've got a major problem there with cash flow. It's all going out. So we need to balance the cash flow, or at least get into a positive aspect. And so that's what this is all about. It all goes back to cash flow. Secondly, when you treat something like a business, you want to make your financial decisions based on your business needs, not the tax code. And this is a trap that a lot of people fall into. Come into December, and I already know it's going to happen because it happens every year. I'm going to get a call from somebody, and they're going to say, "Hey, I made a bunch of money this year, and I want to go purchase something to write it off so that I don't have to pay as much in taxes." That is a decision based on the tax code and not on your business needs. Let me give you an example of one where it wasn't a real business need, but he was just trying to avoid taxes. I was doing accounting for a mechanic, actually several years ago. It's about 20 something years ago, and he came to me in December and said, "Hey, I'd like to buy a tire machine for $20,000 so that I can get the tax write-off." I said, "Okay, that's about a 30% write-off, so you get about $6,000 in taxes. So you're going to spend $20,000, you're going to get $6,000 back. So you're still spending $14,000." He said, "Okay." And I said, "How often are you going to be using this tire machine?" And he said, "Well, maybe once or twice a year." And I looked at him. I thought, this thing is going to take forever to pay for itself. Matter of fact, the tire machine will probably be broke down or just be useless by the time the machine pays for itself. So that was a decision based on the tax code and trying to save taxes. And it really, what was happening there, he was trying to spend $20,000 to save $6,000, which is actually a very, very bad decision. That's negative cash flow. So make your decisions on business needs. If you need something in your trading business, go get it. If you need a new computer, if you need software, if you need scanners or whatever it is, if you need that, go get it. But just don't go get something because you're afraid of paying taxes. Just set the 30% aside or whatever your tax bracket is and pay the tax. I know that's not common conventional knowledge or wisdom, but it is the right way to do things. Trust me. Now, you need to be aware of all your tax and your protection options. And that's what this presentation really is all about. We're going to go through tax options for trading professionals, those that want to treat it like a business, and we'll get into those qualifications where you get up to that level. And also protection, whether it's your trading assets are covered in a lawsuit, or how to protect them from other things that legal action that could happen. So we're going to talk about that now. In order to do this, we're going to cover really 3 topics, and the first of those topics is trader tax status. Now, trader tax status applies to all traders. Doesn't matter whether you're trading stocks, options, futures, cryptocurrency, Forex. My mind went blank for a second. It doesn't matter what you're trading. This can apply to everybody that's trading and can actually save some money through the tax code on stuff that you're already spending for. So let me reiterate that. After we talk about trader tax status, we're going to talk about entities. Now, some of you may have heard about, well, I form an entity, I can save money. Well, there are traps there that you have to consider. And so entities can help with both of those things, the tax and the protection options. But if you set up the wrong one, it really is not going to be beneficial on one side or the other. So you got to be very careful. And then the last thing, and by the way, entities are for everybody. It doesn't matter what it's for. We got We got entities for Forex traders. We got entities for crypto traders. We got entities for just about anything. So that works for everybody. Now, the last one here is the mark-to-market election. And this is only for stock and options traders. And it covers most stocks and options. There are a handful, like 10 ETFs that this doesn't qualify for. And I'll talk about that maybe towards the end of this thing. So these three things here are here to help you so that you can save money on stuff you may already be doing and need to write off. So let's go ahead and get into this, and we'll deal with the first one, trader tax status. Now, trader tax status is a choice that allows any entity, including individuals, to deduct trading expenses provided the criteria are met. So you do have the choice as long as you meet the criteria. Now, if you're interested in reading more and going back to the tax code, you can go to the IRS website, and in their little search bar in the upper right-hand corner, type in Publication 550. Publication 550 is our go-to manual from the IRS. And it deals, it's like 70 something, maybe 80 pages by now, something long. And it deals with all types of investing. I mean, everything's in there: bonds, interest, dividends, stocks, options, mark-to-market, trader tax status, everything's in there. And so that's our go-to manual, if you will. So feel free to go get that from the IRS website. It's not necessarily the easiest read in the world, but you can start getting an idea and a feel of how some things work in the tax code. So if you read through that about trader tax status, it gives a couple of very, very vague criteria for trader tax status. And the IRS is not always the best at talking about and trying to give you straight information. And I think sometimes that vagueness is intentional so that gives their examiners a lot of leeway in an audit. So what we do is, the idea behind those criteria in Publication 550 is that you have to really be treating it like a business, going back to that first slide that I mentioned to you. And it talks about how you need to rely on the income coming in either in part or in whole, and there's a few other vagaries there. But what happens a lot of times with tax law that's very vague like that is it ends up going to court. And so we have some criteria that have come out of court cases that deal with trader tax status. And remember, trader tax status is about deducting expenses. This doesn't have anything to do with gains or losses in the market. It just has to do with your trading expenses and whether you can deduct them on a tax return. So the three criteria that have come out of court cases, and it's generally true that you need to meet all three of these. If you can meet all three of these, you're not going to have a problem with trader tax status. If you fail on one of them, to be honest with you, we don't know. It's a gray area, and the IRS could take it away. You'd have to go to court to challenge it, all that stuff. But here are the three criteria. First of all, a person or entity needs to make 720 trades or more in a year. Now, for some people, that's nothing. They do that in a couple of weeks, and I've talked to a few traders that actually do that. For other people, that's a lot. So, but that is the standard that's come out of the court, tax court. So if you can make over 720 trades a year, you've met the first criteria. The second criteria from the court is there's trading in over 75% of the trading days per year. So I calculated that about 75% of the trading days adds up. It's about 281 days out of the year that you have to actually trade. The idea here is that you have to be putting a lot of time into this. You've got to be doing a significant number of trades. You've got to be doing it and treating it like a business. Think about a business, another business. You just wouldn't go on vacation for 6 months out of the year and then come back and hope your business is still running, and then maybe take another vacation in 2 months or something like it. That's no way to run a business. So they want you treating this like any other business. They want you present. They want you actively trading for the business. Now, it doesn't matter whether you're making money or not. It just matters whether you're trading. So you need to be trading 3/4 of the days, trading days per year. And then there need to be over 500 hours in trading, research, and education. This also came out of a court case. So, education, I mean, sitting in seminars like this right now would qualify as that. You all do research on what you're going to be investing in, and of course the trading. Now, the first two of these, those are proven generally by just giving an IRS examiner your monthly statements and with all the trades on it. Say, here you go, you can prove that using those statements, and then let them add it all up. But the last one cannot be proven with the statements. And so what we suggest is you keep a log. Now, there's no standard log for this. It's kind of like a mileage log for a vehicle. If you want to do it electronically, if you want to do it on paper, that's fine. The idea is the effort to keep the time somewhere so that you can prove that you've got those 500 hours in each year. Because what will happen is if you fail on one of these, it's very possible in an IRS examination that they could say, well, you didn't have enough time in trading or research and education, so we're going to take traders' tax status away, and we're not going to let you deduct those expenses now. And that could be a major hurt for some people on their tax return. So this is something that you would want to keep track of and make sure that you're doing and make sure you've got all these three things in order so that you can deduct the expenses on your tax return. And the tax savings, some people say, well, how much do I save if I do this? Well, it depends upon your current tax bracket. If you're in the 20% tax bracket, every dollar you put of expenses you put on your return, you're saving 20 cents. If you're in the 39% or 37% tax bracket, sorry, if you're in the 37% tax bracket, every dollar you put on, you're saving 37 cents. So it matters about the tax bracket that you're in as to how much you're saving. So higher income people actually have more to save, but still, I mean, you want to get as much back as you can from the IRS. However, with everything else with the IRS, there are warnings and there are pitfalls. And that's what this is about. And this is where we're going to start segregating, kind of getting into structure a little bit. A person who deducts trading expenses on their personal return must use the Schedule C. Now, that doesn't sound like a big deal. Some of you may already have Schedule Cs on your tax return because you have other small businesses. Some of you may sell things for Amazon, or you may have a small flower shop or something like that, and you already got a Schedule C on your tax return. Well, this is very similar to that. However, the trading income does not go on the Schedule C. The only thing that goes on the Schedule C for traders are the expenses, which that can be a little bit problematic in and of itself. But we have a few issues here. Now, I'm just talking about individuals who are trading on their personal return. And by the way, this also applies to single member LLCs, because some people say, well, I'll just go form an LLC. I'll form a single member LLC and I'll be fine. Same problems occur. And number one problem, your audit risk is increased. The reason your audit risk is increased is because of the Schedule C. It's not because of trading, but the presence of that Schedule C automatically increases the risk of examination. And part of the reason for that is the Schedule C is full of numbers that you supply the IRS and they have absolutely no backup for. Like a W-2, that goes to the IRS first before you even get it. And you put that on your return, it should match up and everything's okay. But these numbers that you put on the Schedule C, your expenses, IRS doesn't have any back justification or any proof of those. And so very commonly, they start looking for that proof. And Schedule C is the #1 most audited form of the IRS. Every audit, and I've been working in accounting for over 30 years now. every audit except for one, which was a payroll audit for an S Corp. But every audit has been centered around a Schedule C. And we've had clients not on trading, but the IRS has started examining Schedule Cs. That we had one a couple of years ago for it was a real estate salesperson, and they were claiming it on their Schedule C. And the IRS wanted information. They started doing an examination on it. So fortunately, we have not had anybody recently, and in my knowledge, since I've been with Traders Accounting, I don't think they've ever had any of our traders get examined for a Schedule C. However, the chance is there. All right, number 2. With a Schedule C, the home office deduction may not be obtainable. What happens on a Schedule C? Remember, this is a person claiming expenses on their tax return for trading, or a single member LLC. You report this stuff, and excuse me, we have an emergency alert going off because of the storm, so sorry about that. The home office deduction is very limited on the Schedule C. And what happens is it can possibly be even totally eliminated. And so there's really a lot of restrictions on there. So you may not be able to. And now hang on to this one, because there's a remedy for this. But it doesn't matter whether you're an individual or a single member LLC, all of this goes on the Schedule C, and you may lose the home office deduction, which can be a very sizable deduction. So we'll come back to it here in a little bit. Number 3, for an individual trading on their personal tax return. Now, this does not apply to a single member LLC, but there may not be any asset protection. Now, what that means is, for example, if you're trading just as an individual, you don't have an LLC, and somebody gets on your property and they get hurt and they sue you and the insurance doesn't pay for all of it, then in a lawsuit, they could go for your personal assets, which would include your trading assets. That won't be the case if you've got the trading assets locked up in an LLC or an S Corp or a C Corp for that matter. So trading can be protected if you form an LLC or if you get off into an S Corp or C Corp. But as an individual, you don't have any asset protection. Number 4, it's difficult to justify having a W-2 job and being an active trader for the IRS. The IRS, for whatever reason, doesn't like it if you've got this W-2 job over here and you say you're a full-time trader, because they say, well, you're doing full-time for both. How can you do both at the same time? And so they don't like that, even though probably I have, and all of you listening to me probably have had multiple jobs at the same time during your life. Whatever reason, the IRS doesn't like it. Now, we're going to fix those things. And the fix has to do with entities. Now, there's several types of entities. There's sole proprietorships, single member LLCs, general partnerships, limited partnerships, multi-member LLCs, S Corps, LLC S Corps, C Corps, and LLC C Corps. Okay, that's a whole lot of stuff there. We're going to weed this down. Now, sole proprietorship is what we just talked about. That's doing it as your personal business. Okay, it's reporting on Schedule C, and the single member LLC, that's also putting it on Schedule C. We don't like those because that can really increase the audit risk. It creates problems for deductions and all that stuff. So what about the others? Well, we're going to confine ourselves to LLC, because remember I talked about asset protection a little bit ago, how you want to keep these trading assets protected from any potential lawsuits that could happen, or injury claims or anything like that. So, and that also wipes out the general partnership, can wipe out the limited partnership. Those are gone. So let's just kind of frame this in terms of an LLC. As I mentioned, the sole proprietorship and a single member LLC don't do much for a trader. Now, the only difference there is a single member LLC does give you that little bit of asset protection. And now, we're really limiting ourselves to multi-member LLCs, S Corps, and C Corps. And the type of entity that's right for you depends upon your situation. And so what we would do, traders accounting, in a consult, we would sit down and talk to you, talk about your situation, and decide whether an LLC, multi-member LLC, which is an LLC partnership, quite frankly, and I'll probably refer to it that way from now on, an S Corp or a C Corp would be best for you. I will tell you, we rarely recommend C Corps because they are very difficult to work with. They don't work as well as what a lot of companies out there who are trying to sell you on setting them up. They don't work that well. And you have to have a lot of maintenance on them, and there's all kinds of problems. I won't get into all the tax implications in that. S Corps are good, but S Corps require you to have a salary. The officers must pay themselves. So now you're talking about a payroll company. Now you're talking monthly, or not monthly, but quarterly and yearly payroll reports, unemployment taxes, FICA taxes. I mean, there's a whole gamut of things there. Now it gets more complicated. There are cases where some of our clients do go to S Corps and they're using it very effectively, and that's fine, but not as a first step. I almost never recommend any type of S corporation as a first step. But so what do we recommend? Well, we generally recommend a multi-member LLC or an LLC partnership. Now, why do we recommend this? Here's several reasons. I'm going to give you the cons before I give you the pros, and here they are. First of all, you have a yearly LLC fee in most states. That's not true in every state. And by the way, this is true for a single member LLC as well. There are a handful of states that once you pay for the LLC, you never have to pay again. But most states, they usually have a yearly fee, like South Carolina is $25 a year. California, however, is $800 a year. And all the other states fall in between that, except for the ones that obviously don't have a fee. So you do have a yearly LLC fee. You also have a tax prep fee. A multi-member LLC is a partnership, and so you have to file a partnership tax return. And it's also possible to have increased broker fees. A lot of brokers, because what you're going to have to do is you're going to have to set up brand new brokerage accounts under the EIN of the business. And then you'll have to transfer your cash over into those and then start trading underneath the business. And so a lot of brokers will charge more because you are setting up a business account. Now, we've had clients basically go through and say, you know what, I'm going to keep my personal account and use some of the free stuff there, but do the trading on the business side. And there's ways to get around some of those fees. But remember, those fees do now become deductible as well in a LLC. Those are the three cons. And I'm going to tell you how to get around the first two of them, actually. But before we do that, let's talk about the other pros. First of all, the asset protection. In an LLC, and by the way, one of the benefits of LLCs is you can change how it's going to be taxed. Most people don't know that. But when I talk to people, clients, I say, I recommend setting up this multi-member LLC partnership first. And say, if you're doing really, really well here, let's say 2 to 3 years, we can just file an election with the IRS to have you treated as an S corporation. And that's just a piece of paper with the IRS. You're not changing the name of the business. You're not restructuring it. You're not changing the EIN. You're not doing anything except filing a piece of paper with the IRS. And so you get that asset protection in those LLCs, and it doesn't matter how you choose to be taxed, whether it's you taxed as a partnership, an S corp, or taxed as even a C corp. You still have that asset protection. 2, as I just mentioned, you have a choice in taxation methods. This is actually gives a business owner such as yourself a lot of flexibility, because you set up as an LLC, we start you off, let's say, as a partnership. And let's say the tax code dramatically changes so that partnerships are not favored anymore. Matter of fact, they're looked down upon. And who knows, C corps become the favorite tax-wise. And so all we have to do is file an election, be treated as a C corp. That's it. We do this at the beginning of a year, and we can change that so that we can put you into the most beneficial structure that there is for any given year. And you don't want to keep doing this year after year, or that's not going to make sense. And this may come into play. I haven't seen anything, so don't quote me on this, but after this next election, we might see some dramatic changes to the tax code. So I am always one to tell my clients, make sure you have flexibility in what you're doing so that you can change things. Number 3, there's a reduction in IRS scrutiny. Remember I said under the Schedule C, if you're trading as an individual or you're trading as a single member LLC, you've got to report those expenses on the Schedule C. And the Schedule C is the #1 most audited thing by the IRS. Well, what we're doing is we're trading in the Schedule C. We're getting rid of that in favor of a partnership tax return. And partnerships are almost rarely audited, period. S Corps, really same thing. They're extremely low percentages. And so the likelihood of having the IRS scrutiny on you decreases immeasurably. Now, let me address something that some people have said to me. They say, well, it doesn't matter because my returns are audit proof. They're perfect. I don't have anything to worry about. Well, that may be, but the typical IRS audit takes hours to do. You generally put in, what was the figure? At least yourself, you're putting in at least 11 hours into an audit yourself just to defend it. And time is money. Do you really have all that time to put into an IRS audit? And that's, I think 11 hours is probably minimum. And if you don't hire anybody and try to do it yourself, you could put in a lot more, 40 hours, 60 hours into an audit easily. And then they still may have more questions. It takes months to resolve an audit sometimes. So this is something that's an absolute benefit. Some people really don't realize the big benefit that it really is. Number 4, I said I'd return to this. What happens on a partnership return, a multi-member LLC return, or even an S Corp return is you pick up that home office deduction. Now, I mentioned with the Schedule C, trading as an individual or as a single member LLC, that home office deduction can get severely limited and possibly even eliminated. I mean, under certain conditions, it gets totally wiped out. There are no restrictions on a partnership or an S Corp. You can deduct the whole office deduction. So there's 2 different home office deductions. One is you can do $5 per square foot up to 300 square feet. So this is really the lowest, but that's $1,500 a year that you can get on your tax return just for having a home office deduction. Now, the home office has to be separate and segregated and used just for, in this case, trading. But you can get up to 500 a square foot for that. The other method is to actually record your expenses. We would take the square footage of the office and divide it by the square footage of your house. That gives us a percentage, and then we can take a percentage of your mortgage interest, real estate taxes, your house insurance, all your utilities, including cell phone and internet, HOA dues, repairs and maintenance, lawn care. I mean, there's a lot of things that go into a house, and we can take a percentage of them and write them off on your tax return. That can be a huge deal, and I'll show why here in a little bit. Number 5, I mentioned this a little bit ago, that if you're trading on your personal return and you're reporting this stuff on the Schedule C, the IRS has a problem with having a W-2 and being a full-time trader at the same time. They don't like it. They don't think it's possible. Well, what this does, by forming this partnership, this multi-member LLC, gets the trading off into a separate business. You keep the W-2 on yours. Now, the partnership is a pass-through entity. Now, what that means is all the income and the expenses come back to the partners on their personal return, but it does it in a cleaner way, and it goes through the Schedule E rather than Schedule C. And it looks like to the IRS you've got a W-2 job and you're investing in this other business. And they don't really care what it is, as long as you report what are called K-1s on your return, and they're happy. So it solves that problem. Number 6, we haven't talked about this, and this is kind of jumping ahead a little bit, but it solves the mark-to-market long-term, short-term dilemma. Under mark-to-market, what that does is that looks at your portfolio and your accounts in a totally different way. What happens with mark-to-market is you're paying tax on what you actually do. So if you give a brief example here, if you have a $1,000 portfolio or account, it's account value. If it goes from $1,000 to $1,500 in the year, you pay $500 tax on $500. Period. That's the actual gain. The problem is that's realized or unrealized. So even if you don't sell everything, you still have to pay tax on it. So for short-term traders who are constantly selling things, that's great because they're not hanging on to anything. So it doesn't matter. There's really no problem, but you can't keep long-term stuff. And long-term, I mean longer than a year in there, or else you start paying tax on the unrealized gains. So the reason this solves it is because now you can have a personal account where you keep the long-term investment stuff. Now, if you're investing in whatever for the long term, you can hold that on your personal side and it's not under mark-to-market. And then you can still get the long-term capital gains rate when you sell it. Do the short-term stuff under the multi-member LLC, the partnership, and you can still have mark-to-market there. And it really creates the best of both worlds. Under the LLC, you've got the mark-to-market where you're eliminating the wash sales and all the good stuff. We'll talk about that in a little bit. And on the personal side, you still got your long-term assets, your long-term holdings, and you still have the long-term capital gains rate that applies there. So really creates a great scenario for most investors. Number 7 here, there's a potential for a SEP IRA and a 401k. It has to be set up properly. There is a way to do that. I will tell you that if you're going to go down this road, there may be some extra self-employment taxes because retirement benefits have to be based on earned income, and trading income is not earned income. You can make $5 million in capital gains and you can't put a dime of it into any type of retirement, period. Nowhere. Not in a C Corp, not in an S Corp, not in a partnership, not even on personal level. I mean, if your personal return just shows like $5 million in capital gains, you can't even fund $6,000 for an IRA because it's not earned income. So there's some issues there with that, but it is possible actually to set up some retirement benefits. But we'd want to talk about the risk and the structure that has to go along with that. And number 8, the tax savings can pay for the LLC, and this is the one that's a surprise to everybody because this is the one that I try to convince people saying, everybody's afraid to set up the multi-member LLC. Well, I've got this other tax return. It's too complicated. It's too much. And I don't want to pay those extra fees. Well, the tax savings can actually pay for all those fees, including the broker fees, the tax prep fee, and the multi-member LLC fee. Let me show you how. You can get the government to pay for your LLC. This is a multi-member LLC, not a single member LLC. Remember, with single member LLC, we have problems. However, if you already have yearly trading expenses, and you're not deducting them now, the refund you get from actually deducting those expenses will likely, I'm going to change that to likely pay for the LLC fee with the state and the tax preparation fee. And I'm going to run some numbers here for you and show you. For example, let's assume a person lives in Illinois. Now in Illinois, you have to pay $75 per year for the LLC. Every year, cough up $75. And let's assume that the tax prep fee for the LLC is $600. That's a partnership tax return. You can still do your own personal tax return, whatever. You just got to put the K1s on it. But this is for the partnership. So you got a total of $675 in extra expenses. Now, assume this person is in the 35% federal tax bracket, and Illinois has a flat tax of 4.95%. So it's a total tax rate of 39.95%, 40%, let's call it. Now, what does all that mean? Well, if this person can have $1,015 in trading expenses for the year, they'll get a refund from the government to pay for the LLC. Now, wait a second. Go back to home office deduction. Remember I said the IRS will give you $5 per square foot for each square foot up to 300 square feet. If your office is 300 square feet, that's $1,500 just by putting that on the partnership tax return. You just paid for the LLC with the government and your free tax prep fees, period. Let me prove it. Here's our proof. Now, our trader has $675 in multi-member LLC expenses. Remember, that's tax prep. That's also the renewal fee every year in Illinois. And they got a tax rate of about 40%. So here's how that refund would pay. You got totaled expenses. Remember, your tax prep fee and your renewal fee are deductible. So now you've got $675 that are deductible, plus the extra $1,015. Call it home office deduction, or it could be something else. This person now has a total of $1,690 alone that they can deduct. That's going to save them at the 39.95% tax bracket, $675. That's a refund that they're getting. So they're getting a refund in this case that's exactly equal to their tax prep fees and their renewal fee for the LLC. So this actually can't pay for itself. It will, matter of fact, you will probably end up making money from the things that you deduct by being able to deduct. And also, remember all those criteria we talked about with trader tax status a little while ago? Now, this is my opinion here, because it's a gray area, but in my opinion, those criteria seem to apply more for individuals than they do for entities like partnerships and S corps. So if you're thinking about, well, I've got to do 720 trades a year and all that, maybe not. There's some slide there, put it that way. So here we've talked about trader tax status that allows you to deduct expenses. We've talked about LLCs or entities and how we can get the government really to pay for those LLCs. Let's move on to our third topic, the mark-to-market election. Now, the mark-to-market election is only for stocks and options traders. That's it. It doesn't apply to futures. It doesn't apply to crypto or Forex or anything like that. There are a handful of ETFs that do not apply, and the biggest one of those is SPX. SPX, I think NDX, and there's a few others, like 10 of them. They don't trade in New York. They trade in Chicago on the Commodities Exchange. And so they are treated like futures contracts instead of like stocks and options. So this doesn't work with that. It falls under futures, which has got a totally different tax structure. But anyway, any business can make the mark-to-market election provided those trader tax status qualifications are met. So if you're doing this as an individual, we go back to those criteria. As an individual, you have to meet those criteria, and then you can make the mark-to-market election. As an entity, such as a partnership or an S corporation, we may not have to make those or meet those qualifications. So we can just go ahead and make the mark-to-market election. We've been doing it for a long time, and the IRS has never said anything to us about it. Now, what does this do? The election eliminates wash sale losses. Now, for those of you who are not familiar with those, a wash sale occurs when you have a position in, let's say, Tesla, just to pick one. You got a position in Tesla. It doesn't matter whether it's a stock or an option, and you're day trading, rapidly trading, and you sell that position at a loss so you can get right back in to another position where you're going to make money. Well, that loss in the first transaction actually moves to the second transaction. So now you've got this loss moving in time. And just kind of make this a little simpler, those losses can keep moving until they cross over December 31st. And so you end up with losses that move into next year, and you're not getting those losses this year. This is a deferred loss thing. And so you end up paying more taxes now, hoping to get that loss back next year, and maybe get the taxes back. There's all kinds of issues with that, and I can think of all kinds of complications. I won't go into it right now, but that creates all kinds of problems for taxpayers. And you probably read some nightmares out there yourself. There's a lot published. What mark-to-market does, you pay tax on what you actually earned. I mentioned a little bit ago, if you have a $1,000 account and you earn $500 through the year, so you had a $1,500 account at the end of the year, you're going to pay tax on the $500, period. Wash sales don't matter. Now, it does matter as to your tax implications. It matters, sorry, it matters as to how this is calculated, by the way. You need somebody that can actually calculate this very well. There's not a lot of people in the United States who really know how to do this. The 1099-B that you get at the end of the year is absolutely worthless for calculating mark-to-market loss or gain. Also, and this is something that a lot of people like, this election eliminates the $3,000 loss limitation. Under normal investing, right now, if you're investing and you get capital gains or losses from the market, if you have a losing year, let's say I lost $20,000, I added up all my gains, my losses for the year, and I lost $20,000 for the year, I can only write off $3,000, and the remaining $17,000 carries forward to be used up against future capital gains or at another $3,000 a year. With mark-to-market, that limitation doesn't exist. If I lost $20,000, I get to write the whole thing off this year. I've done returns where I've written off over $250,000 for people. Actually, one return where we wrote off about $500,000 in a year. Hopefully that never applies to you, but it is possible. It takes away that limitation. And the reason for that, remember we talked about cash flow? The idea is to get the money back from the IRS as much as you can now so you can reinvest it or do whatever you want with it. And then whatever remaining loss that you have, that carries forward to next year to offset any W-2 income. It offsets pension income. It offsets anything with a mark-to-market election. So it's very, very useful. Now, here is the catch. The election must be made at the beginning of the year. It is too late to make the mark-to-market election for yourself or for existing businesses that existed prior to 2024. However, new entities can elect immediately, and this is something I was referring to earlier. What you could do, we're almost in October, so let's say we set up an LLC by October 15th, and we set up our trading accounts and we move our cash over into the LLC. We can make the election for that brand new LLC, that multi-member LLC, right now, as soon as it's formed. And so now we would have mark-to-market from October 15th all the way through the end of December. Now there's a double blessing there, because not only do we have mark-to-market for the rest of the year, but in our personal account, any wash sales that have accumulated to that point, if you let that account go dormant, because now you're trading in the partnership account, you let your personal account go dormant, after 30 days, those wash sales clear out and become regular losses. And everything starts to clean itself out. So this is kind of a time of year actually to do all this stuff and really reap some of the benefits for it. So the election does have to be made at the beginning of the year. If you want to do it for yourself, you have to wait until the beginning of 2025 to make the election for 2025. The only way to get it for 2024 is to actually create a brand new entity. All right, let's summarize this stuff, and we're going to get to the end here. First of all, trader tax status allows you to deduct trading expenses. This is on the expense side. Remember, we talked about cash flow. Trader tax status deals with the expense side, while mark-to-market deals with the revenue side. So those two really go hand in hand with one another. Forming a multi-member LLC provides asset protection, decreased audit scrutiny, and it could be free. We could take those deductions that you already have and may not be deducting and use them to actually pay for the LLC, plus even get more money back from the government. And then, of course, the mark-to-market election allows stocks and options traders to pay tax on what was really earned or write off entirely what was lost, which is a huge, huge benefit for stocks and options traders. However, you do have to have, as an individual, you do have to have the trader tax status qualifications met first. All right, things to watch for really quickly, because I know we're running out of time here, and Jeff will cut me off if I'm not careful. First of all, prop firm trading changes everything. For those of you who do not know what a prop firm is, it's basically where you sign up, you take challenges with the company, and then you go in and you invest their money. You may have some of your own in there, but you're investing their money and then they pay you. But what they pay you is not capital gains anymore, or gains at all. They pay you on a 1099 NEC, which means you are a subcontractor. And so now that changes the scope of everything. Trader tax status no longer applies to prop firm trading. You can't do mark-to-market under prop firm trading. You can on your own personal money, but not theirs. You now have self-employment tax involved. There's a whole list of things. So if you're interested in that, we can sit down and talk to you about that, but there's a lot of ramifications to it. Like I mentioned earlier, some options like ETFs, I should put ETFs there, like SPX are treated like futures contracts. So you cannot do mark-to-market on them. They have totally different tax structure. So you have to watch out for those. Here's a big one that we are running into a lot. Trading other people's money or even giving them advice can create problems. If I were to just right now in this broadcast tell you to buy alpha, beta, gamma stock, and I know there's not one because there's not a company like that, but I say, you know, I recommend buying alpha, beta, gamma right now, I just became an investment advisor, period. And I can get in trouble with the SEC for advising you. Once you start dealing with other people's money, even if it's your relatives, or giving them any advice, you now become a advisor, and you now have licensing problems, and you can get in trouble with the SEC, you can get in trouble with the federal government, you can get in trouble with the state government as well. Don't do it. There's a couple things that can be done, but again, we're running out of time. I would suggest giving us a call and maybe talking to us about that. For multi-member LLCs, make sure all your partners have some role to avoid the passive loss rules. So even if husband and wife teams work really great. If you're married, you've already got your partner there. And I forgot to mention this a little bit ago, partnerships are easy to form. It could be you, it can be your spouse and your spouse. You could be you and another family member. You could go 99-1. You own 99%, family member owns 1. The other partner could be a trust. It could be another business. A lot of things could be that second partner. So don't think because you don't know anybody else, you can't have a partnership. You can. But some of our clients have been concerned about the passive loss rules because that second partner, they want to be active and they want to be able to take the losses. So that partner needs to have some type of a role in there rather than just being a placeholder, if you will. All right. Traders Accounting Service, let me run through this real brief. We do LLC creation. We can create those multi-member LLCs for you and elect S Corp or partnership for you and take care of all that. We also do the tax preparation. We do individual tax preparation and tax preparation for all the entities. Bookkeeping, if you want somebody to keep track of the books for you, for your LLC or your business, we can do that as well. That makes it really nice at the end of tax time because we can take those books that have been kept all year long and we can prepare the tax return straight from that. You don't even have to supply any additional information. It also gives you a second barrier. The IRS likes it when you have your tax return prepared by a professional. It looks even better than that when you have somebody, a second set of eyes doing the bookkeeping on it as well. And we do consulting. We could sit down with you and actually talk to you about what you need with your entities and stuff like that. I know I'm racing a little bit. And then our packages, let me mention this. We do have a basic package. We've got a gold package, and we've got a platinum package. It has to do with setting up the LLC. It has to do getting the EIN, the operating documents, tax preparation, stuff like this. All of this is on our website. So I don't want to get into this too awfully much right now. But here's our website again. And I noticed Jeff just reposted that link in the chat. So please go get that free ebook. There's no commitment here, but if you'd like to talk to us, give us a call, set up an appointment. We'd certainly love to talk to you, and we can get the LLC set up for you and everything going and help you save some money in taxes. Okay, Jeff, now that I've exhausted myself trying to get through all that.
Right. It's surprising if you don't do speaking. It really does a lot. Yeah, but one of the things I was talking to Greg, who's helping me in the video part, and one of the things that he said that I thought I would share with you is how good of a job you do. So there you go. Not from my mouth, Greg's mouth. Greg is the one that said that. So good job.
Well, thank you.
We don't have a lot of questions. Maybe because they all have been asked before, but great job.
I've been trying to do this enough times so that I answer all the questions ahead of time. So.
Yeah. Well, thank you very much, Jerry. Much appreciated.
You're very welcome. I hope the conference goes
great. Says, this was very informative. Thank you. So
you're welcome.
All right.
Thank you. Bye-bye.
Prepare for ejection. All right. I like saying that. Okay. Let me go ahead and do this. All right. Real quickly, Greg, we are going to do a prize. We've got lots of prizes still.
I'm here for you.
Give away themselves. Before we do though, cmtassociation.org. Thank you for our sponsorship or your sponsorship. We appreciate it. A very good nonprofit. They do a great job. CMT, if you want CMT behind your name, if you manage money and you want to manage more, you want more responsibilities. Tyler talked yesterday about how having a CMT designation can be helpful for you. It's always eye-opening to me kind of how helpful it is, really. And they've done of course they're technicians, so they've done all the research on exactly how much it is, but there you go. Let's go ahead and go here, and Greg, let's do a prize. The next prize on the list is a book from Fausto Puglisi. This is going to be an ebook. Fausto came in and he talked about level 3. He does a really good job about talking about level 3. This book explains how to apply trading strategies of the acclaimed trader Fausto Puglisi. It's a step-by-step, and the author covers most of the common markets. We haven't done this one yet.
Is it really pronounced Puglisi? I thought it was Pugliese.
We should ask him next time.
Well, I know that Anne-Marie cleared something. I've been saying Anne-Marie Bain for years, and she said yesterday it's not that. I can't remember what she said it was.
Oh, okay. Well, there's two things. I'll write those down. We'll find out. We'll make sure. All right. Let's go ahead and let's just, if you don't mind, give me a number. That number can be anywhere between 1 and 8,021. I'm going to update and refresh the list after price starts. So if you haven't registered and you're watching us on YouTube, make sure to go register now so that you can be on the new list. We've got tons more prizes. Greg, what's my number?
3926, 3926.
Ooh, almost typed that in wrong. And that is Eddie Arnold. Oh, I didn't do that. So Eddie A. That's a pretty generic name. I think we can get away with it. And I'm sure Kelly didn't see it. So.
Kelly didn't hear nothing.
All right, I've made. Thank you for the assist, Greg.
You're welcome.
Let me go ahead and we're going to talk about Price. So thank you very much. Price Headley's been a great friend of Metastock. I remember he's the first big project that I did when we started, or when I started in BD, not when I started in Metastock, because that was 3 decades ago almost. But Price is somebody that I have a great respect for. I love the kind of mentality that he uses around the markets, and I'll let him talk more about that because I kind of feel like I steal his thunder when I do. But Price has been a number of times been rated top market timer by Market Digest. He's a member of the Traders Hall of Fame. You can find him at bigtrends.com. And Price, that's how I'm going to introduce you today. How'd I do?
You did fantastic, Jeff. Thank you so much. It's great to be with you all today.
Yeah. Also, we had, just on a side note, had some really good feedback on that podcast type interview that we did last week.
That was a lot of fun. I really enjoyed that. Thank you for having me on that too.
Some people may have said that it was the best one we've done yet. So
I like to hear it. We had some of our folks that we had sent out emails to saying they loved it as well. So it was a great time to just have a chat about experiences in the market and things. You know, you always got to be learning, you know, and that's really, in 35 years in the trading game, my philosophy is always still stay green and growing, right? So that's why I'm glad to be with you all, and thank you everybody for being with us today. Obviously, you got a ton of great speakers, fellow traders and trading experts, and so I'm just going to seek to keep that momentum going. I told Jeff I wanted to talk about cheap options, $1 options. Now, $1 is what they're quoted at. You got multiplied times 100 shares on each option contract. $100 or less to control 100 shares of stock. They can give you a lot of leverage, a lot of bang for your buck. It's been working really well for us across a number of years, but even in recent times, I've got trades to share with you, including stuff we just booked here the other day for some really healthy, outsized potential. Obviously, every trade has risk, right? So we can't just talk about the upside without saying the disclaimer that, yeah, you've got to keep your risk in mind. The information I'm sharing with you today is based on our proprietary research. It's intended for illustrative purposes only. It should not be considered specific advisory recommendations here. As everyone knows, stock and options trading have large potential rewards, but they also have large potential risk. You should only be risking what you can afford to lose. Obviously, we don't want that to happen. But the bottom line is that you must always account for your risk management. The past performance of any trading system or method is not necessarily indicative of future results. Do see our terms of use on our bigtrends.com homepage for more information here. Okay, with that behind us, this strategy I want to share with you all today has become our very favorite small account strategy among our Big Trends audience, because it targets not just doubles, it targets triples and quadruples. So it's looking for big leverage, and it's typically a week or less, sometimes 2 weeks, but not more than 2 weeks. So, but oftentimes it can happen very quickly. You know how these markets are moving, folks, and you can see why there's a lot of potential if you can get on the right side. So that's the biggest thing. And really focusing on, okay, if you're not on the right side, we're also going to talk about how do we get rid of non-performers, trades that are losing or going nowhere. That's important too. So we're going to walk you through the double confirmation indicator pattern. We're going to walk you through and basically really walk you through a bunch of examples, and then talk about how we get rid of the non-movers as well, and how you can try it out for a short period of time and let the system prove it to you. Don't just take my word for it, okay? I want you to see it in action and ultimately have you participate, take advantage of the system, and look at it always as a system. I never want anyone going all in on any trade. I don't care how well we've been doing. That's what I would attribute my longevity to in 35 years in the stock and options game, is that you never go all in on anything. You always take a risk managed approach. No one trade can ever make or break you. Let's look at a winning trade example that we just closed it out yesterday, right? I love fresh examples. I'm always amazed when people are just sharing months or years old examples. Let's talk about what have you done for me lately, okay? So this is part of our Grand Slam options program. The idea of Grand Slam, of course, is you hit a home run with the bases loaded, score four runs real quick. You can win a lot of games that way. And you can certainly do that in your portfolio as well. It doesn't take a lot of these to really make your, not just your month, but your year. So, so the idea here is that what we're looking at is 2 different indicator techniques. And so with the red indicator here is Larry Williams percent range indicator, or percent R. Okay, now I jokingly call percent R percent T when it does what I want it to do, which is I don't want it to be a range. I want it to be a trend, right? So percent R measures a scale. We look at a 0 to 100% grade scale. We want A+ stocks, right? We want stocks that are staying in the top few percentage and keep on making higher highs. That's what makes %R stay in these very overbought thresholds here. We do get some what we call retests along the way here. These retests are holding as support, okay? So the idea is that you want to, it's the 80-20 rule, right? And I know Larry Williams, he's a brilliant trader, a brilliant, really innovator in the trading space. And my philosophy is just that, look, when something unusual is happening, I want to take note of it. So the 80-20 rules we all know says the top 20% of whatever you're looking at will generate 80% of your results. It works that way, especially in options trading and in options buying, that the top 20% of your trades are probably going to generate 80% or more of your profits. And I know it sounds crazy, like, well, what about the other 80%? But the reality is those best of the best trades carry you as an options buyer when you're looking for a bigger upside. So then it's about just kind of cleaning up the noise, the non-movement, the somewhat against you movement, and not letting those turn into big losses, keeping the losses manageable, and then letting the size of your winners be much bigger the size of your losers. So what's our first action here? The second indicator, by the way, is the CCI. It's a commodity channel index developed in the early 1980s by Donald Lambert for the futures markets. I use it for big growth setups here. So when both %R and CCI both cross up into this breakout territory to the upside, that right there, I put an arrow on the left there. At the end of that hourly close, the first hour close, this was going back to the 23rd, this past Monday morning, was our entry point. And we're saying, look, Monday morning, we want to buy into FCX on the bull side. You can see, actually, we bought in right at the start of that next hourly bar there. And you can see initially, guess what? We were not getting paid yet. We were actually wrong. It drifted lower most of that trading day. Here's the rule. Don't panic on the first day you put on a trade. In this setup, we're saying the next afternoon, the next trading day afternoon, if we're down from where we got in this case, FCX, remember this is Freeport-McMoRan, copper and gold, right? We all know gold's been ripping to the upside, and FCX has benefited from this as well. Also, the China kind of exposure that it has, China stocks have ripped to the upside this week as well on the heels of aggressive easing over there, in addition to our Fed easing that we saw this past week. So the point of all this is that, okay, if by the next afternoon or subsequent afternoon, we're below where we got in, which in this case was maybe 45.5, then we're saying, then it's time to pull the ripcord and get out. That first day, yeah, we're down about $0.50 on the stock, maybe 1% on the stock. We're losing on the option, okay. But the structure of this is still actually pretty darn good. You can see the CCI also came in for what we call a retest later that first afternoon and gave us a key test point right into that same last low right there. So point of it is that it's testing. It's kind of broken out. Now it's pausing. It's a pause that's refreshing. And now it gaps up from 45-ish to about, you can see the open there that happened on Tuesday morning, close to $48 here. Guess what? We're getting our first target out at a double 24 hours later, the next morning, Tuesday morning. So the beauty of this is we're saying, okay, look, we know that when we can sell half of our position out at a double, that's the first target, sell half at a double. Why do we do that? You get your risk money back into your trading account. So look what we paid, by the way, to buy them. Look at what we bought. Back when the stock was 45-ish, we bought the October monthly 47 calls. The monthly options expire the third Friday of each month. So the October options will expire October the 18th. We're buying it there September 23rd. So we got about 4 weeks to go before the expiration, about 20 trading days. So you say, okay, look, we're looking for this thing to get moving fairly quickly. The idea of it is that, okay, we're buying a little bit out of the money because we never want to pay more than $1 or $100 to control each 100 shares, right? So we did pay $1. $100 controls 100 shares of stock that would have cost you about $4,500. You're getting about 45 to 1 theoretical leverage right when we get into this position. That leverage will typically go down as the longer you hold a position because you're losing some time value each day that you hold a position. It's just you're not losing it that fast when you've got almost a month to go before the expiration. So that next morning, we're out at a double on half. why do we only sell half at a double? Why shouldn't you say, hey, you can't go broke taking a profit. Why don't you sell it all at a double? Because we want to give it a chance to turn into something potentially much bigger. Once you've gotten your risk capital back in your pocket, you've freed yourself up, not just financially, but psychologically, to give it a chance to keep going. You can see after that exit that Tuesday morning, you can see basically not much happened on the stock the rest of the day, right? It flagged around, a little sideways pattern there. We said, don't worry about it. What's our next target? Our next target is a triple, a 200% gain. In this case, it gaps past our 200% gain on Wednesday morning. It opens, goes from 48, opens up near 51. So you're getting some incredible gaps in FCX as the institutional money flow is continuing to pour in the buying power, right? Because it wants to be a part of this metals trade, the China exposure, kind of all things, kind of all these rivers flowing together into a really powerful surge of buying power. We believe that that initial breakout back there on Monday morning was signaling that it was ready to go, but they don't happen all at once, right? You have to have some patience. You have to have a plan, a method to the madness to take money out of the markets gradually. So we end up getting beyond our 200% next target. We try to sell half of our remaining position at 200 and then the final piece at 300. As it turns out, we get the open up there at 335%. And then by the time we get the alert out for the last piece, we're up at 388%. Those are not to be expected. Usually we'd expect 100, 200, and 300% to be the target levels we're taking down. That would generate usually about $1,750 on $1,000 invested. If all three targets are hit, $1,750 in profits is our expectation on a winning trade that hits all three targets. Again, there's going to be losing trades too, so keep all that in mind. But we think we can control our risk a lot better and have multiples of this. In this case, we made $2,281 in gross profit before commissions, assuming you put in $1,000 into the trade. Which guess what? $1,000 at $100 per contract means you got 10 contracts in at $100 a piece to get you in for $1,000 before commissions. Right? Round trip on 10 contracts, $10 in, $10 out at most. In options these days, in commissions, you wouldn't pay more than $20 round trip in commissions. And as you get more active in options, you should be paying even less. But you can see the big aha that you should be picking up out of this first chart, and you will see it in multiple charts, is that overbought is not a bad thing. Overbought breakouts can be powerfully good if they stay in the overbought top 20% of their readings. And each time they test below that, we consider that kind of a key retest point to say, is it going to hold or not? You know, if that retest doesn't hold, it tells you maybe it's coming out of that top 20% of profile that gives us the bulk of our profits. So 80-20 rule, right? So the idea here is that when we talk about indicators, the bottom indicator on that last chart in the blue was the CCI, the Commodity Channel Index. I use it for big name growth moves up and also big collapses on the downside when it breaks down too. And then Larry Williams percent R, percent range indicator, the big trends way, which is to use not only the positive scale 0 to plus 100, but say we want the top 20% of readings to be bought when we get CCI and percent R breaking out together on that same first hour close. It tells you something fresh and new is happening, as then institutions are just like you and me as individual traders and investors, is that we're going to adjust to new data, to new things that are happening on the chart. Institutions have to do the same type of adjustment. So when we combine these filters together, it's like two rivers flowing into a more powerful river that you can take advantage of. I can't give all the settings of those indicators. You get that when you become a subscriber, get the full access to our settings rules and basically parameters about what to plug in. It's not your typical off-the-shelf parameters. So let's look at CCI and percent R in another full Grand Slam trade to hit all of its targets. This was one on MasterCard. This is going back into late August. As you know, they just recently got tagged, at least Visa did get tagged with a FTC saying that Visa had a debit card monopoly, and Visa got tanked this past week. We were in and out well before that happened here to the upside with MasterCard. So you can see, here we go, MasterCard is triggering the breakout on both the percent R and the CCI happening here. And you can see we're getting in, started this next hour when MasterCard's trading in the neighborhood of about $470. Now, here's the thing. $470, if you bought 100 shares of MasterCard, it would cost you 47 grand, okay? Not many people want to commit that kind of money to an individual stock, even as of a quality of MasterCard, right? Because depending on your total size of your portfolio, that might be way too big of a position as a percentage of your total assets. So point of it is that look what we're able to do. We buy back here in August 27th, we buy the September monthlies, the third Friday of September expirations now passed, but basically the 495 strike. So you can see that 495 call means we have a right to buy 495. It's just down here at 470 or so, right? So it's 25 points overhead out of the money. You say, well, that's like more than 5% out of the money. Does that mean that the stock has to go to 495 to get paid or higher? If you hold it to expiration and do nothing, yes. But if you're proactive, you can take advantage of this and actually benefit from it. Now, here's a great example of the time stop rule that manages to just barely hang in, keep us in there and allow us to end up making all of our targets. We paid 82 cents. It's $82 for each contract that controls 100 shares that controls $47,000 worth of stock. We controlled 47 grand worth of stock for just 82 bucks. Now, so of course, if we're buying, in this case, $1,000 worth, you're going to get about 12 contracts in for about 984 bucks. So we get 12 contracts in. We're trying to sell the first half of those, 6 of those 12 at the double target. Notice initially when we get our breakout, initially it goes up that day. Then the next day it ends up settling back down midday, but by the end of the day, it's right back to where we got in, maybe just a few pennies above as we do our check right before the close. We say give it another day. So that was critical. That intraday it was below where we got in that second day, but it reversed back up enough to say it merited to be held at least one more session. That next session is where you got the gap up, and then you got the second hour tag up there near 480, just under 480. So think about it. The stock has moved less than 10 points, about 2% on the stock, good for 100% gain in the options. You know what we do. We sell half of it at a double, right? Risk capital is back in your pocket. So think about that. 82 bucks a contract's now worth 164 bucks a contract at a double. You sell 6 of those at the double, you get that risk money at the 984 back into your trading account, and you've got 6 contracts left for the proverbial free trade. Later that day, it ticks on up a few more points, and we get the next target. So target 1 was a double, target 2 is a 200% gain, and then the following morning, target 3, the 300% gain. The highest the stock got was about 485. Think about that, 15 points on a 470 stock, barely over a 3% move, good for a 300% gain in the MasterCard options, which are still out of the money by 10 points. That's an eye opener to folks to say, oh, I don't have to wait. I don't have to wait for it to get above 495. If it happens quickly enough, the acceleration phase of this will actually get your out of the money options less out of the money. You will pick up what's called gamma, helps you pick up deltas, and that means all in all, you don't need to know the option Greeks. You just need to know that catch a quick move, you can get a lot of leverage, sell half at a double, the quarter of your original position at a triple, the final quarter at 300%. That generated $1,722 in gross profit on $1,000 maximum investment. We said 984, right? So you can see we were in on August 27th, we were out August the 30th. Okay, so just during that last week of August, we weren't in that trade, but about 4 days total, right? So it's a beautiful thing to know you don't have to hold these that long to get potential doubles, triples, and quadruples. So the amazing thing is even stocks like Apple can get you there really quickly. I mean, Apple, $3 trillion plus market value, the biggest US stock out there, still can move like a growth stock. This was back in June when they announced that AI meant Apple Intelligence. As you know, the new Apple 16 phones are now getting shipped out, and they include that AI Apple Intelligence feature in the new phones. It'll be interesting to see how they hopefully take advantage of AI features and how you can too. But the bottom line is that when they started this process, you can see we were already picking up the breakout back here in June when both of these together broke out on the same hourly close. Now notice, we'll never be catching an exact low. We don't want to. It's like if you were sitting on a rocket ship that was going to take off and you're not sure when it's going to take off. Well, when it starts to take off, you'll know it because there'll be a powerful thrust, and you want to make sure that that power is dramatic, right? You don't want it to be a weak launch that crashes you back down. You want it to be a powerful launch that can keep on coasting on its own momentum. So the more powerful, in our view, the better. This is why we need both of these indicators to signal powerfully together. They're both crossing up on that same, in this case, first hour close, and that was stock trading just over 200, maybe 201 to 202. We're buying almost 10% out of the money. We're buying the 220 strike calls out to the July monthly, third Friday of July expiration. Look at what we had to pay, only 65 cents, 65 bucks a contract, 65 bucks to control 100 shares of stock that was worth over 20 grand. Right? So guess what? That's generating the opportunity for a lot of leverage. Our leverage was so great that the very next hour, when the stock went from about 201 to about 204, about 1.5% move up in Apple in an hour, good for 100% gain. Those 65-cent options were worth $1.30. Guess what we did? We sold half of it. There's loads of times where you go back and say, man, I wish I hadn't sold that first half. It kept on going to much bigger gains. But there's also times where you're glad you sold half at a double if it does come on back down. It can still, even if the second half sold at a break even, you can still average a 50% gain if you sell half at 100%, half at zero. That's still a 50% winner, even if it comes back down to where you got in. So the point of it is it gives us a lot of flexibility and gives you a lot of ability to also just keep riding and not being too quick to take all of your money off the table. I see way too many traders who have what I call scar tissue. You basically have seen where you've left money on a winner turning into a loser, and you're like, I won't do that again. I'll go ahead and book that winner so it can't turn into a loser. That's not really trading to win the biggest and the best that you can. That's basically scared trading. We don't want that. We want to basically say, look, there's no more fear when you've sold half of it out at a double, right? Your fear is gone because now it's basically like even if the other half went to a total wipeout, you're still at a break even on their whole position when you sold half at a double. You see where I'm going? So from this perspective, we say, okay, look, we're in this mode of just saying, so basically, we were looking at how we're going to basically focus on this whole process and say, okay, let's continue to give ourselves a chance to let it turn into something bigger. So the next piece did get tagged up there at 200%, and then you see what happened. It moved so fast by the time we're getting at our 300% target that it was getting booked here when we're almost to the strike price. Now we've gone from the almost 200 up to 216, up about 8% on the stock. And look at this final target here, 553% on the last quarter of the position. It ended up effectively generating over $2,100 in profits on the gross profit in and out of those three legs. Do you see the pattern here? Do you see what's happening with the percent R? See why I call it percent T? The trend, it means that you're making higher and higher highs and higher lows. That's an uptrend, right? That's not a range. That's an uptrend, right? And you can see that CCI does even have what looks like a little retracement retest in here right near a little getting ready to launch again to the upside. So staying overbought is powerfully bullish when we find these trades that are checking the boxes here. Not all trades are going to hit that 300% target. Here's some that didn't make the final target. We're still nicely profitable. This is one we did on Carvana, CVNA. Remember how I mentioned if it second half goes back around break even? This is about what happened here. In the second half, we even stopped us out with some slippage a little bit less than we got in. Okay, that's the time erosion that can happen on a volatile name like Carvana. But the key is, look, both of our indicators, percent R and CCI, both launching here, telling us, okay, that first wave up, good for the double, the 190 calls. Look where we were getting in. Stock was in the mid 140s, about 146, 147. And we're getting into a 190 strike call. In the old days when I launched Big Trends 25 years ago, I was mainly focusing on in-the-money options on my own option buying because I wanted to make sure I was taking a more risk-averse approach. And basically, we're in a situation here is basically, okay, look, get that first launch, get that first double on half, and free yourself up financially and psychologically and give it a chance. As you see, we sold it out near a short-term high, and then the stock went into this sideways mode. Well, you know what sideways means if you're still in out-of-the-money options. Sideways is not good news for an out-of-the-money options buyer, right? You're stuck waiting and waiting for a period of days to where finally we get triggered out. We have a trailing stop back at break even once we get a double on half, and then with some slippage, we end up down 11% on the second half of the position. If you had not sold the first half out of the double, you'd really be kicking yourself, right? But look, make 100% on the first half, lose 11% on the second half. You add those two halves up, divide by 2, you're still at about a 44% gain on the whole position, okay? Not bad for something that didn't end up firing quite as well as we had hoped to make 44% in about a week, right? So a week and a day. And on August 15th out on August 23rd. So you see that was a $490 profit overall on the trade. So it didn't do what we wanted. We still did fine by my standards, and I think by most people's standards. Of course, in all these examples, past performance is never a guarantee of future results. Future results will vary. Here's one with Best Buy, BBY, right? BBY signaling. And what I love about these examples is that there are times it's going to happen where you get in, both the indicator signal here, you get in, and then initially you're wrong. We're wrong, right? We bought, when the stock was about 79.5, we bought the 84 strike calls, almost 4.5 points out of the money, roughly about 5% out of the money. And you see, we paid $75 per contract, right? So you look at this and say, okay, well, you're buying it at 79.5, and then look, hours later, near the end of that first day, you're down to about $78. You're down about $1.50 on the stock. You're down 2% on the stock. Oh no. Well, guess what? We're saying, look, this is still kind of checking the boxes for us of the retest is holding into this little test point that's happening into these lows here. You can see kind of just hanging in there. And this is kind of like the normal pause that sometimes is needed to refresh. You don't want to wait for that retest necessarily. In the old days, I might have waited for the retest and then I'll get left behind on names that launch. The rocket launches and it never comes back to give you a chance back on the rocket, right? So we want to make sure we're getting on board and not missing out on some that are just never going to test. They're just going to keep blasting to the upside. But in this case, it does test. Remember, we would not get out on the first day anyway because there can be some noise in there. We're waiting to the end of the next day, but you can see it's reversed back up, and by the end of the next day, it's above where we got in. It's up to 80.5 at the end of day 2. The gap up at the start of day 3, it opens at $83, right? We're almost to the strike price of 84, and you can see we're getting our double target on the first piece, 106% actually, as we sell it into that gap higher right off the open. And then you see it starts drifting down, and we have some trailing stop rules, and as it turns out, it hits that and knocks us out at 61% of the second half. So 106 and 61 adds up to over 80% gained on the whole trade, $836 in profit on a $1,000 maximum investment. Target did a nice job of hitting our first and second targets, didn't hit our third target for Target Corp, TGT, the big retailer. But you see here that we're looking at a situation in which, okay, we get both of these signaling and we get into a little pause on day 1, right? There's our entry and we're basically stuck in the mud day 1, okay? Then it starts moving like we like. Then it takes a pause right before, kind of starts to reverse back up and then gets the huge gap up. The big G, right? That big gap in our favor is what really turned the trade to the upside, got the double and the triple in that first hour after the big gap up to almost 170 at the high of that first hour. We were still 10 points out of the money, right? We bought the 180 strike calls, and this is one where you see took advantage of the gap, 100 and 200%. Then as it trailed back down, our trailing stop was hit 105%. Whole trade generated about $1,200 in profit. So give or take. So you look at that and say, okay, look, this is where you're just looking for patterns here. Not every trade is going to win. Let's look at a trade that didn't work. Here's one that didn't work on floor, FLR. Actually, it got us out at our stop rule, and then it actually ended up working after the fact. But that's okay. It'll happen sometimes that way. But you can see all these show you that, you know, when you together here, we're saying, look, floor, the big construction giant, stock's about 34.25. We buy the 37.5 calls. End of August out into the third Friday of October at about, as you can see, a lot of extra time here to go before the expiration. And we only paid $66 a contract. But you see what happens. It starts to go and then it ends up flatlining and coming back down a bit. And by the end of that next day, it's a little below where we got in. We're like, hey, you got to follow the rule. and we're saying, okay, follow the rule, get out. We took a just under 17% loss, 16 2/3% loss the next afternoon, and said, okay, you know what? If you can lose small and win big, even if it ends up working out like this one might have, like, that's fine. We'll take small losses and bigger gains any day of the week and kind of stick to our knitting, right? Stick to what's really checking the boxes. The ones that rip, like we talked about, the rocket ships, like an AMD trade here that got all of its targets, it never gave a retest, certainly not until we were already booked a double in the first half. You can see the breakout happening right after that first rocket launch in the first hour's big green candle means we're closing up here into the high of that first hour. We're buying at the start of the second hour, right? So we're buying here, and you see the stock's trading about 185. We're buying a 260 strike call, you know. Of course, you know, with semiconductors haven't been so hot, options were not cheap, and yet they still kept ripping to the upside. The 260 call got more valuable as the stock went from 185 on up to eventual target on the final piece hit about 210, and we're still 50 points out of the money. You're still 20% out of the money, and you say, man, that's amazing that you can see 110% on the first piece when it gaps up the next morning, then 200 and 300% the second morning. 48 hours we were in that trade, and not counting any weekends. If there were weekends in there, I think there was. But you look at that and say 48 hours in that trade, and yet we're making $1,700 in that total of 2 full trading days, from one morning to 2 mornings later, trading day terms. So you think about that and you say, that's the power of not being scared by buying a well out of the money option, because as it gets more and more close to the strike price, especially with not much loss of time premium, because you're just getting near verticality, right? You can see it on the price chart, right? The higher highs and the higher lows. You can also see it on the staying over bought mode here. We stay over bought on those 2 key indicators, percent R and CCI. It's exactly what you want to see to say, hey, somebody's buying it. Guess what? Institutions are pouring on the gas. They're putting the pedal to the metal, and we're riding for those bigger targets on at least part of our position. So you look at that and you say, so, you know, okay, you're just showing me individual trades. What happens if you looked at your whole performance? And again, you got to always remember, past performance will never guarantee future results. But if you take our Grand Slam options all the way back to inception, when I was first telling my big trends community about this methodology, we're going back to the beginning of 2017. You can see through today on all closed trades, a $5,000 account would have grown to over $40,000. It'd be $35,899 in gross profit. That adds up all winners and losers before commissions, before subscription investment. But here's the thing. This is assuming that we do no compounding. We're saying just put $1,000 into each trade. We're never adding to that. We're never saying, hey, now that your portfolio is up over $40,000 gross, that you should now go to $2,000 a trade. We're saying, no, just stick with $1,000 a trade. You'll still be happy. You can see, obviously, your percent risk per trade has gone down dramatically from the starting $5,000 value. Now that's up a lot more than that, right? So I like the fixed dollar amount investment per trade, because if you keep on scaling up your size, that works while it's in a good run, but when you get a drawdown phase and you've scaled up, it's almost like you give back your profits too easily. So we're just using the fixed dollar amount of $1,000 a trade. You could do this strategy with as little as $400 committed per trade at most, because we want you to get at least 4 contracts. And I encourage you, when you start, to start small like that, and then as you gain confidence, you can always build it over time. Okay, so past performance never guarantees future results. The future is going to vary, but it could be better or worse than this in that same period of time looking forward, right? But you say, what have you done for me more recently? Performance from 2023 until now is a near triple in a gross profit. You can see a $5,000 account would be worth $14,960, and that would add same $1,000 per trade, nearly tripling, and again, before commissions, before subscription investment, here in about 7 quarters, right? All of last year, and then the first 3 quarters of this year through today with all closed trades. So the point of it is that while past performance never guarantees future results, we're all about saying, look, what you can count on from us is that we're going to continue to follow our system consistently. So we send all of our subscribers real-time trade alerts to Grand Slam options whenever the strategy triggers a brand new signal. But here's the thing. We don't so once you learn the system, you'll be tempted to say, oh, there's loads of other signals you guys don't take. Why is that? Because we do another layer of analysis. We call it profit factor filtering. And we do this where basically we say, look, we want to study how the past history has been for that particular stock. If the stock has not worked with this methodology, you can bet we're not going to assume it's going to start magically working, right? We're looking for stocks that have worked and worked very well with this methodology over time, right? So that the ones that have worked well, while there are never any guarantees about the future performance relative to past results, it's saying, look, I say that stocks are like people. They have unique personalities. We want to trade those personalities that we can count on from our system that are likely to, if they won't be exact, but they might rhyme. They might have some similarities in the patterns, even if there's going to be wins, there's going to be losses. We all know that. But it's looking for those kind of recurring patterns that we can implement time after time after time. So we call the portfolio Grand Slam options. Grand Slam options will typically get in the neighborhood of about, we'd say 6 to 8 trades a month. About 8 trades a month is our goal, because we'd like to do over the course of a year almost 100 trades in a year. But in 3 months, we would hope to do in the neighborhood of about almost a couple dozen trades, right? So I want to give you just a 3-month access to the service so you can try it and let the service prove it to you. And I'm hoping that this is making a lot of good sense here. I'll come back and take another look at the charts if you don't understand the methodology. But let me first tell you about this super special we just set up for all of the Metastock community here to take advantage of this, is that we're giving you 3 months of trade alerts for a really low entry point, but we're going to give you a bunch of additional resources. We're going to give you access to the Grand Slam options settings and rule sheet. The settings and rule sheet gives you the specific parameters to follow along those indicators. It's not just the % R and the CCI. There's more layers I didn't get a chance to talk about. Just some extra filters to make sure that you make sure you're on the right side of the trends. And then I do weekly video update. I do weekly video training where I'm constantly training and teaching you about what I was looking for when we made this trade, what I was thinking when we're in it, why we got out of it, win, lose, or draw. And so that you never are left hanging. You feel like you're always learning. I'm a big believer in what the Lee Iacocca quote said. It says it's always better to be green and growing than ripe and rotting, right? You never want to assume in the markets, especially in something as fast moving as the options markets, you never want to assume that you've got it all figured out. It's almost like a Murphy's Law, where by the time you think, oh, I've mastered this, I'm a pro, I'm gonna make so much money, I'm gonna join Bill Gates and Warren Buffett in the Billionaires Club soon. As soon as you kind of have those type of goals or thoughts and expectations, it's okay to have goals about growing, but it's like, keep yourself sane, keep yourself rational. Don't get too high or too low. It's almost like by the time you start kind of having that flying too close to the sun sort of ego and belief, can get you in a lot of trouble. We want to stay humble. We want to stay always sharp, keep sharpening our saw so it can be that much more effective with our indicators and finding the next opportunities. You also get access to me and my analyst team via a dedicated email address we give you, where if you're like, hey, I don't understand what you guys are looking at here, or you have a question about the methodology, we're there to help. So we'll always kind of keep guiding you through so that you keep learning and while you're earning. So if you bought this off of my website at bigtrends.com, it'd be a $297 a month list price. Times 3 of those months will be $891 you'd pay over 3 months from the website. But I'm going to make it a lot more attractive than that. I'm going to say, look, let's go ahead and give you the trading resources, because I'm a big believer in those educational bonuses. Let's slash that $891 down to just $177. If you think about it, over 90 days, that works out to less than $2 a day. Okay, the idea that, look, you can learn, you can get plenty of trade opportunities, and of course you can easily pay for that. Just one of those, if you're trading $1,000, I've showed you numerous examples where we made $1,200, $1,700, over $2,000 on a single trade in recent times. So the idea, including that latest one with Freeport McMoran that made over $2,000 just this week. Okay, so the point of it is just one of those winning trades, it hits its targets, can easily pay for this many times over, give you a massive ROI on your $177 3-month trial to Grand Slam options. Where do you go to get that? you go to this link here. It's members.bigtrends.com/meta. And before I go look at that page with you, and Jeff, I appreciate you posting that up there. Remember, it's not a www link, it's members.bigtrends.com/meta. That's your member site access link too. Members.bigtrends.com is how you get to your educational resources, the weekly video training, etc. You'll get, when you get signed up, you'll get a login information to actually go study past Grand Slam weekly updates. You can start learning right away as soon as you get signed up and be ready for our very next trade as early as Monday morning. But the bottom line is, it's great to educate yourself first and be ready to go, hit the ground running come the start of next week. But the point of this is, like I said before, FCX, right? You say, what's 177 bucks do for you? Well, again, one of these trades that hits, and this one was above the expectation, right? I said if it hits 100, 200, 300%, the way we recommended on a full $1,000 invested, it would be about 1,750 bucks in gross profit before commissions on the 3 targets getting hit at a double, triple, and then a quadruple. This one was outsized above that because we got the bigger than expected gap on the final 2 targets. So we didn't get a 200% gain on the next level. After we sold half at a double, we got 335%, then 388% above our 300% usual final target. So that was definitely an outsized. Don't expect that. Past performance can never guarantee future results in any of these charts. But the idea is, look, only sell half because you want to give yourself a chance for that bigger run or that bigger home run, that Grand Slam, clear multiple bases all at once. Think about that on just if you were trading a $5,000 account. I mean, if you're trading a $5,000 account, you put $1,000 in, and you make $2,200 plus on a $5,000 account, you would already be up 44% in your portfolio of $5,000 for just that one single trade. 44% is most people's year in one single trade, potentially, right? If you think of it that way. Obviously, the potential is great. Obviously, the risk is always there. We can lose some part of what we put in. We don't tend to ride things to the bitter end. So that's the advantage, is that we'll typically avoid putting a trade right on in front of earnings, typically, because we don't want the big gap against us, right? We want to always be able to manage our risk. So that's important, is risk management. That's what's allowed me to stay in the trading game for 35 years and counting, is kind of never taking that all in, never taking that massive risk. Saying, look, everything's measured, everything is managed so that you can stay in the game for the long haul and keep growing yourself. Like we said, if you look back over the longer term history of this, you're saying, okay, go all the way back here to the beginning of 2017. Oh, by the way, there's the COVID 30% drop in the market in there in 2020. There's the 30% drop in the NASDAQ in 2022 in there, right? And of course, the subsequent rebound back up the last year and 3 quarters, right, for the most part. But the idea is that regardless of market conditions, we're going to find both call and put opportunities. Of course, in bull markets, we'll find more calls, and bear markets, we'll find more puts. But there's usually a bull market and a bear market somewhere. You just have to know where to look. You can see a $5,000 account grew to over $40,000 gross, $35,899 gross profit, adding up all winners and losers before subscription investment, before commissions, looking back to the beginning of 17 through today on all closed trades. And this assumes we never compounded it, right? We just kept with the same $1,000 a trade from the beginning to now, right? That not assuming any growth in what you're putting in. If you say, what have you done for me more recently? You see, since the beginning of 2023, just in the last year and 3 quarters, up nearly triple, 199% gross return. $5,000 account grew to 14,960. So 5 into almost 15 gross before commissions, before subscription investment. As you know, commissions have come down dramatically, and we're only talking about $177 to try it for 3 months, right? So try it, and I think you'll like it, and I think you'll want to lock in a lot more time as we go. Now, when you go to that link, I'm going to go there for just like a few minutes, since I have a few extra minutes before I'll hand it back to Jeff in about 5 minutes. But the idea is that when you go to that link, it's members.bigtrends.com/meta. Thank you, Metastock, for having me today, and Jeff and the team there at Metastock. Appreciate you. And Metastock's a great platform to do a whole lot of testing, a whole lot of evaluation, and ultimately a whole lot of scanning to find these types of situations over time. But you can see here, you get it for $177. When you go to that link, members.bigtrends.com/meta, this is what you'll see. Really clean and simple, not a bunch of hype, a bunch of text, a bunch of why you got to buy. You're at that point now where it's like you can see the value here. It's tremendous. 3-month alert service, we've taken the $891 already down So no promo code to apply. I've already taken down more than $700 off of the usual three-month subscription to just $177. Like I said, just under $2 a day to try it for the next 90 days, which is beautiful timing, right? Because this will take you essentially to about the end of 2024, right? Take you to December 20, right after Christmas of 24, right? So that'll position you to evaluate it, to take advantage of what I think will be a lot of great opportunities, both into the earnings season, ahead of the election, after the election, and into the holidays. Typically some pretty good seasonality there. It's a pretty good opportunity, and evaluate it. And then I think you'll want to then lock in longer term opportunities to lock in Grand Slam options for 2025 and beyond after you evaluate it for the next 3 months. You can see also, we'd give you the opportunity here to add a great value add here if you want. You can hit this add to order button if you'd like to get a lifetime access to my Gamma Options Bootcamp. I mentioned gammas and deltas. I teach about basically why these things move so fast in this Gamma Options Bootcamp. It's a multi-hour course. You can add that on for only 77 more bucks if you hit the add to order button, and that would take it up to $254 total with the boot camp added for just 77 bucks. It's usually a $295 value. You're getting that together with it for just $254. But you see, you don't have to have the boot camp to get the trade alerts and to get the weekly video training from me on what trade alerts we called out. Just 177 bucks locks it in for the next 90 days, the next 3 months. So you go down to the bottom of that page, you see you agree to the terms and conditions, which are hyperlinked there, and also at the bottom of the page, hyperlinked there. But you can see you can put in your credit card information on that secure page. We're in our 25th year serving our Big Trends community, so we're there for you to make sure we protect your information and make sure you're very satisfied with your experience, and not just satisfied, but ecstatic with the value we're giving you here. But you can see the PayPal link is the way I do a lot of my online transactions. Click the PayPal link. It'll do, once you agree to terms, click PayPal link, a few clicks to log in, decide what payment method you're using, bang, 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 and boom, you're good to go. Lock it in. This is not a recurring subscription. It's just a try it for 90 days for 177 bucks for the next 3 months. After that 90 days is up, the subscription will just expire. You will not get charged again unless you tell us, I would like to lock in a longer term value, which I think you're going to want to do. But you know that if you forget about it or whatever, you're only in for 177 bucks just to try it out. We don't do free trials. I don't believe in free trials because I find that you will only invest your own mental and emotional energy in something that you've actually invested some actual dollars in, to have some skin in the game, if you will. If you don't put anything into it, how much focus do you think you're going to put on a $0 trial? Probably zero focus and not really care about it and not really ever take it seriously. This is something you owe to yourself if you want to get growth into your portfolio. So go to that link, and you see you can call us toll free, by the way, at our 800 Big Trends number. It's 800-244-8736. You can email my customer service team via clientcare@bigtrends.com if you're having any problems whatsoever getting your order locked down for that awesome savings and making it just 177 bucks for the next 3 months. Let me go back over to Jeff for a few minutes, and he can also talk to if we've had any questions that I need to answer, but also he can talk about the Big Trends toolkit for Metastock, which is something that Jeff and his team did a phenomenal job of creating all these great scans and indicators and resources that you can use to see what I see. So Jeff, let me hand it back to you, sir.
Sure. We do have one question before I let
Okay.
you go. Tyett, thank you for your interest. He wants to know, is your strategy only 1 month call options?
In this strategy, it's only about a 1 month option. It can be a call or a put. So obviously, more recently, we've had a pretty bullish market. We're finding more calls than puts, but we will find puts from time to time, and we'll follow the same parameters. Double on half, get your risk capital back, selling half out at 100% gain, then go for the triple and the quadruple. So basically it's the same goals on growth for the puts as well as calls. It's just that if the opportunities are not there, we're never going to force a trade. We're only going to take a trade that it says the structure is right. So we don't just look at pure price action, pure prices of a stock. We look at the structure based on those core indicator setups to tell us that this is a big uptrend structure. This is a big downtrend structure. Now you want to leverage it with these out of the money option purchases. Otherwise we stay away.
Cool. That was all right. Members.bigtrends.com/meta. Type it in. If you have questions, call them 800-244-8736. Thank you so much, Price.
Jeff, it's always a pleasure. I really appreciate you having me. It's always so much fun. Thanks so much.
Yeah, well, we love having you, and we'll keep. Thanks for coming. Thanks for spending the time with us.
I hope you'll tell them about the Big Trends Toolkit for Metastock too.
Oh, we're gonna do it. It'll be a little quicker than usual, but
thank you.
Thanks, Bryce.
All right.
Cool. All right, let me go ahead and do this. Do this. All right, and as you can see, Big Trends Toolkit number 3. We've actually had, this has been a super popular product, and it's been on its 3rd revision right now, which we just released actually a few years ago. So one of the things that we kind of wanted to do with this one, obviously there's a lot, being the fact that it's such a mature product now, there's a lot of systems that are in here. All of these are methodologies that are included. They're actually packaged as part of the system. They have expert advisors, scans, explorations, all that kind of stuff that are ready to go out of the box. In fact, there's a total of 17 of them, as you can see right here from the thing. One of the things that we kind of did that was cool with this one, and I don't have a slide that really shows this, but we actually took, for the last version, and we took created acceleration band spaces on prices, actual parameters, but we also included with the newest version what we call a BTTK score. And with that particular system, it's very unique in the way that it takes all of Price's favorite indicators and scores them and gives you a reading of bullish or bearish. And the more bullish it gets, the more indicators line up. It was an idea that I really, really liked. We built the whole system around it, but I also included it in all of the scans. So if you're running a scan to find stocks that are moving efficiently, you can rank them by the score. If you're looking for stocks that are having explosive moves to the upside, you can rank them by the score. And it was a lot of collaborative effort to kind of get to the 3rd version. But man, Price is such a good technician. He's been working on it for a number of years. And if you have Big Trend Toolkit 1 or 2 and you haven't upgraded to 3, for the scoring alone, I'd recommend that you do that. You want to do that by calling us because we'll give you a break on price. You can pay for it as a one-time cost. Because you've owned one of the earlier versions, there's actually an upgrade fee that's associated. It escapes me exactly what that is, but it's a big discount. So if you have one of the older versions, you haven't upgraded yet, go to 800 or call us at 800-882-3040 or go to metastock.com/salespchat. This includes all the methodologies of a top market timer, somebody that's in the Traders Hall of Fame, somebody that really focuses on finding the big moves. One of the things that Price talks about is how he likes to step over the small moves to find really the stocks that have explosive moves. And that's what he's kind of built his whole career around. He's done a great job with it. So you can call, normally if you just want to buy the Big Trend Toolkit, it would cost you $6.99. Here at the conference, it's going to be $4.99. We'll give you a 30-day money-back guarantee of it. If you haven't started using Metastock yet, we'll give you a 30-day free trial to it. To help you get started, and give it a go. If you don't like it, you're going to get a refund. If you like it, it's going to help you find better trades and be more successful. So 800-882-3040, metastock.com/salespchat, metastock.com/conf promo. There you go. Ty, thanks for the question too. We love questions. If you have questions as they come along, let us know. Mr. Lewis, let's go ahead and give away a prize. Real quickly.
I am all set.
All right, very cool. Oh, actually, we're doing okay on time. I kind of rushed a little faster than I needed to.
Okay.
This prize.
I noticed that Leibovit is here and ready to roll, so I'm sure he'll be ready when you hand it off.
And by the time we get to him, it's going to be 12:01 or 12:02. You know how that goes.
Okay.
So, or 1:01 or 1:02, depending on where you're at, right? So this one will be a report by Serge Berger reviewing 4 big potential market movers by Q4. It's a special report that he's put together. It's a value of $297. And if Greg picks your number, actually, I should say if Google picks your number, you just won. So Greg, the number is going to be anywhere between 1 and 8,021.
The number is 726.
Ooh. No. Okay. See.
So if you registered early, that was good for you.
That is a Severio P in the USA with a Gmail address. So
What does the P stand for?
Well,
I almost got you.
privacy.
Oh, that was good. Good comeback.
Now tell everybody how they can get a 3-month trial on Metastack while I make a note of this.
Oh, absolutely. If they go to metastack.com/conf promo, they'll see all of the deals that we've been talking about for the last 4 or 5 days, including the ability to get an extended trial of Metastack, real-time or Metastack DC, including market data.
Okay, and that was exactly perfect amount of time. Thank you.
Okay, I'll let you.
All right, very, very much appreciated. Before we go on to the next speaker, I want to say thank you to the AAII, the American Association of Individuals. It's only going to get worse from here. We've been here for 5 days. AAII.com, American Association of Individual Investors. Great partners of us. We really appreciate the work that they've done. They're a nonprofit. They've been doing it, I think, since the 70s, maybe earlier than that. They do the AAII investment survey. They do all kinds of research reports. They also have an active investor division, which is, we work a lot with Ray Rondo and kind of the work that he's doing, AAII.com. And then our next speaker is Mark Leibovit. Harry asked a really good question. Harry wants to know how long are the offers available? 1 week. They're available to the end of next week. Don't want to put a huge amount of pressure on you. I know we're talking about a lot of different things. If you have questions, give us a call. We'll be happy to talk to you about them. 800-882-3040. Thank you for that question, Harry. Another question that came in before I get to Mark, actually, is recordings. Where are they? YouTube.com/Metastock. We're streaming all of the recordings up. So there you go. Mark, I can see you. How are you doing? I can't hear you, though. I'll send you an unmute request.
Hear me now, right?
All right.
I'm here.
Now, I haven't properly introduced you. I think I should. It's actually literally part of my job description. No, I'm just kidding. I don't have one. But Mark is a top market timer. He does a lot of work with volume analysis. He does actually. Do I have this here? I might not have it. Nope, I don't have it. He's been rated so there's a company called Timer Digest. They do a lot of timer, like you send your trades into them and they tell you, they rank them. Price Headley did a lot of Timer Digest contests. Mark has also won a ton of them. So I'm going to go ahead and let's get your screen share going, Mark. We're really glad to have you on here. Let me make you a presenter right now. And now it should ask you if you want to share your screen.
Okay, show my screen.
All right. I can't see a screen. And now I can see your presentation. So I think everything's going to work well right now. What could go wrong? I'll be here if something goes wrong, though. I'll be here to help.
Okay, let's see. We get this thing going from the beginning. So you see this? Pretty good?
Yep.
Everything's in. Okay, cool.
You sound good.
Well,
we can see you. We can see the sides. I'm going to get out of the way. It's your turn.
Okay.
Go.
Okay, thank you. We'll try to make this short and sweet. This is my homepage for vrtrader.com, and there's a little promo code up there. I know it's not supposed to be a commercial, but there is a 50% off for any of my newsletters, 2022 half off. So I just want to bring that to your attention. One of the main tools I use for my overall forecasting the market is a cyclical forecast, and the product is VR Forecaster. I created this back in 1987 in the shower, and it called the crash in October of that year. So I've been doing it ever since. So you can see I've been doing this for a long time. So it's just a cyclical thing, putting a lot of pieces together. This is outside of my volume work, but it's just something else I created in previous decades. And this was the forecast in 2023, which was the bars you see on the screen, and the yellow line was the actual result. Bitcoin last year, the actual projection was the yellow line, and the forecast was the bars. And this is the 2024 projection we put out at the beginning of the year, basically showing strength into the end of the year, roughly a mid-year pullback, and more or less we had a couple of those. And again, this is not a trading tool, but it's just an overall product. So I encourage you to take a look at it. This is the basis of my Timer Digest awards over the years. because it gave you more of an overall perspective, incorporates seasonality and all the kinds of patterns, many of which you may be familiar with, but we put it all together here. So I just want to throw that out since it's one of our big tools that's helped me over the years to give my my focus on the trend. For those of you interested in my technical work, my Trader's Book of Volume is available both in English and Chinese. We published it about 10 years ago. It's a definitive guide of volume trading. And of course, my volume reversal, my VR is in there, but it's several hundred pages and it really covers all the volume indicators. So you can buy this just about anywhere, but Amazon is sort of the main spot. So we still have a lot of people interested and I get a lot of questions. This was a book I'm working on. Don't know whether I'll finish it this year or next year. It's taking your profits using the volume reversal indicator. So it goes more into specifics in my VR. In the meantime, I am doing some tutoring individual clients and traders wanting to learn more before this book gets out. And there's a lot of aspects to the VR process and my technical work that's covered in the book or on my website. So let's see how this pans out. But my VR indicator is sort of my main tool, and we registered, years and years ago. Timer Digest, there we go, back 2019. That was the cover story. I used to be an elf on Louis Rukeyser's Wall Street Week for you old timers out there. So they dressed me up as an elf. I sort of laugh about it, but it was a great honor at the time. And so I guess I was an elf by someone else's decision, not by my own. But anyway, fun. That's fun. I have a weekly podcast on housestreet.com. You can check on that. We just did the recording today. It'll be out over the weekend. So, check that out at housestreet.com. I do a lot of geocosmic work. We may not get into that in this presentation, using cycles and so forth, like the seasonal cycles in the market and so forth, but we'll see if we're going to address that today or not. I'm a bit of a contrarian. For those of you who follow me, I'm a big proponent of the abolishment of the Federal Reserve, and the Creature from Jekyll Island book came out decades ago, and that's been one of my, main sources for that thinking. And even Mohammed El-Arian, the top economist, even questioned the legitimacy of the Fed, and maybe it's time that we look elsewhere. And there is some talk about getting rid of it, particularly how badly it performed since 2010-11, but that's a whole other discussion. Probably won't happen in my lifetime, but all we know is the dollar's lost most of its value since the Fed was created back in 1913. And it's not what it should be. And even Andrew Jackson back in the mid 1800s abolished the national bank back then. So I'm more of a proponent of free market and not the Fed. This is Edward Griffin who did that book, and there's a video link down here if you want to copy it, or can get a copy of it. We can share that with you, and it goes into more detail about the Federal Reserve. Also, I've been a big follower of GATA, the Gold Antitrust Action Committee. Bill Murphy's in charge of that, GATA.org. They've been talking about suppression of gold for 20 years and a lot of intervention in the market. So it's something you really need to read about. And I encourage you to go over there and see some of their research. So a lot of games played with the silver and gold market, both by central banks and traders. So something to look at. I also cover in my newsletter that discussion about the plunge protection team. Not talked about at all in the media. This was the working group of financial markets that Ronald Reagan created back in 1988. So, we really don't know what they're doing, but we know they're in there. And there's also the Equity Stabilization Fund out there, which was created back in the 1930s, part of the Gold Reserve Act, and a lot of shenanigans going on with government intervention in the markets. I really don't have solid proof of it. All I know is that we know Japan is out there controlling their markets, owning a lot of the stocks and ETFs there. And there's, a lot of reason to believe there's, government intervention in the markets. I know there was a Freedom of Information Act request on the part of the Fed years ago, and we heard that they were investing in individual company stocks and bonds, and there's just no discussion of this whatsoever. So a lot of things to talk about here, which are unrelated to technical analysis, but do affect the markets. So I've been a bit cautious in the market here. Our little visuals on the screen here, like danger, Will Robinson, lost from the Lost in Space show and so forth. And, I just think the markets are at a point here that, really a lot depends on what's going to happen politically here in November. But I think the markets, could see another sharp correction, and there could be, one of those shakeouts, and particularly, after the election. So let's see what happens here. Short term here, the market is stalling a little bit, so wouldn't surprise to see a pullback. We are entering October, and I wouldn't be chasing stocks in any event. We have the big BRICS meeting coming up, October 22nd to 24th. This is very important. It's being held in Russia. As you know, the BRICS are out to create a new currency backed by gold. And this could be, and has been talked about as a huge event going forward in terms of, the world economy. So it'll be interesting what comes out of that. But if they're successful, you're going to see use of more cryptocurrency and possibly a currency backed by gold itself. So got to watch here the third week of October and see how this BRICS meeting. I believe there's like 80 nations involved. This is serious stuff. So we got to see how this, and it will affect the U.S. and other markets. So let's track that to be careful. We have to be aware of the government push for digital currency. A lot of talk about it. And unfortunately, if it does happen, I'm not going to be too happy about it. I don't want to see my bank account turned into digital currency, but I may have no choice. But anyways, a big government push for this, and we're all going to find out when it occurs and how it impacts most of the younger generation. My son and daughter and so forth could care less. They're so computer oriented, and if they're clicking on their phone for their money on a digital currency versus real dollars and not physical cash, I don't know if it would bother them. So I think the younger generation is more supportive of a digital currency. But in any event, I think the writing's on the wall. It's going to happen at some point, but we'll find out in time. Be prepared. A lot of greed in the market now. As I've told you, this is the CNN greed and fear index, and we're at a little greedy point here again. So it makes sense when you see the market into highs, but this is a warning sign on a trading basis, in my opinion. There's also a tool that I follow. It's a long-term confidence index. It's a Fidelity Capital Income Fund divided by the Vanguard Long-Term Treasury Fund. And if you look at the screen, that blue line is sort of support, and we're under that now. And if we start trending lower than that, what this is actually indicating less confidence in the market as a whole. We'll see if this pattern continues to unfold, but it has dipped below that support level. So we'll see if this is a false signal or not. But I've been tracking this for several years, and there are times, if you look at the chart, where it broke through, and it was coincident to some significant corrections, particularly back in 2020 when it broke decisively through that support level. This is some indicator you really don't hear or talked about anywhere. Out in the real world, we heard that Volvo has abandoned its target to produce fully electric vehicles. A lot of other companies are cutting back on production. So this is a sign that there are problems out there with the EV market, and we know many people, including myself, enjoy hybrids instead. But we'll see if this turns around. I think it's unrealistic to think the market's going to jump on the EVs again in any great strength unless we have the infrastructure out there. Just a sort of a contrarian web of visual that I like to throw out, and despite how negative you want to be, including myself at any particular time, if you look back at this visual and see for the last goes back 20 years or so, all the crises that we've had in the market, and how we've somehow pulled out of it. And that's been sort of my life experience. And when you think about even going way back when I was young, back in the 1960s, where everybody supposedly had to have bomb shelters because of a Cuban missile crisis and an attack, to everything that's happened since. No matter how bad the news is, the markets seem to always pull their way out of it. So it's dangerous to become too bearish, even though you get bearish at times. And the biggest shakeouts turn out to be, buying opportunities. But this is a good visual to give you a sense of some of the nasty events that have occurred. And what the market has done, since. Also, I like to briefly touch on, government statistics. I'm not a big proponent of those at all. I don't really believe any of them. I do, however, believe work from someone like a John Williams, who really looks at government statistics in a realistic manner. And also, I'm a big believer in industry-generated statistics like the Chicago purchasing managers and so forth. That's actually created by the industry itself. So we've already seen revisions in the employment numbers and mistakes and changes. So you have to really look at the charts, and you really can't rely on the government statistics that come out, when they eliminate energy and food, for example, in their inflation index. I mean, that's, in my opinion, bogus and has been forever. So I'm very much a contrarian in this regard. So that's just something I want to throw at you. This is the PMI that I just mentioned here a moment ago. So basically, it was showing problems in the manufacturing center, and it was 8 out of 10 months industrial production was down. A couple of visuals I'm just throwing out here for fun. I just do this because we like to have fun during these presentations as well. This is going way back to the year 2000, and when there was a cover story in NASDAQ with a bull flexing his arms. That was exactly March 10th, 2000. That was the day of the top in the NASDAQ. So you got to watch out for cover stories in the financial media. And in just recent months here, this was back in March, April. Barron's came out, bet on the bull, and right at that time we saw an initial top in big stocks like Nvidia and so forth. And of course they sold off and really haven't made new highs since. So they've been trading, pretty dramatically. So the financial press gets caught into the emotion of the moment, and you got to watch out for these cover stories. I mean, I have dozens and dozens of examples of stories in the financial press that are completely opposite to what the market is saying. So something I want to point out to you. Yale Hirsch was a big fan. He's he created the Stock Traders Almanac, and he created the January Barometer. And way back in '87, he actually dedicated me and 3 other technicians to that version of the Stock Traders Almanac, which was one of the great personal honors in my life. But anyway, January Barometer, as you may or may not recall, based on Yale's work. He was a good friend of mine. He unfortunately passed away in the last couple of years. The first 5 days of the year, the leading indicator for the year, and the month as a whole, and compared to the December close in the S&P is an indicator for the year. And so far, looking back at January, it was bullish. So it's been correct. Interesting indicator. So something to keep an eye on my mind. We monitor our daily crypto list in our newsletter, along with our blockchain newsletter. And now we're going to move on to Metastock, which will make Jeff happy. So I have, as Jeff indicated, I have a volume reversal toolkit. This is sort of my main trading indicator that I've used over the years. And it is available here at Metastock. We actually have it out now about 15 years or so. So I'm going to talk briefly about one of the versions and to try to describe the VR to you. The volume reversal is a change of price accompanied by a change of volume. And we've created 3 versions of it on the platform. The sequential shows all the VRs, and the direction over eliminates repetitive VRs as a 2-day version. So I don't want to confuse you with the versions. You'll see them more on the website, but we're going to go over some examples here, which is what the point of the presentation is all about. So here's like a skeleton chart of what a sequential volume reversal chart looks like, where you have positive VRs. It's not showing any negatives here, but that's what the chart shows. It's color. If it's correctly presented, it's color coded to show blue going up and red going down. And that's the volume reversal there. Let's see here, and then let's keep going here. Directional volume reversal eliminates repetitive volume reversals. So if there's a negative VR, like you're seeing on the left side of the screen here, and there's no other VRs along the way in the same direction, you don't show them. We eliminate all the other negative VRs. Then when a positive VR comes in, that obviously takes charge. So that I tend to use the sequential more because I want to see all the VRs, but this is for those who want to eliminate some of the noise. This is really confusing, but we created it anyway as a 2-day indicator. It's called the 2-day, and the theory behind this was when I get a VR up or down, we tend to get a move in that direction, negative or positive, for a couple of days. So we have a little tool that gets you in and gets you out in 2 days, regardless of what else is going on. I think it's better just looking at it mentally, but we do have an option calling the 2-day, which is one of the 3 that's offered on Metastock. So we're going to show about 10 examples here, just to give you a sense of what I look at on a daily basis. Obviously it may be a little bit small for the screens, but my overall trading presentation is really all that you're seeing, what I look at in my own work. I put up a couple moving averages, like the 200-day, which is the green, and the 50-day. I use a 533 stochastic, but my main indication is looking at the VRs for trades. And when a negative VR comes in and we have a stochastic turning down, I tend to take a short position for at least a couple days. There's some striking examples here. You really go through the chart to see in terms of a trading approach, how this really plays out. You can play it in any time frame. I have some clients who use it in 30-minute charts, 10-minute charts during the day. This is a daily chart of Disney. So this just gives you a sense of the kind of stuff I'm looking at on a trading basis. And if I get a positive VR and we see some, hopefully we see some follow through, we jump in right away and we follow it. My rule is that if we see a positive VR, we don't want to see the low from the previous day come out. And if we have a negative VR, I'm circling one up here. What I'm saying is my mental stop would be the high from the previous day. So in this little example, I'm just circling here at an immediate drop a day following the VR, and it was a nice, 2-day move. So what are we saying is we're saying smart money is moving out or moving in. And I created this decades ago when I was a floor trader, and I'm just following the smart money. So if I get a reaction day coming off of a little peak and volume is increasing, that tells me sellers are coming in and we're going to get a pullback. The same thing happens on a positive VR. So if I get a positive VR, that tells me smart money is coming in, and I follow it. You got to use your own judgment. Many of you are very sophisticated in the market. You want to see where the stock is. You want to see if it's coming off support. You want to see if your stochastic is going up or down. You want to see if it's above or below your moving average. If you use all those tools, I tend to be relatively simplistic about it, and I follow the volume. So this is one example. We have about 10 of them here. Let's see. So MSOS, this is the ETF for U.S.-based cannabis stock, and it's starting to regain some momentum here the last couple of days. There was a positive VR 3 days ago. A lot is dependent on, I suppose, what's happening in the Florida election in November for some of the big U.S. cannabis names, which, by the way, have done well financially, unlike many of the Canadian names like Canopy Growth and so forth. Didn't make money. Many of the components of this index, like Trulieve and other names, are actually profitable companies and expanding. So this is a good index to play the overall, ETF that is, to play the overall group. So we're long MSOS based on the chart pattern and positive volume and a rising stochastic. USO, this is of course the crude oil ETF, and it's been really volatile as of late, but it trades beautifully, and there are some really great chart patterns in here in terms of positive VRs and negative VRs. So just I'm circling one here. This, but let's see, this is the daily charts. We're looking about 2-3 weeks ago before it broke down, but a positive VR, and it takes off and rallies for a few days. You had a rising stochastic, and then right after that, a negative VR, which I'm circling, came in, and then we had a nice sharp decline. So there are, nice trading swings, and if you're trying to follow, not big predictions on crude oil, but if you're trying to trade off short-term moves, some of these signals could be really valuable. So I'm also looking at some of the individual oil stocks as well, but I just want to show you what markets that the VR tends to work out pretty nicely for. And again, you can switch this time frame into we were live, we would switch it to weekly and to see if you're getting similar patterns on the weekly. I think I have a couple weekly charts in here somewhere, some other examples. So as a general rule, I'll look at the daily chart, I'll look at the weekly chart and see if I'm getting confirming volume patterns in those individual charts. This stock's done really well recently. This is Sprouts Market. Actually, I shop there all the time. It's down the street. Sort of surprising, looking at a food stock, but this is making new highs all year. Still looks like technically it's in a nice uptrend, and we've been trading it accordingly. So it does have its little swings, but it's been steady and higher, and just a stock that you may want to track, and which has nice correlation in my work. In fact, we were long the stock here a few weeks ago on this positive VR, and I think earnings came out and the thing exploded, and we made a nice trade there and got out. As soon as I get lucky on a gap opening on some stock, particularly if I had a VR ahead of that warning me that it could take off, and whether that was inside information or anticipation of the move, but we had some pretty good luck with Sprouts Market. This is the total stock market index. Not too people talk about it or use it, but I like it for the VR signals, and we get some nice trades in it. Sometimes they're 1 or 2 day trades, but sometimes you get a nice correction. Here's the last little shakeout here we had just about 2 weeks ago, and negative VR comes in, and sure enough, it nosedives, and there was a nice trade. We had another one up here, a few weeks before that. And, you have to blow this up and look at the little VRs, but there's a strong correlation on the VRs to the follow through. And this is measuring all stocks in the market versus focusing only on the S&P or the NASDAQ or the mid cap or the Russell. So, if we're going to come down big in the market or go up big, you're generally going to see some pretty good signals in the total stock market index. That's ticker symbol VTI. So I trade the VTI quite a bit. This is gold. This is the physical gold, SGOL. Most people follow the GLD. I like the SGOL. It's more close to the price of gold than the GLD is. Most recent signals starting to come in are getting a little negative here. So you might see a little pullback here. I had a target of about 2,700 in gold going back a few months, and we got pretty close to that. So you might see a little bit of a pullback here, even though I think we're going dramatically higher, particularly if there's some action out of that BRICS meeting the third week of October. But a little negative pattern came here saying that perhaps you can get a little bit of a pullback. But nice correlation with the VRs. And of course, I'm looking at individual gold stocks and then silver and so forth as well. First Solar has been one of my favorite stocks. In fact, their offices are not too far from where I live. They're down in Tempe, Arizona, right near the university. I'm here in Scottsdale, so I drive by their offices all the time, and I've been trading the stock since it was in its 30s last few years, and got up over 300 recently. Great trading stock. I mean, this moves 8-10 points a day. You got to watch the signals, particularly if a negative VR comes in, like I'm circling up here. And, even if you got in the next day, you get some nice follow through, another negative VR came down. But then, positive VRs come in. Just recently, we had a trade and came off. There was a rising stochastic. VR came in and traded up for, really sharply. So, of course, it's an important component of the TAN, which is the solar index. But this is sort of the kingpin of the group. So great trading stock, nice correlation in the VRs. And if you get a chance to pull this up on your screen or get a copy of this presentation, you can zoom in a little bit on those individual VRs and see how they're working. CEG, of course, is Constellation Energy that had a big takeoff on the 3 Mile Island story. And, it looks like, it broke out big. So I'm, pretty bullish on it, but I like to catch them on pullbacks. I think there's an old high around the 230, 240 area in the stock. So, but most importantly, what really made us some money here was this positive VR here before the huge move up. And we didn't know it was coming, but, we played it using the day before the mental stop and an explosive move. So we're out of it now and we're watching it. But in any event, I think pulling back to the mid 230s, 40 area would be nice if we can get that. for another entry point. So right now it's a never land because we have a big gap. But anyway, one of my favorites for trading, and I think the mentality now is with that demand for energy and the 3 Mile Island story, and a lot of other companies, by the way, pushing now suddenly nuclear energy and uranium are back in vogue, where for many years nobody would even talk about it. But because um, the NVIDIAs of the world and the AI companies of the world demand huge electricity, this is a big growing group. So, looking at this versus, let's say, lithium we were looking at for EVs and so forth, this could be, and is the big future here in terms of energy production. Now, this could help the EV market because one of the big problems, as you know, we've had was that we just didn't have charging stations or enough power for the EV vehicles. I wouldn't buy an EV because I, want to have gas in case I needed gas, and charging stations and big lines. And who knows if I have to hit the road whether I'm going to find something. So hybrid made more sense. But with the CEGs of the world and the buildup of nuclear energy and power throughout the country, we may have the energy that we need for EVs to eventually become successful. But right now they're not. But looks like the next few years, certainly within the next 10 or 12 years, when some of these power plants come back online, it will be more viable. Occidental Petroleum. This is, as you know, Warren Buffett's one of his big favorite stocks, and it's been coming down, and we've had negative volume warning of it, literally from way off the top here. But he owns, I think, about 25% of the company, may buy more. I'm a big bull philosophically on oil overall, but the trend says down for now, so we're going to have to wait for confirmation of some bottom. Certainly a geopolitical event could change things here. And, with China coming back here a little bit, the China stocks took off here. Demand for oil may pick up again. So, I'd be more looking for a bottom here, looking for some confirmation, looking in oil in general, in particular Oxy, because of Warren's involvement with the company. At some point, maybe it'll be merged into another company, or I don't think he's going to buy it out, but the fact he's in it, something that I want to pay attention to. So I've been trading a lot of Oxy in the last couple of years. Dutch Brothers, this is another of my favorite trading stocks. This is the coffee company. It's not competing with Starbucks, but I guess you could say it does to a certain degree. Really volatile. Ran up into the mid 40s, came all the way back in the mid 20s. But we get these little trading signals, negative and positive. In Dutch Brothers, it's a $30 stock, so you're not exposed to a $200-300 play. And I sort of like the $20 and $30 stocks, but we get some nice trading signals, negative and positive, in Dutch Brothers. And I like the product. A lot of young people really like the products and the company, and they have really great customer service. So just been a favorite of mine for the last 2 or 3 years, trading a lot of, and you'll see it on my newsletter with various trading signals occasionally. STZ, this is not too many people talk about it, but this is Constellation Brands. We're in the stock now. This, as you know, the company that produces Corona beer and Modelo beer. I was going to say Coors, but it's not. They're also in the wine business, and which has hurt them a little bit recently. But interestingly, they own a big piece of still the old Canopy Growth, which is the marijuana stock. As you may recall, 5-6 years ago, they invested a couple billion or $1 billion into Canopy Growth. The stock took off, ran from $1 to $58. And now it's, back to a few pennies because of mismanagement at Canopy Growth. But if that's Canopy Growth takes off and marijuana takes off, they still have a position there which could benefit them. But they have earnings coming out next week, and we're trading it. I think it's up 2-3 points today. And again, not much talked about, but it's a nice volatile stock, and has some pretty good signals. Costco got nailed, and there's no surprise. Excuse me, we had a couple negative VRs in Costco, and we knew earnings was coming, and it came yesterday. And we had a negative VR, and then a little positive, but then another negative came in. And this sort of told me sellers are coming into the stock, and the rally isn't going anywhere. So sure enough, it broke big. I think it got down to from the 920 area to the 870s, and which, by the way, I enjoy. I love when they kill the stocks because that gives us an opportunity, but I still like to wait for volume to dry up and some positive volume to come in. So we're keeping an eye on Costco here. We've been in and out of it all year. Of course, it's a $900 stock, $800 stock, but you get some nice trades, 5, 10, 20 points in the thing if you're inclined. But most importantly, I've got some really nice VR signals in it, and we keep an eye on. So I'm watching it here, but great correlation with the VR, some of the dramatic, VRs. If you look back here at the chart, positive VR up, positive VR up. There was one false negative VR, but another positive worked out nice, negative worked out nice, negative worked out nice. So it does have a strong correlation to the VR patterns. Again, we're looking at the sequential VR chart. So I'm looking at all the VRs in each of the examples here. I'm not filtering out any of them. And as you know, I have a standard stochastic and a couple moving averages up there. This is as sophisticated I get in terms of my charts. I don't look at very much more than this because I'm looking for momentum in the volume. And, I tend to follow a few favorites, which I'm trying to show you here today that, work for us. Apple, there's the, negative VR, going back here a few weeks before it had the big sell-off. And, there's some nice correlation in Apple. Positive VR goes up, negative it drops 2 or 3 days, positive it goes up, negative it comes down. So, generally good correlation with the VR and a big name like Apple. Don't currently have a short-term signal today or tomorrow, but, we're watching it here, and we'll obviously keep our subscribers posted. And that sort of covers the VR. And I don't want to step on anybody's toes here with a lot of other indicators, but I'm just going to flip through this really quickly. When I talk geocosmic, there was a Carrington event back in the 19th century where we had solar flares and it knocked out the Western Union and just the telegraph system at the time. So there's a risk of solar activity. I track a lot of this on the website. A lot of my subscribers like it. They don't see this other places. In fact, we just had an incident in the last few weeks which affected Starlink's satellites. So we just go to spaceweather.com and track it. And the news really doesn't pick up on this a lot, but shortwave radios go out and there are interferences with satellites. So, if you're interested in what other things, if you're tracking hurricanes or tracking any other events on the planet, this is something just as a outside curiosity. And obviously there's a big event and we all get fried. There's nothing we can do about it, but I keep a close eye on it. Let's see here. Well, let's talk about earthquakes we look at, asteroids we look at. Another thing I want to mention briefly is that I've been following lunar cycles over the decades. My story here is, I've told this several times on Louis Rukeyser's show back in 1972. Ian McAvity, who produced the Deliberations newsletter, came on the show and said the moon and gold are tied together, and if you get a full moon at the time of high in gold, you're going to see a sell-off. So that attracted me to start looking at stuff, and people laugh at it, but I would strongly urge you, if you want to do something that is not talked about on CNBC or on Fox News, track, as I do, the lunar cycles against the stock market, and you'll find in many instances we do have a new moon coming up here this next couple of days, and the market could possibly be peaking out here relative to that cycle. And over the decades, I've seen a lot of correlation, not only with gold, but a lot of markets. So I'm not an astrologer. This is just looking at seasonal patterns and looking at patterns. And I actually have a chart that I plug all the lunar cycles in, and you'd be surprised how many times a big low or big high in the market is tied to one of these cycles. So something else I look at, this is a chart that actually shows correlation of a full moon to gold. You may want to take a look at this on my website. Good correlation. There is, not necessarily a change of direction factor, but it's something, does seem to have some correlation. I also look at the seasonal stuff. We just came out of the autumnal equinox. I find over time, sometimes you get change of directions in the market around your big cycles. Part of these are the indicators that I use in my annual forecast model. But if you remember back in 2020, the crash low on the COVID situation, the bottom occurred exactly at the vernal equinox. So you have to look in September, you look in mid-June, you look in December and see what the markets are doing. And uncannily, there are times where markets change direction around these big change points, which again, nobody really talks about. You got to use your, it's like the weather man. You have a forecast, a big forecast, but you want to look out the window, meaning look at your short-term stuff along the way. But I always track these, and bottom line is this is telling us right here that we could, it could be in a little market topping phase since we're in this current cyclical period. Groundhog Day, look at that as well. I did a correlation on this years ago. 2 weeks either side of Groundhog Day, markets tend to have some volatility unrelated to what Phil, the Groundhog, is saying. Just fun stuff that over the years, if you go back and look at the 2 weeks around early February around Groundhog Day, you'll see some volatility. So let's see here, a forecaster. I think that pretty much nails it. I just want to throw out some of the alternate stuff that I'm looking at. There's a bunch of other tools as well, but there's a lot of things that make up to being a successful forecaster. And people who are looking to me or looking to my newsletter, which I've been doing since 1979, and I consider myself a survivor that I'm still doing this. You have to look at a lot of stuff. And earnings, company earnings, what the media is telling you. You have to not only look at your technical charts, but look at cyclical and seasonal patterns in the market. Sentiment, are we greedy or fearful in the market at the moment? And most of what I do is trading. I'm not really a long-term investor. Yes, I own some stuff, but yeah, the bottom line is I enjoy the trading. I come from a floor trading background, way back on the CBOE, where the mentors that I worked with back then went flat or with no positions every night and started each day fresh. That way they weren't influenced by their positions. I don't quite go that far, but basically their view is the market is a way of making a living. It's like a job. And if you're trading, try to pull out what profits you can when you can. And if you want to be a long-term investor as well, that's obviously something you could do. But the VR particularly gives me that ability to, trade over the short term. So if you want any of our newsletters, here they are, vrtrader.com, Leibovit VR newsletters, and there's a promo code. And Jeff, do we have some questions?
We do. Margaret, before I get to the questions, good job. Appreciate having you on here. Appreciate you spending some time with us. Bill and Rad kind of have a very similar question. Can you kind of talk a little bit about more what a VR is?
Okay. It's a change. Okay. Well, I sent you
That's
actually
for volume reversal. Right?
Yeah. So the volume reversal. So volume reversal. It depends if it's a positive or negative volume reversal. So let's talk about a positive volume reversal. Positive reversal, let's say a reaction day, a down day in the market, and the low is lower than the previous day. So I call that a reaction day. Okay. And then the next day we rally above the high of that reaction day and volume picks up. So that would be a positive volume reversal. We came off a reaction day. Ideally, the reaction day would be on lesser volume, but it doesn't have to be. Then we have a rally day, taking out the high from the previous day, and volume increases. So that's a positive volume reversal. Okay, and that was what we showed on the charts, a sequential. A negative volume reversal, let's assume you're rallying and you make a high in one day, and then the next day the market comes down and the low of the day that we come down is lower than the low from that high point. So we had a high and then as a range that day, but the next day we came down and took out the low from that previous day's high, and at the same time that happened, volume picked up. So then you're getting a negative volume reversal because post price you had a reaction day and volume increased coming off that peak. So it's an uncanny tool. It's simple. We chart it here at Metastock, and I've been using it for decades, and it's an honest indicator. I mean, you're going to obviously get some bad indicators and signals as any tool, but I would say 80% of the time when volume is coming off of a peak and it increases, you're going to see follow through, and if volume's coming off of a low and you tend to get follow through on a positive VR. And I demonstrated some of the examples here just recently. So the question is the follow through a day or two, or has it become the beginning of a big move? And this is a trading decision you have to make. I tend to take the trades, but sometimes there are triggers for bigger moves in each direction. And one thing to look at, as I mentioned in the presentation, Jeff, is put on a weekly chart. See if you're seeing a similar pattern, a topping pattern on the weeklies, and then we see a daily signal and we act on it. But you can throw this in the soup with all your other tools and indicators. And that's why we offer it here at Metastock. Throw that VR in, see how it matches up with your other indicators.
Cool. You mentioned daily and weekly. That lends perfectly into the next question Boris has. Can I use this with intraday timeframes like 60 minutes and 30 minutes and that kind of thing?
Works. I don't trade it, but it works beautifully. I've seen a lot of signals on the intraday charts. I'm too old for the 5-minute charts, Jeff. Okay, I got to tell you.
Yeah, for sure. Okay.
I just can't. It's hard for me to. I'm happy to look at looking at a chart during the day and see what it's doing on 30 or 60-minute basis. But absolutely, yes, you just change the time frame, and what you have to do is experiment. You've got to put it in and see how the VRs work for that particular index or stock on a 5-minute or 30-minute or 60-minute basis. The ones I've looked at, a lot of correlation. It's just too fast of a market for me in terms of my own personality. But I know people who are using 5, 10, 15-minute charts and putting the VR in, and they're seeing some quick index moves after some volume comes in, and they're in and out. I just it's there, you can use it. I don't trade it, but I've heard from many, and even my own observations, that there is some strong correlation. But you have to pull it up, pull up an S&P chart, an SPY chart, or any of the indexes you're trading, triple Q, and put them up on a 5, 10, 30-minute basis. Look at the VR signals and see what correlation there is, and if that fits your trading pattern, then go do it.
John wants to confirm that VR equals volume reversal. It does, John.
Correct.
George wants to know, do you see gold rising for several years or not that long? And do you think silver will follow suit?
Yeah, I'm very bullish. I mean, it sort of hit a trading target of, I was looking for 2,700 for the last several months, and we got pretty close to that the other day here. So I think you're seeing a little pullback here. I actually put on an inverse hedge. We put on ETF, a negative ETF, ZSL and GLL, which are the inverse ETFs for gold and silver yesterday, and we're down today, so we're actually ahead in those, and we just put that on as a little hedge. But my personal opinion is we're headed to about 3,700 in gold. This is probably a 2-year comment and maybe a lot higher. So what you have to keep in mind is, look at the history of gold. You look at the volatility we've seen in the past, 20 years. I mean, if we had a $200-300 correction in gold and back up again, it wouldn't surprise me either. But keep in mind the BRICS meeting is coming up the 3rd week of October. A lot of push for a new currency with backed by gold. And, except for trading as I'm doing here with these 2 inverse ETFs for a couple of days, I'm keeping my core other positions because I just think, that's the trend's your friend here, and we finally got a multi-year breakout. So that's my opinion.
Yeah, I appreciate the question. I wanted to just add, we're not recommending that you do anything with gold. Well, we're happy to give you our opinions, but we're not recommending any specific trades, right, Mark?
That's right. You got to take your own, make your own investment decisions. That's what we do.
All right, very cool. So vrtrader.com, the promo code that you'll use is 2022 half off. If you're interested in getting the volume reversal that we've coded for Metastock, hang tight just a second. I'm going to show you how to get it. So thank you very much, Mark. Appreciate it.
Thank you, Jeff. Really appreciate the opportunity. Thank you all for watching or listening.
Great to have you. I'm going to go ahead and make me the presenter, though, and I'm just going to take over for a minute. and just talk a little bit about it. So this is it's an add-on that we've had for, like Mark said, quite some time. It does have the different methodologies, the directional, the 2-day reversal, the sequential. Those are all kind of programmed in. They include expert advisors and the ability to scan, of course. I've talked about how I like scanning ad nauseum, just ad nauseum completely. If you buy a month, we'll give you the second and third month for free. So you can actually try it for basically $33 a month. And that will actually get you running until just after Christmas. So there you go. To order, give us a call, 800-882-3040. You go to metastock.com/salespchat, or you can go to metastock.com/conf-promo. So there you go. George, thanks for the question too. Let's go ahead and kind of move on a little bit. I want to talk about a new partner that we've got, the Traders Forum. You can go up there, you can join, you can chat live with other traders, learn about markets. It's a community of traders. www.thetradersforum.com. Totally free to join. I'll see you there. Thetradersforum.com. And then, of course, Greg, you know what this means. You know what this means right here.
I think I do. I have to say, when you showed VR Trader's box just now and mentioned how old, I think that's the first thing I ever designed.
Really?
When I got on board at Metastock, or when I took that responsibility at Metastock. It brought. I was very nostalgic when I saw it.
There you go.
Maybe it's time for a rebrand. I don't know, but we've had that product for a while.
I think this has stood the test of time too, Greg.
Absolutely. I really enjoy Mark's discussion. He's really got some interesting takes on things.
He did a great job today too. Really, I like him bringing him in on here. So, this side though, you know what this means. It's prize time. Where is my camera? I can't. Okay, there it is. I was like, am I on camera? Where'd it go?
Oh, I'm sorry. I didn't show myself. Here I am.
We talked about this at the beginning of the day, but I'm going to kind of just talk about it again real quick. One of a really good partner of ours, Steve Bigelow, the late Steve Bigelow, it's his birthday today. And I want to give a shout out to Steve. Steve was a really good friend of mine, a great technician. A lot of my understanding of price action and candlesticks and how they relate to the charts came directly from Steve Bigelow. So a big thank you to Steve and happy birthday. We're going to
such a great presenter.
Yeah.
And I think your dad jokes, I think, are a direct lineage from
maybe. I just loved his jokes though. He was great.
To resurrect some of those. You need to write some down.
I know them all. I just don't think I could deliver them with Steve's. The delivery is everything, and I don't think I'd do him justice. But I do try him in scenarios. I do try him in scenarios where people
wasn't one where he said, I went to the doctor because I was fat to get a second opinion. He said, okay, you're ugly too.
I used that one the other day. Yeah, I went to the doctor and he told me I needed to exercise because I was too fat. I told him I was going to get a second opinion, so he told me I was ugly too. Yeah, that was it. That was a great one. Classic.
Yeah, I went to the doctor. He went to the doctor, said I don't need glasses anymore, so now I drink straight from the bottle. I think that's a rat joke, but
we got a minute here. I like the one where he would talk about. I like the one that he would talk about, like he'd be the old lady in front of the mirror talking to her husband, and he'd be like, I'm baggy. I've got lines everywhere. I'm starting to sag everywhere. I just don't feel very good. Can you tell me something that will cheer me up? To which his husband replied, well, your vision's pretty good.
Yeah, those are great. I miss Steve.
Steve's awesome. Oh, man. Okay, so let's give away his book. We're going to give away his Candlestick Forum mouse pad.
Okay.
We're going to give away the Candlestick Patterns, High Profit Candlestick Patterns by Steve Bigelow, and then Eliminating Emotions as well. 3 really good books. We're going to give them away. I'm going to go to the post office myself and put them in an envelope and send them to the lucky winner. Greg, your job is to give us a lucky winner.
Okay.
So let's go ahead and do that. what I need from you is a number, and that number can be between 1 and 8,021.
Well, that one doesn't. I'm sorry. I'm redoing it until I see one I like.
Okay.
So, I like
So it has to be random,
65,
and it has
the
to be
other ones were very. They didn't look very random.
Yeah.
So this one looks
Well,
random.
you talk about how people have a hard time doing randoms. I'm going to send you a paper that talks about how computers have a hard time doing randoms. Random is just
Interesting.
kind of difficult, actually.
Yeah. There's a couple YouTube things I really enjoyed watching about it. I think I told you before that there's a very lengthy YouTube video about how if you ask 100 people a number between 1 and 37, there's a statistically significantly high 37. 37 is almost invariably the highest said number because people think something, but they think, oh, something in the middle of 1 and 5 is 3 and something between the middle of 5 and 10 is 7, so they think 37. So they think that's random. So it's just all interesting.
That's interesting.
Okay, anyway, did I give you the number?
Sure, yes, do it. No, not yet.
It is 6539.
Okay. And that's a Brian S. with a Gmail address in the USA.
Awesome.
So congratulations. I'd recommend you take a look at those. Those are great books, by the way. I will be emailing you next week as we kind of sweep up all the confetti in the office and kind of get cleaned up after the event here. But I'll send you an email. I'll make sure that we have a good address for you or ask you for one. And if you do get an email from Jeff Gibby saying you won a prize, answer it. Otherwise, I can't send you your prize. So anyway.
I do see that Kevin Nelson is with us, so I'll leave and let you carry. I'm sorry, am I done? Did you need me to do any more?
Yeah. That's great. You did a good job.
Okay. By the way,
thank you for reminding me of some good Steve jokes too.
Make sure to, I'd like to say to Kevin, I'm glad that he told me he's in Florida, and he mentioned that his family and himself are safe. So we're glad to hear that, and they're dry as well as safe. And for that, I'll let you go.
All right. Thank you, sir.
Right.
All right. Just as we get going, of course, we're Metastock. We've been talking about Metastock scanning. It can help you test trade ideas, help you forecast probable price moves, get real-time alerts. Every offer that we've talked about at the event, you can find out about at metastock.com/conf-promo. If you have questions, we'd love to talk to you. Come to metastock.com/sales chat. If you want to talk to somebody and you're in the US and Canada, you can call us at 800-882-3040. And with that being said, I'm going to go ahead and get Kevin started. Kevin, actually, I like to introduce Kevin this way because he's the only person that I ever have speak that actually hired me to work at Metastock. So Kevin used to be the sales manager when I started here at Metastock. He no longer works for Metastock, but he works for LearnMetastock.com, which is a website that he created. Up there, you can have hundreds of videos on how to do different things in Metastock. He does some interviews. He talks about some trading methodologies that he provides downloads for. There's tons of really, really cool stuff that he's doing at LearnMetastock.com. And so without further ado, and Kevin, I won't tell any stories. But let me go ahead.
I've got stories, but I think I'd have to curate for public consumption.
You guys are just having way too much fun is the problem here.
Yeah.
This is what happens on a Friday afternoon when we just hang out with, all of our favorite friends. So.
Yeah, and our buddy comes to talk.
All right, we can hear you. We can see you. I'll get out of the way.
I was just going to say, I also enjoy your dad jokes there too.
Great. That's awesome. Yeah.
Those are good.
I have a full data base full of
them. Well, hey, if we got some time at the end here, how about that? We'll go through a few.
Are you, Kevin?
But yeah, thanks, Greg. As Greg mentioned, I live in Florida now. I lived out in Utah for a number of years, about 16 years while I worked there for Metastock. And in 2008, I left and we moved to Florida. And we're over on the east coast of Florida. So we got lucky that yesterday with this storm on our side. But unfortunately, there's a lot of people who didn't get lucky on the Gulf side. And so, yeah, we've got number of people really got hammered over there on the Gulf side. So my heart goes out to that group, to say the least. Anyway, so what we're going to do today, we're looking at our picture of my website right now. Our website is learnmetastock.com, and at learnmetastock.com, what we do is we just help people with their Metastock program. I've been doing this for too long to even mention now. It's been a long time, but it's actually been really fun. I've learned a ton over the years, and we can help you in a lot of different ways, to say the least. We do live classes. We do have a lot of recordings, a lot of formulas that you can download, and all kinds of things. One of the areas that is actually pretty popular on our training site is we have a section which is called Trading Strategies. And in Trading Strategies, what we do is we'll take a published trading idea, whether it's, you know, a book, magazine, the internet, whatever the case may be, and we'll show you exactly how to work or basically duplicate that system inside of Metastock. And one of the real advantages to that too is we'll also create the formulas, and it'll allow you to download the formulas directly into your Metastock program as well. So what's really nice about this is that you go up to our website, you go up and take a look at a particular trading idea that might be of interest to you, you click on it, you download the formulas to your Metastock program, and then you watch the video, and we'll literally walk you through it exactly how to work with it. So again, most of these ideas are, you know, from other sources like books, magazines, internet, whatever the case may be. But so today we're going to do it a little bit different here. What I want to do today is I want to show you a system that everybody already has available inside their computer. And one of the things that we do when I try to, you know, explain how these different systems work, a lot of times I'll go in and I'll see if maybe there's something else that I could do to either make it easier, to make it more useful, whatever the case may be. So that's exactly what we're going to do here today. So let me jump over here. And the system we're going to be talking about today is called the Turtle Trading System. Now, this Turtle Trading System, I know that there's a lot of people out there who have been trading for a long time and are probably familiar with this, but there has been a ton of information written about this trading idea. And this trading idea actually originally originated back in the early 80s by a couple different guys there. And one of the students of this trading system, his name is Curtis Faith, and he's written a lot about this system here as well. And you can download a lot of information from the internet. You can watch videos on it and so forth. Here's a few different books you can grab. And also, he's also got a free PDF up on the internet that you can download for free if you really want to get into the nuts and bolts of it. But the trading system itself was originally developed by two futures traders, Richard Dennis and Bill Eckhart. And what's so interesting about this is back in the early 80s, what they had a discussion, and they were they're going back and forth and trying to figure out whether traders are actually born and or made. And obviously this could go on and on trying to figure out, you know, what the answer to that question is. So the way that they went about it is they actually placed an ad in the newspaper asking for applicants or people that were interested in learning how to trade, who had absolutely no market experience, you know, no trading experience whatsoever. And what they wanted to do is they wanted to take somebody fresh like this, and they wanted to figure out if they could actually make traders out of it. So after placing this ad in the paper, they received 1,000 different applicants for this. And for this, what they're going to do is they're going to provide the training, the money, the computers, everything that they need. And out of those 1,000 people, they chose 23 to actually work or become what they call the Turtles. There's another story behind the name of the Turtles and how that was actually chosen, but I won't get into that. So anyway, so out of these 23 people that were originally chosen to be these Turtles, they were given actually very, very limited options about what they were going to be doing and how they were going to be trading. But initially, they were given two different systems that they could personally trade. And the key to this is that there's absolutely no second guessing. They couldn't deviate at all from the rules. And if they did, they were removed from the program. They just wanted people that would follow their rules specifically. Now, the trading system itself actually traded a number of different types of securities, or actually futures contracts. They were only asked to trade futures contracts. So they traded coffee, cocoa, gold, treasuries, silver, they did have a choice on what they wanted to trade. And what was really interesting about how they did this is they managed their risk and opportunities and so forth based on volatility. And what I mean by that is that depending on how volatile the markets or what they were trading was, or how volatile the markets were, they had to adjust the position size. So for example, if the market was extremely volatile, they were instructed to go in with a smaller position. And vice versa, if the markets weren't that volatile, then they were instructed to go in with a larger position. And also in addition to that, these position sizes changed depending on how the trade actually, unfolded here. So if it was going in their favor, they actually added to the positions. And of course, if it was going against it, then they started taking away from the position. So it was a really fluid kind of thing, a lot of different things happening here with this. But the idea here with these different systems, there was always I guess a safe way to get out of the systems. And what they did initially is they just said if there's more than or at least a 2% loss on any of the individual trades, they would get out of the trade at that point. Now, the two different systems that they were offered or basically given the choice of is either a 20 or a 55-day breakout. Now, as far as technical analysis goes, this is actually really pretty simple. All they really did is, let's say, for example, we're looking at a 20-day breakout. They identify what the 20-day high is, and if the prices trade above that high, that's a potential long signal. And then vice versa, if they were bearish on something, and they were looking at, then they would look at 20-day lows, and if the prices broke down below that 20-day low, that was a potential short signal. Now, in addition to that, they also had the 55-day breakouts there as well that they could work with. Now, another thing that was also really interesting is that the positions were actually based on previous trades. And one of the rules that they had is that they couldn't enter into a trade unless the previous trade was an unprofitable trade, which again, I think is actually pretty interesting because again, if the previous trade was profitable, you'd think, oh man, I want to get in on this and so forth. But they had the rule that the previous trade had to be unprofitable in order to take that position. So the way that this worked is that if the previous trade was profitable and they're looking at trading a 20-day breakout and the prices break above that 20-day high, they were instructed not to take that trade, but instead just monitor that trade. And then what they could do is then they could switch over to a 55-day breakout. And then if it met the rules at that point, they were then instructed that they could then enter the trade at that point. So again, they kind of moved it back and forth depending on what was happening there. The other thing too is about as far as like getting out of these trades, the way that they stopped out or got out of the trades is they also based it on these bands as well. And of course, if the prices broke through the lower band or the lower level and so forth on a long trade, that would then indicate an exit at that point. And that they also used one more indicator to help indicate or possibly use as an exit as well, and that's the ATR. And I'm sure a lot of people already know that the ATR represents what's called an average true range. All right, so let's go ahead and jump over to a chart. So let me show you what you've got here. So inside of Metastock here, I've got the Power Console open. I'm just going to open up a chart here. Let's say a chart of the SPY. I'll go ahead and open this up. And what we're going to open or plot now on this chart here is we're going to plot the formula that Metastock already has in it. So to do that, we can do this a number of different ways, but if you go up here to the very top, for example, you can just start typing like turtle, and that'll bring you down to the different systems that are in here. Now, the ones that begin with LMS, these are the ones that I've created. So the one I want to go ahead and plot here first is the one that you'll have on your computer is the Turtle Trader Bands by Metastock. So I'm going to go ahead and drag that directly on top of the price bars. Then you're going to get a dialog, and it's going to ask whether you want to look at long positions or short positions. And the way that you identify that is either with a 1 in this box or a 2 in this box. So if we want to look for long positions, we'll put a 1 in there, and you'll see the default is set at 20, and I'll just go ahead and leave that, and we'll click on OK. Now, the next thing it's going to pop up, it's going to ask you how you want to plot these bands. And what's really important at this point is that they need to be merged with the price scale of whatever you're plotting. So over here on the right-hand side, this is your y-axis showing all the different prices. And what we need to do is we need to merge it with that scale. So I'll go ahead and click on OK. and plot these bands. Now, again, that's just a really important point, because again, if you overlay them or merge it with a different scale other than the prices, these are not going to plot correctly. Now, the way that you interpret these bands is that this upper band, the way that we're looking at this right here, is that this band right here represents the highest that the prices have been over the last 20 periods. So let's just say hypothetically that we're looking at, like this bar right here back on April 24th, and we're looking to possibly go long. Well, in order to go long, we need to find out what the high is the last 20 bars, and we know that by looking at the value of this band, which is value 1, it's showing the value of 524.61. So if we go back in time, we could actually find the bar that actually is showing us that value here of 524.61. So it appears that it's on March 28th. And if you look at the high, that's the 524.61 there. Now down here at the bottom of our screen here, at the bottom of the prices, is the lower band. Now by default, the way that this is set up is that this is looking at 10 bar periods. So now it's looking at a 10 bar low. So this is looking at 20 bar highs, and this is looking at 10 bar lows. So again, same thing, if we hover over it, now we look at value 2, we see that the low is 493.86. And again, that represents the lowest that the prices have been over the last 10 bars. Now, the way that this works is initially what we're looking for is we're looking for the prices actually just to break above a band, for example, if you're interested in going long, and you can see exactly where the band is and where the price bar actually trades above it. Then vice versa, when the prices trade down below that lower band, that could be a possible exit, okay? So really simple, really straightforward as far as that goes. Now, another tool that you already have available inside your program is you have an expert advisor that's in here as well. So let's go ahead and open up the expert advisor. Go ahead and drag this up here a little bit. Now, I'm going to drag it all the way down here to the very bottom, because these are all going to be sorted alphabetically. And the one I'm looking for is this one right here called the Turtle Trader Hybrid Method by Metastock. Now, you might have a question, why is this thing called a hybrid method? Well, the way that I understand it is that a lot of the original rules of the Turtle system, there was a lot of position sizing, whether or not you would take the trade, the size of the actual trade that you would take, adding to it, taking it away from it, and so forth. So actually doing something like that using technical analysis would be fairly difficult to actually try to to repeat exactly. So what they did is they created this system here. And quite honestly, I mean, what it really does, it's a very simplified version of just looking at the prices in relation to these different bands. So over here on the right-hand side, and Jeff, by the way, you can fact check that to make sure that I'm saying that correctly or telling them the right information. But anyway, so if you click on the edit button, let me go back here, just let me show you what I did here. I just highlighted the Turtle Trader, and over here on the right-hand side, I'll click on the edit button. And then I'm going to navigate here to the symbols tab. Now you'll see that you've got a number of different choices here. So I'm going to uncheck everything. And I just want to see the buy signal and the sell signal initially. So we'll go ahead and click OK. And then we'll click on attach. And then we'll close down this dialog. And now you can see it's plotting, for example, a number of different arrows. We've got some red circles here on our chart and so forth. So let's take a look at some of these different signals. So first of all, you'll see like this upward pointing green arrow. This is just indicating that the price is traded above the band at that point in time. Now you'll see that shortly after that, we have another green arrow and then another one and so forth. So one of the questions I get is, why do we have multiple arrows, like this on a long entry? And the answer is because the way that this is actually programmed is that when you get that buy signal, prices are trading above that upper band, but if the prices trade below that upper band, you'll see how the high is below that upper band. That literally kind of resets the signal so that if the prices trade up above that upper band again, that's where you'll get another signal. So let me kind of move over here a little bit, and you can see like this quite a bit clearer in this section right here, where this is above it, this is obviously trading below it, and then this one pokes above it to give you another buy signal there and there. All right. Now, in addition to that, you'll see we've got these red circles right here with the number 10 inside of it. And what that's representing is that the prices have violated that 10-bar low right there. So you'll see it right there, you'll see it there, and so forth on the chart. So it's the exact same thing. If the prices are moving down, they violate that lower band, they trade above it, and then they trade down below it again, you'll get that red circle there. Now, let's go back into that expert here again. I'll go ahead and open it back up. I'm going to scroll down to the bottom of the list and grab the Turtle Trader method and click on the edit button again. Now this time I'm going to go ahead and add to it. I'm going to add the sell stop to it and click on OK, and then click on close. And now you'll see we've got actually some stop signs on here. So there's a stop sign there, there's one here, there's one here, and so forth. And in fact, you'll see that they've actually have replaced some of those other signals there. Well, so first of all, what does this stop sign mean? And as I was pointing out before, they had different ways of exiting out of this trading system. And one of the additional ways of exiting out was using an average true range, or an ATR. So the ATR, another thing that I have added to this system is just a way to actually plot the ATR so you can see it very clearly on the chart. So any of the symbols, the systems, indicators, whatever that I create at Learn Metastock, they'll all begin with LMS for Learn Metastock there. So then I'm going to go ahead and scroll down through this list of indicators right here. And I'm going to look for this indicator right here, which is called the Learn Metastock Turtle Sell Stop. And I'm going to drag that directly on top of our prices. I'll click on OK. And again, I want to merge it with a scale and click on OK. And then this will plot this blue line here. Now, this blue line represents our average true range stop. And the idea here is that if the prices, say, for example, you're in a long position, and then the prices trade down below that average true range, that's another possible exit there. And you can see for the most part, the average true range kind of dissects these bands here. So at times, you know, it'll actually happen on the same bar, and sometimes it won't, and so forth, but I can show you some different examples there as well. So now, the other thing that you'll notice here with an expert advisor is that before we had this little circle here and it had a 10 in it, which represented that the prices are trading below that lower line. One of the questions I get, for example, is how come I'm only getting the one signal now? How come I'm not getting the 10 with that circle in there as well? Well, the expert advisor can only display one signal per bar that way. So what it'll do is it'll take the higher priority one and plot that one. So just in case you were wondering about that. All right. So now once you actually understand how this system works, you can see it's really pretty simple. And the other really nice thing about this too is I get a lot of questions from people like, you know, what is the best system to work, you know, to use and so forth. And that's a really loaded question, to say the least, because everybody's probably, if I took 10 different people, 10 different traders and asked them how they trade, I'm probably going to get very close to 10 different answers, right? I mean, some will be momentum traders, swing traders, day traders. I mean, take your pick. And also, you know, if you take into account also the amount of money that they're actually trading, you know, their risk tolerance and so forth, it just goes on and on and on. But one of the things that a lot of people like to look for is they do like to look for momentum types of trades. And this is a really simple way to just identify what the prices are doing generally, if they're generally moving up, moving down, sideways, and so forth. So again, I think this could actually have a lot of different uses for different types of traders. All right. Now, another question that you might have, or I had at this point too, is after learning about how this system works and so forth, is how good is it, you know? And one of the ways that we can test things inside of Metastock, of course, is using the system tester. So let's go ahead and do that next. First of all, I'm gonna go ahead and remove all these signals we've got here on our chart. So I'm gonna right click on our chart, and I'm gonna go to my expert advisor and choose detach. And so that'll get rid of all those signals. Next, I'm gonna go to our system tester up here at the top. And also same thing, for example, if you scroll down to the bottom of the system tester list, you'll find a system test here called the Turtle Trader Hybrid by Metastock. So this is the one that we're gonna run. So I'll go ahead and select it. I'll tell it that I want to test going long only over the last 1,250 records. So we're going to be doing daily data. So that's going to give us about 5 years of historical data. And down here is our interval. And by the way, excuse me, is that you can test this on any time frame you want, whether you want it 5-minute charts, 10-minute charts, and so forth. And of course, if you do want to test intraday data, of course you have to have the professional real-time version about a stock to do that. But we'll just go ahead and do daily. And then underneath our trade options here, let me show you how I've got this set up here. So I'm going to click on the account tab here. And what I've chosen is what's called a points only test. So our points only test is just going to return back a raw number of points that were gained or lost. So it's really not going to take into account any type of money or interest rates or anything else like that. So we're just going to look for a raw number of points. And if I go to the broker tab, by choosing that points only test, it takes out of the equation that interest rates and margin requirements there. All right. I'll go to the trade execution. And you'll see I've got everything to be traded at the opening price with a 1-period delay. So the way that I want this to actually work is if I get a signal, say for example on Wednesday, I want this to simulate that I got in at the opening on Thursday, and vice versa. If I get an exit on Friday, this is quote unquote going to simulate that I get out at the opening the next day or Monday. So we'll click on OK. And then to run it, we'll go ahead and put in our symbol that we want to test. So I'll put in, for example, like the SPY, and click on our Start System Test. Now, you'll see this runs through extremely fast. We'll click on View Report, and then we'll just take a look and see how this thing did. Now, this is our system test report, and I know we've got a big group in here that has a lot of different experience here with Metastock. I know we've got some people that are brand new. We've got a lot of people that have been using it forever. So I'm just going to go through a few of the basic ideas here inside the report here. And by the way, if you have questions, make sure and let me know. Just send me a message in the chat window, and Jeff, feel free to interrupt at any time, if we need a clarification on anything there as well. So up here at the very top, we can see that we tested approximately 5 years of data. The profit was 117 points and the buy and hold was 282. So first of all, we're looking at this and we're saying, well, gosh, that's not even half of, the buy and hold, right? So it's not a very good system. Well, one thing I always teach is I always try to have everybody take their time going through these reports and trying to point out what I think is actually pretty important to look at, and then making your decision after you've looked at all the different fields and so forth that are important to you. So one of the areas that I think is actually really important is, first of all, are the number of trades. So this traded 33 times. And then we have profitable trades. We had 16 winning trades and we had 17 losing trades. But now right there, a lot of people are like, gosh, I don't want a system that has more losing trades. Well, let me just point out what I think is actually more important is this average profit to average loss. And that is, I highly recommend that if you're looking at different types of trading systems and you have the ability to test them and work through them and so forth, I would highly recommend that you look for systems where the average profit is significantly larger than your average loss. And the idea is, if your average winner is significantly larger, you can be wrong a lot more often than you're right and still make really good money with that trading idea. But if your average loss creeps up to be about the same size your average profit or gets larger, I guarantee that's where you can run into troubles there. And statistically, if you trade something like that long enough, it will wipe out your account. So again, I think that this is a really important ratio right there. The other thing I like to look at is down here at the very bottom, this out of market timing. This is another area that a lot of people tend to overlook. And what this is telling me is how much we're actually in or out of the market. So in this case, we are out of the market 600 bars. So that means we tested 1,250 bars. That means we were out of the market half of that time. So in other words, it generated 117 points in about 2.5 years of being exposed in the market versus being fully exposed in the market for 5 years at 282. So again, it doesn't make up that difference, but it does it does come a lot closer at that point, and it changes these numbers quite a bit. And this is another thing, again, like I say, that I think you can really kind of take a look at and hopefully make better decisions based off of some of this information. So down here at the bottom, the other thing I really like to do is I click on this plot on chart down here. And of course, what this will do is this will show us the buy and sell signals here on our chart. So once we kind of zoom in here, I'll kind of zoom in here on the end, is I want to take a look and make sure that this thing is buying and selling where I think it should be buying and selling. So one thing that I noticed is that when I ran this system test here, you'll see that we've got a buy signal right here. You'll see that this is trade number 32. It got in at a price, looks like 559.77, and it got out right here at this point. But this entry right here, if you notice, the price is traded above that upper band back 2 bars before that, and it didn't get in until 2 bars later than that. So I know that I put in a delay of 1 in there, but for some reason, again, like I say, it's actually delayed by 2 bars. So after pointing this out to my customers, one thing that we could do is we could try to make some adjustments to see, well, how would this system have done if I was able to actually trade at that point when it got triggered? So one thing we could do is we could go into our system test, for example, go back into the trade options, go to the trade execution, and change our delay from 1 to 0, click on OK, and just rerun our test. So let's go ahead and try that. So I'll go ahead and put in SPY. I'll click on our start system test. When it's finished, we'll go and take a look at our report. And it looks like, okay, so now we're at 113 points, okay? We'll click on our plot on chart, and we'll close down these dialogues and take a look at these signals. So now if you look at this signal right here, again, we're 1 bar after the fact. So you can see that this bar here traded above that line, excuse me. And again, like I say, it was just 1 bar delayed. So in other words, based off of the way the scenario that I originally gave you is that if I get the signal on Wednesday, this is simulating that I got in at the opening of the next bar, which is exactly what would happen. But one thing that I want to know is, well, hold it. I know exactly where I would get in these different situations because I know what the price is at this point. I could actually place a buy stop with my broker at that point and say, hey, I know what this price is. If the prices exceed that, I want to get into the market. So in other words, I want to get in at this point. If this bar trades above that upper line, that's where I want to get in. So these are the kinds of things that we do at Learn Metastock, is that we take strategies and systems like this and we say, well, hey, let's try some different ideas and see if they work better, worse, whatever the case may be. So let me show you what we did. So we went back into our system tester here, and now up here at the very top under this search dialog, I'm going to go ahead and type in LMS for Learn Metastock, and this will show me the different Learn Metastock system tests that we have here. Now you'll see that I've created 4 different system tests based on the turtles, 1, 2, 3, and 4. And the first one here, it just says enter and exit based off the bands. So I'm going to go ahead and select it. I'm going to keep all my settings the same, and I'll click on my start system test. And then again, oops, hang on for 1 second. I forgot to put in my symbol. So let's go back in, hang on for just 1 second. Let's go back in here and let's put in a symbol first before I run that. I'll select the system test, and again, we'll go ahead and start it. So I was going to say, because once you run these system tests, these are extremely fast here, to say the least. So now you can see we're up to 173 points. We have pretty much the same number of trades, 33 trades. Now we have 20 winning trades and we have 13 losing trades. Our average profit is still a nice ratio. Our average profit is 12.1 and our average loss is 5.3. So still better than a 2-to-1 ratio. And again, that's the kind of ratio that I'm looking for. Again, we'll click on our plot on chart so we can see the signals and then close down our dialogues. So again, what we're trying to do here is we just want to make sure that this thing is buying and selling where it should be buying and selling. So right here, for example, you'll see that we got in. If you hover over all these numbers here that are on our chart, these are system test results. So this is trade number 32, for example. And if you hover directly over it, it'll tell you exactly the price, in this case, where we entered. So we got in at a price, it looks like at 556.73. So if we hover over that line, you'll see that that line, that's exactly what the value is. So in other words, in theory, you could put a buy stop here with your broker saying, hey, I want to get in if the price exceeds that, and that's exactly what this is simulating. And then vice versa for the exit right here. We know where our exit's going to be because it's based off this line. If we hover over that, you can see that we exited at 553.86. Hover over that line. There you go. And you can see that value, and value number 2 is 553.86. So again, this is just another way to look at this information to say that, hey, what would happen if I did it this way or if I traded it this way? And this is the kind of stuff that we can help you with. So in addition to this, I also created a number of other system tests here too, where we could ask other what if types of questions. So for example, test number 2 says, hey, what would happen if I just got out based off the ATR? If I got in based on the upper level of the band, what if I just got out based off the ATR and just kind of forgot about the lower band? So let's try that. So I'll go ahead and put in the symbol of SPY. I'll keep everything the same. And again, we'll click on our start system test. Now by doing that, we'll go ahead and click on our report. Now you can see our profits actually drop down, or the points drop down to 105. We'll click on our plot on chart. And again, we can take a closer look at the different signals here and just see exactly where this thing is getting out. And for example, like we'll kind of go back here. And like here's a spot right here, trade number 34, this got out at a price of 516.10. So that should be that level right there of that blue line. So in other words, now what this is again testing is testing that we got in based when the prices trade above that upper line, and then it gets out based off of the ATR only. So then of course, then the next question is well, what if I got out based off of either the bands or the ATR? So in other words, I want to get out on the higher item of those two. So I'll go ahead and select that, put in our symbol, and again, we'll rerun this one. All right, click on our report, and now we're back up to 148 points. We'll click on our plot on chart and take a look at these results. So again, same thing. So for example, like this exit right here, you can see that we got out based off of the band right there. But now if I go back here, again, like I say, if I look at this one right here, this one is still getting out on the ATR. So again, this is the kind of thing that we can do, is we can go through and we can ask the program what if types of questions. And in my opinion, this is the incredible power of Metastock, is because once you start to figure out how to work with this, I mean, it's just your imagination is really the only limitation here, to say the least. Now, to take this just one step further is, well, what if these bands really, I don't want to use a 20 and a 10 every time. Maybe I want to try a 50 and a 14 or something like that. How do I do something like that? So to do that, I created one more system test, and the 4th system test is based off of optimization. So we'll go ahead and put in my symbol SPY. I'll go ahead and start my system test. And now if you look down here in the lower right-hand corner, you'll see that this is going to run through 250 different combinations. And again, this is another thing that's incredibly powerful. If you're not sure what length moving average to use or indicator to use, this is where you can use tools like this to help figure out if something like that might work a little bit better than what you're possibly using. So again, what this is doing now is just looking at the different lengths of those bands. So we'll go ahead and click on a report. And when you run that system, you'll see that it appears that every single combination was profitable. But one thing you have to understand is that when you run an optimization in Metastock, it keeps 100 of the most profitable system test results. We ran 250. So in other words, there's a very high likelihood that we did not have all profitable systems, right? Because again, this is only showing 100 of the most profitable. But based off of this, we can then sort on the data. And we can see very quickly that the highest producing one generated over 300 points. And over here on the far right-hand side, we can see exactly what the length of those bands are that were set at that point. So this number right here, this average profit to average loss field right here, this is telling me the ratio between the average profit and the average loss. So in other words, a value of 1.93, what that means is that for every point that I lost on a losing trade, I made 1.93 points on a winning trade. So this is that number that I was talking about earlier that I like to see at least a 2 or a 3 3-to-1 type of ratio. So what you could do is you could go down through here, for example, and you could actually take a look and say, well, hold it, this one has a much better ratio over 3. We can see very quickly here that there are 14 winners and 17 losers. And we can also see the optimization variables here as well. So for the lower band, for the upper band is set at 4 and the lower band is set at 18. So this is another kind of interesting thing that happens when you start doing these types of tests, because a lot of times, you know, somebody gives you a set of parameters and says, well, the upper band should be 20 or higher and the lower band should be this number. But when you run a lot of these tests, sometimes you find out, hey, you know what? Maybe the upper band should be a lower number and the upper band should be a lower number, and then the lower band should be a higher number. But these are the kinds of things that you could basically go through and try to work through and see if some of these actually work for you. And of course, if you want to take a closer look at it, you just open it up and you can take a look exactly how this was generated. So this one was generated using 31 different trades. It had 14 winners and 17 losers. So again, we had more losers than winning trades, but our average profit was over 34 points, and the average loss was 11.5 points. So again, a really nice ratio. And if, of course, if you want to plot that on your chart, I'll go ahead and click on this plot on chart. We'll close this down and then close this down. Now, what this is showing, let me go ahead and get rid of the ATR here for a second. You can see that we've got some signals here on our chart here, but you can see that the bands, of course, if I go into these bands, I can't adjust the upper and the lower bands. I can only adjust the upper band. So to help with that, what I did is I also created another indicator here. So let's go back into our LMS formulas here. And I created this one right here called the Turtle Bands Adjustable. So if you drag this directly on top of your price chart, you can set the bands to anything that you want. So for example, I'll set the upper band to 4, lower band to 18, and again, click on OK. And again, what's really important is you make sure to merge it and click on OK. All right, so now you can see that, for example, when it breaks above that upper band, you can see exactly why you got in at that point and why you would have gotten out at this point right here. Okay, now, in addition to that, let me go ahead and clean up these indicators. I'll click on the edit and then choose delete all. And then to remove just these different symbols here on our chart, I'll go ahead and select the symbols and click on OK. And that'll remove those off our chart. Now, another thing that you might find helpful is also creating an expert advisor that you can work with in the system as well. So say, for example, to find that one, I'll go ahead and type in LMS, and this will show me some of the different experts that I've created. But this one right here, the Turtle system, select that, click on the edit button. And here you can choose long signals, long exits, short signals, or short exits. So I'll tell it that I just want to take a look at the long side right now. And then you can modify these. So for example, for the long signal, I want the upper band, for example, to be 4. So I'll go ahead and change that 20 to a 4. And then I'll change the lower band to 18. So if I do that for the long signal, I also want to make that exit signal the same. So I'll go ahead and change the upper band to 4. And then the lower band to 18. Click on OK and click on OK. By clicking on attach and closing this, now you'll see we've also got signals directly or actually on that chart exactly when those two different items occurred there for you. And the nice thing about that, you can adjust that to anything that you want. Now, one last thing that I created that, of course, I think is actually extremely helpful, and this is actually my favorite tool inside the Metastock program, is the Explorer. This Explorer, if you're not familiar with this, you definitely need to take some time to learn how to work with this, because the capability of this is second to none if you ask me. So I've created some different explorations. We'll go ahead and do the LMS search here again. And you'll see at the very bottom here, I've got a scan here called the Turtle Band Exploration here. So I'll go ahead and tell it to scan, for example, like down here, I'll tell it to scan through the NASDAQ 100 securities, going back over the last 1,250 records using daily data, and I'll go ahead and start our exploration here. Now, this one here, for example, I've just basically have it set up as the standard 2010, meaning that the upper band is set at a period 20 periods and the lower band is set at 10 periods. And this will basically give us all the securities that run through the scan. All right, so let me go ahead and expand this so we can take a look at this. Okay, so here's our securities sorted alphabetically over here on the left-hand side with the closing price. Then we've got a field called upper, a field called lower, the volume, and then the volume percent change. So for example, if we click on the upper a couple times, everything that has a 1 inside this column means that the price right now is actually breaking above that 20 bar high. So for example, let's go ahead and open up Honeywell. And then what I'll do is I'll go ahead and close down this dialog. All right, and let's go ahead and plot our bands here on our chart. And I'll set it just at 20 and 10, that's fine. And make sure and merge it with our scale, click on OK, and place that right on there. So in other words, this is actually showing that Honeywell right now traded above its 20-day high actually today. So now, one of the things that I absolutely love about version 19 of Metastock that they did is the changes that they made to the Explorer. And that is, if you run a scan inside the Explorer and then you sort the data on whatever field you want, open up that chart at the very top of whichever selection that you chose, then you click on the right pointing arrow down here at the bottom. What happens is it remembers that list for you. So now very quickly, I can scroll through all of my securities and these are all giving me the exact same information. So here, this security, you can see this is breaking above that upper band. Click on that right pointing arrow. And again, each security here, as I go through here, here's Comcast trading above it and so forth. I love this feature in version 19. This is just, I think this is fantastic. Makes it really, really simple to go back and look at those different securities that met the criteria you're looking for. And of course, as you might imagine, all these different numbers, everything else here, of course, you can modify. So for example, if you want to change the length of the upper or the lower bands, you just click on here, and then you just change this number right here to anything you want. And same thing with the lower band, just change that number right there, and that'll adjust it for your lower band. Okay, so the point to today's presentation is I just wanted to give you another idea of different ways that we help our clients here at Learn Metastock. And the ideas that I get are primarily from my customers. So we use this a lot just to learn ourselves as well about how to really use these systems and different ways to use these systems as well. And again, one of the really nice things is just your ability to ask those what if types of questions. So now if I could just take a minute, I just want to show you a little bit about our website here. And just give you a quick run through here of the way that we provide the training and how we provide it. So our website again is learnmetastock.com, and the way that we do it is we've got our training set up in a number of different ways. So first of all, we have a section up here called live classes, and what we do here at live classes is we go through and we every Tuesday, Wednesday, and Thursday we do a live class at 12 Eastern time on different subjects, and these subjects of course rotate through the end of the throughout the week or through the month and so forth. Now, one of the things is that if you can't make 12 o'clock Eastern time, you're in a different part of the world, whatever the case is, working, whatever the case is, we always record these classes as well. So if you click on this tab right up here at the very top called the video library, you can go to the live class recordings, and then you can always watch a recording of the classes from that previous week. Now, if you're getting started with Metastock, one thing I always recommend to somebody, and maybe you've had Metastock for years and years and maybe want to just learn more about it, one where I recommend everybody get started is this section right here, which is called Getting Started. And what I recommend that you do is watch the Introduction to Metastock Part 1, Introduction to Metastock Part 2, and finally the Next Step into Metastock. This is going to give you a really good foundation of the Metastock program, how the general features work, how to move around, how to set it up to how you want it, search for security, set up the charts, all that good stuff. So once you get through those 3 videos, that's going to again give you a really good foundation where you can then jump around to any section that you want. So as you can see here, we've got our classes divided, or our recording and training divided up into a lot of different sections. So for example, maybe you want to learn more about system testing, and if that's the case, you know, you can jump over here and we've got a number of different sections there. We've got number of different training courses just on the Explorer. As I was saying before, this is my favorite tool inside the program. Extremely powerful. I'd highly recommend everybody, take their time working through there. Now, if you're more advanced, want to learn more about the, the intricacies of the program language, we can help you with that as well through our formula writing section. Now, the section that I was kind of covering today was underneath this section right here, which is called the trading strategy section. And this again is where we'll take a trading strategy from a book, magazine, whatever, and then we just show you how to duplicate it. Plus, we give you the formulas so you can download them directly into your program. So again, what's really nice about this is that you download the formulas, you watch the video, and it just walks you through it step by step. And by doing this, obviously, I can save you a massive amount of time and effort and frustration, to say the least. So for example, like today's class, we did it on the turtles. So just go up here to the search dialog, type in turtles. If I can type, click on search. And then the actual system itself is this turtle trading system. And then down here at the bottom, just click on this link and that'll paste the formulas right into your Metastack program. Again, you don't have to do anything. Just click on it and basically we've already done all the work for you. We've also have done a number of different product reviews on a lot of the different add-ons that are available from Metastack. We can help with the training. If you got real-time questions, we have a number of different types of training on Zenith as well and so forth. But one of the nice things too is, again, if you're just kind of getting started with the program, I highly recommend go to this first category called Getting Started. And with a lot of the more basic videos and so forth, we've also got some quizzes built into them too as well. So like in this Introduction to Metastack Part 1, at the very bottom here, if you click on this quiz, what this will do is this will take you out to an online quiz where it'll reinforce the different subjects that we covered in that video. So hopefully that'll help get you up to speed a little bit quicker there as well. So anyway, I hope that that's been helpful. And at this point right now, what I'll do is I'll turn it back over to Jeff. And if there's any questions, anything I can do or to help clarify anything, of course, just let me know. So.
We do have a question, and if you have questions, feel free to ask them in here. Brad wanted to know. Oh, it looks like Greg dropped offline. That might be temporary. I don't know if we've lost internet with him. It might also just show that he's offline, but in any case, Brad wanted to know how many ATR is used for the stops in the Turtle Trader system.
Yeah, and that one they use by default is set at 20.
Okay. And then another question, why did you hire Jeff Gibby?
That's good. Oh, man. But I will tell you, it was a good hire, to say the least. I mean, Jeff, how long have you been there now?
This will be 26 years.
Yeah, so I think he kind of beaten some of the averages, what the average length of an employee is. I think he's doing okay. I think it was a pretty good hire.
Do you have a good idea of how many methods you've got? You might have said this already. I think I've got it written down in my slides.
Yeah, you might have it in a PowerPoint somewhere, but yeah, that number's changing all the time. But gosh, I don't know right off the top of my head. But again, I just really want to stress that with these different methods, I mean, we've gone through a lot of work to decipher these trading ideas and provide the formulas that you can download. So, if you need help, I mean, make sure and work your way through there. There's some pretty good ones. One of the more recent ones that I did is the Super Trend system, and that's a really simple system. You can download that one, and again, that one tests out actually really well as well. So make sure and take a look at that one.
Jay Leonard said 20 bar ATR. Do you know if it was simple or exponential?
Oh, I'd have to go back into the formula, but yeah, if for anybody actually, can you still see my screen okay? Is that okay?
Yeah, I haven't yanked it from you yet. We're looking.
Okay, good. I was gonna say, if anybody has questions and they want to contact me directly, just send me an email there at admin@learnmetastack.com. And we can go into more of the details there as well. But as far as the details of any of the formulas, of course, anything that I create is also wide open. So you can always just go in and take a look at the formula and just get whatever you want. So, and the other nice thing about that as well is like once you become more of an advanced user, if that's your goal, you can then of course take these formulas, you can modify them, you can copy them, you can, you know, add something else and ask those what if types of questions, you know, inside the program.
Greg says his computer crashed. It's rebooting. So there we go. That's why I didn't even see that until I noticed he was offline. I'm sure he'll be joining us again real quickly.
Yeah, I'm sure.
Tell us a little bit. So what time are the live classes? You do 3 live classes a week. What time?
Yeah, so we do 3 live classes per week. We do them on Tuesdays, Wednesdays, and Thursdays, and they're at 12 o'clock Eastern time. So again, I know that that's a tough time for some people. So, and that's why we do the recordings of the live classes. So I just know a lot of people can't make it, but you know, we always record them, and that way you'll never miss it if that's you know, if you want to take a look at that. So, and as far as subjects go, let me just, if you don't mind, I'll just say one more thing, and that is, our ideas as far as like classes, you know, things that we review, things, you know, trading strategies and so forth. I mean, I'll say that, gosh, I don't know, 90% of them, you know, comes directly from the students. You know, they'll take a system like this turtle system, and that's where this one came from, by the way, is there's like, well, they want to do some different things with it. And when they pose those types of questions, you know, that really kind of opens up a whole other area that we can go and explore together and learn together. You know, maybe there's another way to take a look at this information and go about it. So
cool. I had a thought, but it went away. I'll come on here and talk a little bit about. Oh yeah, here's what I was going to say. I think that I'm glad it came back because I think it's important. One of the things that we use Learn Metastock for here is a training resource. We just bought on a new sales rep not too long ago, and the first thing that we'll have is we'll have a big list of videos that we make them go through. And as such, it's something that we use internally as our own training regiment. And I think that's a big testament to kind of the value that it provides. So looks like Greg's coming back online. All right. I'm going to go ahead and kind of talk a little bit about the offer we've got. It's a great offer. Kevin, before I let you go, I want to say thank you for spending some time with us today. Let me go ahead and just make me the presenter, and I'll just kind of talk a little bit about how to get people set up. Thank you. Okay. All right, then. Let's see. Actually, I did skip ahead a little bit just so I could get that number that we were looking at. But with learnmetastock.com, like I did say just a second ago, it is a training resource. We use it as a way to train all of our employees when we're onboarding them. At least I use it to train all of my the sales reps that we have on my team. So as part of it, you're going to get 3 live classes every week, hundreds of videos up there with tests, lessons, all that kind of stuff. On those, this is just an itemization that I did a while ago, but there's 21 basic Metastock videos, 4 expert advisor videos, 3 videos on using the system tester. It's very, very detailed stuff. And that's one of the reasons I really, really like it, because I view Metastock as a really big toolbox. So there's a screwdriver in there, there's a hammer. There's not really a screwdriver. It's a metaphor. But there's lots of tools that are in there. And if you understand better how to use those tools, the better they're going to work for you. The better you understand how to use the scanner. I mean, you can use the scanner with all of the systems, and it's fairly straightforward. But what if you want to tweak the settings? What if you want to kind of create your own system and that kind of, or methodology in the scanner? That's where Learn Metastock can really kind of help you ramp up your Metastock knowledge, and that's why we use it internally as a training resource. So very, very well detailed information all throughout there, including the 21 complete systems. This might be an old number because, as Kevin says, it changes all the time, but you're going to have, as part of that, you'll also be able to go in and look at videos on 21 complete systems. That includes 9 templates, 62 indicators, expert advisors, system tests, scans, you name it. So what we're doing here, this matches well with the Metastock offer that we're doing. And I would recommend you do it with Metastock, because if there's something that can really help you kind of get running with Metastock, it's Learn Metastock. So normally the price on this is $99 per month. We're going to do a new customer special with it, where you'll pay $99 for 3 months access. So that's about $33 a month. And it's going to be, if you sign up today, it's going to have you running from now until 2 days after Christmas. So lots of time to kind of go in, kind of absorb the videos, all that kind of stuff. If it's helpful for you, you can keep going with all of the subscriptions, but I would recommend you give it a go, just like I'd recommend that you try Metastock. So you can sign up for this if you go to metastock.com/conf promo. You can you can give us a call, 800-882-3040. And you can also go to metastock.com/saleschat. So big thanks again, Kevin, for kind of being here, spending some time with us, and great service. If you've been using Metastock and really are kind of trying to figure out a good way to kind of really maximize your tool, it's a great service for you. So there you go. Thanks again, Kevin. All right. Let's go ahead and say some thank yous to some of our partners or some of our sponsors for the event. I want to say quick thank you to Stocks and Commodities Magazine. You can go to Stocks and Commodities Magazine at www.traders.com. They are, yes, welcome back, Greg.
I'm sorry, did I miss anything important?
No, I did notice you were gone, and we did kind of joke about it. Kevin and I did. We kind of thought maybe you got tired.
Do you mean to say that you and Kevin Nelson took advantage of me in a situation that was not to my benefit?
No, not at all.
All right. Well, my computer crashed.
Yeah, we saw that.
And I tried to come back on, but it didn't in any way affect the broadcast, did I?
No, everything kind of kept running. I didn't even notice until I came back in here to look at questions and stuff.
I'm glad I missed. All right. Well, I'll let you. Oh, I'm sorry. Do you need anything, or should I just get out of your way?
Well, actually, no. You know what I'm going to do is I'm going to do prizes, but I'm going to do prizes based on questions. So anybody that asked a question today might be eligible to win. This would be a question in GoToWebinar. And so I think I'm good for right now. We're a little bit ahead on time, but that's okay. It's been interesting. Usually we're always behind on time. And in this conference, it seems like we've always been ahead of time. Just an interesting observation. Anyway, I can do this, though. I got it.
Well, I will get out of your hair, my friend.
All right, no problem. And it's never a bother. All right, let's see. The next prize that we're going to give away, and we're going to reward somebody with audience feedback. But the next prize that we're going to give away is the Trading Indicators Welcome Package. It's worth $497. It's available from Daniel Sinig. Daniel spoke a little bit earlier in the week, and it's worth $497. It contains the Divergence Cloud Indicator. It predicts the odds of winning the next trade. Along with that, and then the rest of it is actually it has auto optimization and all that kind of good stuff. Also includes access to the weekly trading sessions that Daniel does, the trend radar indicator, all that thrown in is part of the package. So what I'm going to do here, actually I should have maybe made Greg do this, but it's okay, I can do it here. I'm just going to open up all the questions in GoToWebinar. What I'm going to do is I'm actually going to scroll a little bit. So I'm going to start maybe right about here, and then I'm going to scroll up a little bit. I'm going to look over here more, and then one of these comments is going to be highlighted, and there we go. The winner of this particular prize is Harry Mehta. Harry, earlier today Harry M. I don't think that.
Sure you don't need my help, Jeff?
Harry asked earlier how many days the offers are valid for, and because of that, you just won a prize. So there you go. Give me just a second to make a note of that in my prize thing. Harry, if you're still with us, I think you probably are. Congratulations. And either way, congratulations. So let me just send this to here. Oh, okay. All right, congratulations, Harry. Gotcha. I'll have that put in the prize deck. So, and for anybody that won prizes, we've given away a ton of them right now. I wonder how many. I'm going to count it up. We still have one more prize. It's the biggest prize of the conference. We're going to do it after the event. So, in any case, if you won a prize, what will happen is next week as we're cleaning up, I will go through and send all the prices out to, if it's a stocks and commodities magazine, I'll send it to them. And for anybody that want a price, keep an eye on your inbox next week so that you can kind of make sure that you get it. So there you go. All right, let me go ahead and get rid of the answered questions here. And I think that does pretty good. If you have any, again, with Metastock, you have the ability to scan the markets, test trading ideas. We've got our patented forecaster in there. Scott talked about it earlier in the week. It's been rated #1 in its price category 31 years in a row by the readers of Stocks and Commodities magazine. The special that we're doing on it for the conference this week is if you lease it for a month, we'll give you the second and third month for free. You should do that with our Metastock. Again, that'll get you going until December 27th, right after Christmas. You can do that at metastock.com/conf promo. You can do that at metastock.com/sales chat. You can do it at 800-882-3040. So without further ado, and 1 minute early, we're going to go back. We had Tyler come in and talk yesterday. I kind of referenced as we talked about the CMT Association, kind of how a CMT Association, how we appreciate them and how CMT can help you. Today they're going to talk he's going to join us again with Alex Cole. It's getting late in the day with Alex Cole, and they're going to talk about kind of a methodology that they've designed that kind of has a lot of similarities. They use a lot of jargon that has to do with a NASA launch, GoNoGo, that kind of stuff. They do a really, really good job. We love having them on, and they're going to take us home today. So without further ado, Tyler, Alex, let's go ahead and bring you on here.
Hey, Jeff, how are you doing today?
Good. How are you? Welcome back.
Thank you so much. I think
you're sharing your screen.
I think it's often overlooked just what a hard job you have to do. Yes, it's late in the day, but you've been doing this every day for 5 days. So I think we should all maybe recognize the fact that you've done an excellent job with this conference.
And this time, I can still talk at the end of it. I'm still enunciating.
Yeah. I can hear you loud and clear. Yeah.
Some people might argue that that's a subjective answer. All right, but I can hear you guys. I can see you guys. I'm going to get out of the way and let you guys take a turn.
Fantastic. And just to pick up where we left off yesterday, my daughter told me before bed, or asked me, what do you call two witches who arrive at college together?
Uh-oh.
Roommates.
That's a good
Put
one.
that in your pumpkin spice latte and stir it up, huh?
I'm going to add it to the database.
The database. Thanks everybody for joining. It is 4:01 p.m. Eastern, which means U.S. markets are now closed. You can all just take a big deep breath. Thanks so much for sticking around with Alex and I. We're going to take you home, and hopefully if your anxiety of trading is over for the week, you can clear your mind and think a little bit about your process. What we're going to talk about today is how you can use data to blockade, maybe mitigate against some of the emotional bias and behaviors that we all face as investors and traders. And just think for a second, knowing that the Fed cut interest rates 50 basis points, would you have expected that the long end of the yield curve would be rising every day since the announcement? Seems kind of counterintuitive. How about the fact that last quarter NVIDIA beat analyst estimates on their earnings call, and yet price fell 8% following the earnings announcement last quarter? These are the kinds of things where if we get wrapped up in our own belief system or narratives or what we expect might happen, we start to forecast, we predict the markets, it can really get in our way as traders and investors. So all of these narratives that we're constantly bombarded by should really be set aside. And what Alex and I are going to talk to you about today is just keeping your focus on the action of the market itself, paying attention to price so that you can stay on the right side of the market. And we just wanted to kick off today with this quote from John Henry. Go ahead, raise your hand at home if you've ever read the book or seen the movie Moneyball. Well, it was written about the Boston Red Sox and these cybermetrics teams that brought statistics and data analysis into player selection. It's a great story, but what John Henry brings to the table is an upbringing on the soybean farm in southern Illinois. He learned the commodities trade from his humble beginnings and realized that if he could take the would-be, should-be out of his decision making and simply quantify what's actually happening, that in and of itself is a huge advantage over others. You can pay attention to and stay on the right side of market trends by simply paying attention to market price action itself. And he has gone on to be a very successful trend-following hedge fund manager. He also owns Roush Fenway Racing, Liverpool Football Club, in addition to the Boston Red Sox. So, you know, a little proof is in the pudding that this does actually work. So what are we planning to do today? With this 55 minutes that we have together, we're going to do three things. We're going to identify what these tenets of trend-following investing are really all about. We're going to talk to you a little bit about designing a rules-based system. Professor Alex Cole here is going to walk us through not only how technical analysts broadly use a mosaic approach and lots of different tools, but how you can use GoNoGo charts to help simplify that process. And before we're done today, we're going to talk about how to make trade decisions in real time. How's that sound as a plan for today, huh? All right, we got to get started by getting a little mathematical. So bear with me here. We're going to talk about the expectancy formula. So you might pay attention to your P&L on your trading account, and maybe you pay too much attention to it. Lots of great traders have argued you should steer clear. But the expectancy formula is basically just the combination between the percentage of winning trades you have and the profit ratio of those winning trades to the losses that you incur. And so this beautiful little graphic that we've got is showing us the efficient frontier for any trading strategy, the combination of percentage of winners with the profit ratio of those winning trades. And right here, you're going to have a break-even system. Anything below that, you're unprofitable. And this is what we're striving for. We want to increase the percentage of winners, and we want to increase the profit ratio that we're getting on those trades. But let's just pick on this dot here for a second. That's 50-50, 50% winning trades. So imagine your entire analysis, the whole strategy, the edge that you bring to markets is to simply flip a coin, right? Heads up, we're buying it, we're putting it in the portfolio. Tails up, we're not buying it. Imagine that was your whole discipline. You could still be break even or profitable if you are controlling the profit ratio of those winning trades, meaning you have to let your winners run and you have to cut your losses short in order to increase the size of your profit ratio. You have to stick with trends. You have to be willing to admit when you're wrong. And that is very difficult for human beings, myself included. Alex, have you ever had trouble with this?
Certainly have.
And it's well explained by the behavioral finance community. Folks like Daniel Kahneman and Amos Tversky in the 1970s developed the prospect theory, which told us that as human beings, we experience much more pain in suffering a loss than we experience joy when we have a gain. How does that play out in your portfolio? You get into a trade and it starts working against you. You're down 5%, 10%. It keeps growing and you choose not to close it, because by closing out that trade, you're admitting to being wrong and you're accepting the loss. Now, it may continue to grow 15, 20, 30, 40%, 50% drawdowns in the US equity indices are not once in a lifetime events. In fact, it's happened 3 times in my lifetime, which means that we have to be more responsible in our risk management. And individual securities are far more volatile than that. So if we can accept that there are some rules that we're going to follow, and we can lock in losses early, meaning we can cut our losses short before they have destroyed our P&L for our portfolio, that's going to help us over the long run to maintain profitability in our trading. So now I'm going to hand this over to Professor Cole. And Alex, why don't you walk us through what a sensible approach to trend identification is, starting with what not to do.
Sure. So we've all seen these kinds of charts. I'm sure I've certainly been guilty of building plenty of them in my time, where we get absolutely fascinated with the study and the field of technical analysis. And we know that what we're looking at, what we're researching, what we're studying has value. So we try to add it all to the chart, and we end up with something like this, where you can't really see price action, you can't look at important levels, and you end up with what we call the problem, which is that of analysis paralysis, or just complication, really, where you've overwhelmed the chart and you're no longer able to make those decisions, it's certainly not quick ones. So we don't want to do that. I think that's sort of fair to say.
Absolutely.
Hold on, that's zoomed in. Yeah. So what we do want to do though is keep the information that we found to be valuable. So in our time working with people in institutional finance, there are certain things and certain indicators, certain components of technical analysis that people keep in their toolkit and have proven to be valuable to them. And so what you want to do is build a weight of the evidence approach, build a checklist of technical concepts and fundamental ideas that help you make the right decisions. And so we want to identify trend in this way. And we know that that's arguably the most important skill that we can attain in technical analysis, because if we can identify a trend in price action, then we can profit on the majority of the move. And we, of course, like to say that this is simple. It sounds simple, but it's not easy to execute. But you can see if you can find the trend and trade in the direction of the trend, you're stacking the odds in your favor, so to speak. So what we'd first do is want to eyeball the trend and sort of look to see if we are moving in any discernible direction. So somewhere towards the middle of this chart, we see that ultimate low, and we start to see prices rise from there, and you start to see a new higher high, a new higher low, and then of course a series of highs and higher lows, and that defines the trend for us. So if we move on from here, you're going to want to find a way to automate that process. And what we've done from our time in technical analysis is learned that there are so many valuable tools and so many indicators that allow us to perform the analysis we want in a way that removes subjectivity. So if we can use an indicator to automatically find higher highs and higher lows, then we can say that that is doing the job of eyeballing the chart for us, and we can identify trend based on price moving higher in that sort of series of highs and lows. And one of the ones that we'll use is something like the Donchian channels. And if you're familiar with the amazing story of the turtle traders from the 80s with Richard Dennis and the whole idea of him thinking he could train people to trade, he could sort of raise traders, that was the main indicator used for entries for the turtles for that experiment. So using Donchian channels, what you're really looking at here is price relative to a period before and asking yourself whether or not the current price is the high of that range. And if it is, then that line will move up with price. So you can see after that low sometime, you can see how that green line for the first time gets a little higher. And then of course, it continues to step higher as the trend takes off. You can also see that the lows move higher as well. The red line corresponds to the lows, the red line on the bottom, you see that moving higher as well. So now we're seeing the Donchian channels move higher. We're identifying higher highs and higher lows in a way that's less subjective. But we're going to move on to something else from there to confirm what we think we're seeing at that moment. You know as well as I do, Tyler, and I'm sure everybody on the call knows that simple moving averages are on almost all charts that we see when working with clients or really anybody in the financial markets. A lot of times when you're talking about technical tools that are most used in our industry, we don't even consider the moving average as technical because it's just so prevalent. It's hard to know if that person is a technician or not, just because of the moving average on the chart. I even remember talking to somebody in financial news way back when that said, "Oh, I'm not a technical analyst. I don't do that." And I said, "Well, you have a moving average on your chart, right?" It's so prevalent. It's everywhere. And so one of the first indicators you're going to use probably is a moving average. And what that tells you is that when price is above the moving average, it tells us that price is moving faster, higher than the average of its prices over whichever length you have for that moving average. So it's inherently bullish to say that price is higher than its moving average because current price is higher than the average of its prices over its recent history. But you can see that with this, the price moves above and below the moving average, and you can see how it's sort of chopping around there. So what people will do, if one moving average is good, two moving averages better, sometimes you even see people with, a whole envelope of moving averages. But let's stick to two here. We can throw the second one on, and we can see when they interact, right? So when the short-term moving average crosses above the long-term moving average, we know that prices in the short term are moving higher quicker relative to prices in the longer term. So it smooths out that idea that we were just talking about with one moving average. And so when the moving average crosses above the longer moving average, we can say that that is a bullish event, and prices, you can sort of identify the beginnings of a trend perhaps based on that interaction between those two moving averages. Now, if we continue from here though, we'll probably want to put more on our chart. And one thing that is used, almost as much as anything else is the Bollinger Bands. And they're a really, really interesting concept, because if you remember back to your maths classes in school, you should probably remember that standard deviations around a mean is a very powerful idea. And so within any data set, 2 standard deviations around a mean encompasses just about 95% of all of the data points. And so when we throw standard deviation bands, which is what Bollinger Bands are, around a mean, we know that most of the trading will happen between those bands. So if the price trades up to and out of or tests the boundaries of the Bollinger Bands, we know that that is very important information. It's interesting because it's unusual for price to be outside of 2 standard deviations away from a mean. Now, of course, the beauty of technical analysis is that prices are not normally distributed, so it's not exactly 2 standard deviations. It's not, but generally speaking, we're looking for those unusual events, right? Like you said at the beginning, Tyler, we want to let those profits run. We want to find those fat tail events, those times when something is happening that is outside of what is normal, and normal is price being contained within the band. So we might put Bollinger Bands in here, and just around that sort of time after the low, we test the upper bound, but we don't really break above it. We don't really break above it until a little bit later on. So somewhere in there, we're going to use Bollinger Bands to confirm the fact that we're seeing a new trend in the upward direction. Let's just put a couple more on here, just for the sake of time. We won't go through a really long checklist, but we might put volume on the chart. Traditional volume analysis tells us that when you see something important happen in price, you want to see heavy volume. So again, maybe not at the beginning of this new trend, but towards that sort of end of August, or actually beginning of August, where we're seeing all of those green bars there, we're seeing some healthy volume as the price is breaking above the Bollinger Band and price is above its moving average, and the moving average short has crossed over moving average long. We're seeing a new Donchian channel high. So all of these things now are lining up to say, yes, you were probably right. There is a new trend in the upward direction. Let's just put one more on here. This is the moving average convergence and divergence indicator. Again, a very, very common one. And you can read this in lots of different ways. The sort of the original way you'll read about it in the textbook is that when the MACD line, that's the white one, crosses above the signal, the red one, that's a buy signal. So you're actually getting one pretty low there, close to the low. But you're also getting some whipsaws later on as we get into August and September. So you might be looking at the signals from MACD. You might also be looking at MACD crossing above the 0 line, because that's telling us that the spread between the moving averages used in MACD is positive, meaning that short-term prices, again, rising quicker than longer-term prices. So if we take a pause, because that was a lot of talking, and we have a quick sip of our coffee, we can sort of say now that around that period between July and August, we are starting, after that last low, we're starting to see new highs, Donchian channels. We see price testing the top of the Bollinger Band, but not ultimately breaking above it until later. We're seeing a moving average crossover right in the middle of that sort of oval, and we're seeing MACD crossing above its 0 line. We see volume then pick up. So somewhere in that oval, we would feel fairly confident saying we're recognizing a trend in a new direction.
And what Alex is talking about is exactly how the pros do this, right? They have a checklist. They have a mosaic of signal that they are looking for, a combination of multiple different indicators that are going to paint a complete picture of the technical environment. They want to know, if we're going to enter a trade, that probabilities are on your side. The challenge with a responsible approach, and this is just half a dozen tools, and I know we've all seen the charts, maybe even built the charts ourselves, with many, many, many more indicators and studies available on the chart. The problem with the mosaic approach is that we've introduced analysis paralysis. At what point in this 4 or 5 week period do we feel confident enough to make the entry decision. So remember the expectancy formula, right? We want to have a high percentage of winning trades, but we also want to capture those trends and let them run. So all those whipsaws, that's going to be problematic to our long-term profitability. All of the hesitation that we might have to get into this trade. Right now, we're looking at a chart of a life insurance company, and really the ticker doesn't matter. Think back to what your emotions were like at the beginning of 2023, after you had just suffered through a bear market of 2022, after you had just had the irrational exuberance of the bull market post-COVID, right? It's an emotional roller coaster. And so at the end of a bear market, you're not feeling particularly confident. How about just in the last month? How many commentators have been talking about the potential for recession again? I can't tell you how many newscasters, how many podcasts and alerts that come my way of economists predicting that indeed we've missed the soft landing. We still have inflation, but now the jobs number came in soft, et cetera, et cetera, et cetera. So we lose a lot of the emotional insight to deal with all of those narratives if we don't rely on the data. But relying on your responsible checklist also introduces analysis paralysis, confusion, or even just delay, right? If you're feeling terrible at the end of a bear market and this trend starts to develop, you're not going to want to buy into it. You have to resist your own emotional urge and play on the side of the market based on the data in front of you. So in order to simplify this concept of a mosaic approach without introducing analysis paralysis or indicator overload, we've introduced GoNoGo charts. And the core idea is to simplify the visual that we're looking at, but retain all of the information in that responsible approach to technical analysis. So we want to keep price as our main focus. We're going to talk about that in just a second, but we're using a color-coded candlestick or bar to give us the sense of where the direction and what the strength of that trend is. And Alex, this is available for free on Metastock, correct? So this is a free template of the GoNoGo trend indicator. Right now, while you're watching this, you can head into your charts and apply that template. We're really proud of this work. I think there are a lot of great technicians out there who have built algorithms. They put that in a black box, and you'll hear lots of fund managers say, just trust me, it's a little too complicated. What we wanted to do with the algorithm is to spit it back out into a form of data visualization so that everybody can see what's happening in real time. There is no black box, it's right there in front of you on the chart. So check that out. All we would ask in return is let us know how you're using it. What asset classes do you trade? What's your time frame? Are you day trading? You swing trading? How has it changed your decision-making process? Send us any feedback you've got. info@gonogocharts.com. Now, I mentioned that we want to simplify the data visualization. We want to simplify the chart that we're looking at so that we can keep our focus on price. I zoomed in on that very messy chart at the beginning of what not to do because the price panel was squished all the way at the top. We couldn't even see the fluctuations of what was happening in market action. It was all studies and extra lines. And it's this quote from Mark Abraham that I think really summarizes the point. I included this yesterday in my talk yesterday afternoon, but Mark Abraham says that ultimately it is the dollar-weighted collective opinion of all market participants that determines whether a stock goes up or down. And that consensus is revealed by analyzing price. This is that supply and demand relationship we talked about yesterday, the need to trust in price, that all of that fundamental information is being reflected by the market itself. Now, with GoNoGo charts and with trend following, we've got some very simple but critical things that we're trying to accomplish. Alex, why don't you walk us through what the colors mean?
Yeah. So if you remember that chart we were just looking at, we have 5 colors that take us through strong and weak form of both up and down trends, as well as give us a neutral reading, which often happens at transitions between trends, as you can see here. So we have the strong blue, the bright blue color tells us when that go trend is the strongest. You can see that really just takes off, and it's not until it starts to pull back that you see that color change. That pullback is often the weakness in an uptrend is going to be colored the aqua or weak form of the go trend, and you'll see that as trends don't go in a straight line. We know that, right? We know that trends will move and then they will pull back. That could be profit taking, any number of reasons. But what we want to see is, does the trend hold? So weakness, yes, that's okay. But does the trend hold? And you can see here then the strength of the trend resumes as we enter those bright blue bars again. On the other side of the chart, on the left side, you can see the no-go colors of the trend, and we've got the strong purple in a similar way, painting the strongest form of the no-go trend, and then the pink bars, like the aqua bars in a go trend, representing those areas of weakness of the no-go trend. So still, the weight of the evidence is telling us that we're in a no-go trend, but it is weakening, and so perhaps we'll pay more attention. But as long as those colors hold, the trend still is a no-go. And then in the middle of the chart, you can see as we're transitioning between trends, we are seeing some amber bars sprinkled in, and we call those go fish bars. Those represent uncertainty in the markets, sort of a period of sort of fluctuation, perhaps between trends, or often in sideways choppy markets, you'll see that color. And we call them the go fish bars because we're big fans of the life and works of Jesse Livermore, and he was famously quoted as saying that there's a time to go long, a time to go short, and a time to go fishing, meaning that when the market doesn't give you what you need, then take a break and go fishing. So we call those our go fish bars when the market is uncertain. And that's because not enough of the criteria are being met behind the scenes for the go-no-go trend indicator to paint a go or a no-go trend.
Absolutely. And let's just keep in mind what was happening in very early August, right? VIX spiked to almost 60. We had a very sharp collapse as the Japanese carry trade unwound, the Bank of Japan hiking rates, surprising a lot of currency traders. And we had a pretty massive shift overnight in the markets, and that spooked a lot of folks. So when we think about our expectancy formula, and I'm going to keep referring back to that, sticking with trends is what allows us to stay on the right side of the move. It's all going to be time frame specific. We're going to get to that in a second. But if this is your time frame, sticking with this trend while it's in weak form of a go trend, right? Our trend conditions are still in play, and that is what's really powerful. Similarly, we don't want to get caught up in relief rallies. We don't want to buy back in on this, which is not the ultimate low. And I know for a lot of traders, you start to see prices climb. That's right about the time you get in, and it rolls over again. We want to be sure that all of the conditions are met and that probabilities are on our side, which is why we use these beautiful color-coded charts. All right, so apply that template on your meta stock charts right after this call. Let's talk a little bit about timeframes, Alex, because I know amongst the Metastock community, amongst the technical analyst community worldwide, we've got a wide variety of strategies, asset classes, and certainly timeframes. And what's beautiful to me about technical analysis is that these tools are fractal, meaning they're going to work the exact same way, whether you're looking intraday or you're looking at monthly and quarterly bars. The time frame is something we can be agnostic about. We can also use multiple time frames in our analysis to give ourselves an advantage. So here we're looking at the S&P 500 using an ETF proxy, and we've got a daily trend. It's in a strong blue go condition. But as Charles Dow told us, markets move across multiple time frames. As an accomplished nautical expert and a sailor, he used this analogy of the oceans to describe the three main time frames that he observed from simply just looking at the ticker tape. And he would say that the primary trend, which is largely driven by macroeconomy and the fundamentals of the companies that we're analyzing, that's going to be like the tides of the ocean, unflappable. So the longer period primary trend, and that could be different for different traders. If you're trading high frequency, the primary trend of the market might be a daily closing price. Similarly, contrarily, if you are a large mutual fund portfolio manager, your primary trend might be monthly or quarterly bars because you're looking out over decades of a holding period. So tides of the ocean, the market has a primary trend. Charles Dow also observed that the market has a secondary period, so prices go above and below that primary trend. He referred to those as the waves of the ocean that peak and crest when the tide is in, and they're a little bit shallower when the tide is out, but we can see prices fluctuate above and below the primary trend. And then he identified this minor period, or the tertiary trend, and those he compared to the ripples on the surface of the water. So this is very short-term fluctuations, the interpretation of the 24-hour news cycle, information as it's coming in, and those small fluctuations in price. If you're a long-term investor, that's all noise to you. If you're trading intraday, that might be where you're executing trades. What we're here to tell you is that you can use all three time periods to your advantage. And I think best practice would be to look at your charts across multiple time periods to give yourself some context even before you're making trade decisions, right? If we can see that the secondary trend is now rising with the underlying primary period rising, then maybe we take executions on this minor period, but we're trading in the direction of the trend. And if you are trading to the short side, you need to know that the upward bias of the market will eventually catch up with you. And that's going to be where risk management becomes most important. So let's look at some GoNoGo charts across multiple time frames. Alex, talk to us about this weekly chart of the S&P 500.
Yeah, so as you just said, such big fans of multi-time frame analysis, and it allows you to trade in the direction of the trend. And in this case, we're looking at daily and then a weekly chart. So we just saw that the daily chart had gone back into a go trend, and the weekly chart here is in a go trend and has been since the sort of early to middle of 2023. So this longer term trend here is a go. And so perhaps on the daily, we're not trading against that and trying to short the market. We're waiting for moves in the direction of the larger time frame. Now, of course, this could be different depending on your risk sort of profile. But right here, you could be looking for those movements higher, as you can see the go colors coming in, and being very careful around the no-go periods on the daily chart, because when we go to that weekly chart, we know that the weekly time frame is in a fairly strong go trend. And then we might step down a time frame. Again, it depends who you are, and we talk to people that are in different roles within our industry. You might be trading for a fund manager who looks at the weekly and daily charts, but you might be looking at shorter time frame charts to get good entry or to get some execution. So if we take it to that next step in the logical sort of thought process here, a larger time frame bias is a go on the weekly. We're back in a go on the daily. So now perhaps we step down to the 60-minute and we look for opportunities to take go entries, because we aren't going to be trying to trade against the trend that is lining up now on the weekly and the daily. We're going to look for opportunities to get in at relatively intelligent points to that upward moving trend. And so you can see here, this is sort of most of September, or maybe like 2 weeks of September, is a nice go trend that lines up with the daily and, of course, the larger time frame weekly chart.
So we talk to a lot of long short equity fund managers, and when they're looking at a weekly time frame, the market regime here since 2023, it's a bull market. So we're biased to the long side when we have the context of the fact that equities are in favor and they're leading, which means our execution, perhaps we don't take the short trades when we're in a raging bull market. There's too much risk by positioning ourselves to the downside and fighting that trend. But we might use those three time periods, just as Alex told us, to better execute our fills and to stay on the right side of the trend. Now, we've been talking about equities, right? What about for all of us that trade futures or trade currencies or trade commodities, or perhaps you are a crypto enthusiast and that's the only asset class that you want to trade? What about that? Well, the beauty of technical analysis is that it's not only time frame agnostic, but also asset class agnostic. That doesn't mean that the price action behavior in different asset classes is all the same. Of course, that's different. Volatility is different and trends appear differently across the asset classes. But you can use these tools in the exact same way, no matter what you're trading. And going through the CMT program, you learn a lot from the great John Murphy about intermarket analysis, but also a lot of coverage from Marcos Katsanos and others who help to quantify the correlations between these asset classes. So these next couple slides, even if you are an equity only investor, no problem there. There's no right or wrong answer. You can still look at these other markets do some analysis there to help inform your decisions about the kinds of styles, the cap size, the sector groups or industry groups that you want to be trading in your equities portion of your portfolio. There's a lot of information to be gained, even if you're not trading futures or cryptos or anything else. So quick multi-chart layout. Alex, let's show the GoNoGo trend conditions across the asset classes. Just get a little a sense of the landscape here.
Yeah, and we love to do this kind of thing. And of course, in Metastock, you can build these into multi-chart layouts however you'd like, but it gives you that top-down approach. And so we can say quite quickly, when we just go around the asset classes, that equities are in a strong go trend. This is all on a daily basis, of course. So equities are in a strong go trend, painting bright blue bars. If we move across to look at US Treasuries, this is, of course, Treasury bond prices. We can see that they are in a go trend as well, but we've seen some weakness this past week or so, and you can see they're painting aqua bars. But Treasury bond prices have been moving higher as Treasury rates have been moving down. And of course, with what we know about intermarket analysis, rates moving down may be good for equities. That's what's been sort of playing out over the past month or so. US oil here, we're seeing a no-go trend. We're seeing a series of lower highs and lower lows. We just set a new lower high and rolled over. So the no-go trend still in place here for oil, but weak no-go because those bars are pink, not the strong purple. So just to be aware that we are in a weaker portion of the no-go trend as we try to get back to test those lower lows. If we move across to Bitcoin, Bitcoin has been all over the map really in this year, but we have re-entered a go trend for Bitcoin. So we'll see if this one sticks. But on a daily basis, a go trend, strong blue bars over the last two of them. We move across to gold. Gold has been the answer, it's given the answer that people have been looking for when asking the question about whether gold will actually really do what people thought it was going to do over the last several years. So we've been looking at really long-term gold charts and seeing patterns that have led people to believe that perhaps there's a big bull run to come in gold. And of course, over the last couple of months, we've made a bit of a break higher on daily, weekly, and monthly charts. And so this is the daily chart showing strong go as prices race higher to new higher highs. And then on the far right, we've got the dollar. And the dollar, of course, has been in a no-go and is moving lower. We're seeing strong purple no-go bars, but we haven't yet made a lower low. So we're going to look and see what happens there, but strong no-go bars for the dollar. And just like that, you can say, okay, these are the trends in the markets from a technical perspective.
Absolutely. And knowing weakness in the US dollar and falling rates or rising treasury bond prices can be significant tailwinds for equity rallies. All right. Congratulations, everybody. You've made it to the 50-yard line. We're halfway through this presentation. Thank you very much for sticking with us. Hopefully these concepts of trend following and how we can improve the P&L on our portfolios are helpful to you. Make sure you use that free tool to plug in on Metastock, and it'll just let us know how that's helping you make faster, better decisions with your trades. All right. Now to make a complete view of our analysis or to guide our trades, there are a few other components of the technical picture that we want to include in our analysis. So Alex, why don't you walk us through the complete solution from GoNoGo charts that's available on Metastock?
Yeah, so of course, we just spent the bulk of this presentation so far talking about how important trend analysis is, and it absolutely is. But where might you go from there? Where might a technician go next? We've talked about the trend, and we've talked about how we blend those objective foundational concepts into something that color codes price. But we might then move on to momentum analysis. Momentum analysis is probably where we're going to go next because it tells us so much about the strength of the trend that we're seeing in price. So this is going to be in that lower panel. We've got our GoNoGo oscillator, which does the same thing. It takes foundational concepts of momentum analysis, blends them together, taking that same weight of the evidence approach, think different periodicities, different sensitivities for things like RSI or other momentum oscillators, blends them together. So we only need one panel and we can get our sense of divergence and all the other things that we're going to talk about when we talk about momentum in just a second. And then the third and fourth pieces of the tools or of the suite of tools, one, we like to put icons on the chart because we believe in data visualization. We believe how that empowers people to make decisions. So we want to take important moments and put those visually back on the chart. So we'll talk about the GoNoGo icons, and we'll also talk about the GoNoGo squeeze. That's the amber grid that you see in the oscillator panel, and that gives us an understanding of volatility, in particular reduced periods of volatility, so we can look for those high momentum breakouts out of those periods of low volatility. So we put that into the oscillator panel so that we can go, now going back to the beginning of the presentation, we do not want to overwhelm and complicate this chart. So we get everything we need from a technical perspective, understanding of trend, momentum, volume, volatility, and those data visualization pieces in just one really large price panel and one secondary panel below.
Absolutely. So if all you get from today's presentation is we want to own the goes and we want to stay out of the no-goes, that's just fine. But if you want to optimize your trading strategies and think about improving to the next level, then we got to talk about the concept of momentum. Ralph Acampora used the baseball analogy. He's from the Bronx, and everything's baseball to those Italians who grew up in the Bronx. But Alex is he's from the UK, and in the UK they're all car guys. So Alex, if you were teaching momentum, as you and I have done many times before, how would you explain the concept of momentum to a new trader?
Yeah, I mean, this is how I do it. I mean, this is not obviously a picture of British cars, but
you don't have purple trucks in Britain?
We don't race them. But yeah, I mean, obviously, we're in the middle of the Formula One season right now. There's a month-long break, so we'll take this time to talk about momentum in terms of driving cars. So we know that momentum measures the rate of change of price. And the way we like to talk about it then is in terms of acceleration. So if you're thinking about driving your car, hopefully not one of these on the highway, but if you're talking about just driving your car on the highway, you're going to pull onto the highway and you want to pull onto that on-ramp, you're going to increase your speed from maybe 10 to 20 to 30 to 40 miles an hour. Around here in New Jersey, the speed limit is 50. So at some point, as we get closer to 50 and we're about ready to pull onto the highway, we're still going to be increasing speed, but not as fast. So maybe we go from 40 to 45 to 48 to 50. So the speed of our acceleration is less, right? So the rate of change, or the amount that we are getting faster, is slowing down.
Mm-hmm.
Even as, but you know what I mean, right? You know what I mean. So as we're still
great job with that.
We're still getting faster, but we're getting faster less quickly.
Yeah.
And you can see then in terms of momentum and thinking about that, what we're saying is, yeah, price is getting higher, but these higher highs are not getting as much enthusiasm. They're not racing higher as much. They're getting higher, but perhaps less, with less sort of jumps higher. And if you think about it, driving a car, you've pulled onto the highway now and you're going at the speed limit. So unless you want to break the law and get a ticket, you're probably going to slow down and take an exit next, right? So when we see that waning momentum, when we see price getting higher, but perhaps not as quickly, we're looking to see, will we now pull off the road and take an exit, or will we sort of join the Autobahn and get even faster, right? So we can watch that happen on a chart, and we can see that even if price is getting higher, momentum could be falling. And that's what we're looking for when we're looking at momentum analysis. It tells us so much about the price movements that we're seeing. If we're making a new high in price, but we didn't make a new high in momentum, that's a bit of a worry, because we aren't seeing as much enthusiasm on those higher prices. And of course, now we open up the toolkit, and now we've got a whole new bag of different indicators, different oscillators, different ways of measuring momentum, and all of them on their own seem to be very valuable, and they are very valuable. But if we think about putting all of these indicators on our chart that we already built for trend identification, now we have that chart where we've all seen them and you really can't make any sense of it because there's too much on it. So we do want this information though, right? I mean, I think we all agree that this is valuable information for us to know. So what we did with our momentum oscillator is the same thing. We took a lot of this information, I think things like RSI, but maybe faster RSI, longer RSI, different momentum tools, blended them into something that would still give us what we need from momentum analysis, but in one panel.
And so if we had all evening, and Alex and I have done sessions just on momentum, we could go through oscillators and stochastics and RSI and volume-weighted RSI, and we could look at the commodity channel index, and we could go through all of these tools that are also available on Metastock, and they're all powerful. Through the CMT Association, I've had the great pleasure of meeting many of the innovators who created these tools for us to use. They are all fantastic. Some are range-bound, some are unbounded. Some of them are moving from 0 to infinity. Some of them are bound between 0 and 100, or we're looking at negative versus positive values. Lots of differences, lots of subjectivity in how we define overbought and oversold. And to help speed us up through this presentation, what we're thinking about is blending lots of those core ideas in momentum into one oscillator. So when you get to your GoNoGo complete chart, you're going to have the price panel, which we've just discussed, and the GoNoGo oscillator. Real quickly, that is a bounded oscillator, and it only fluctuates between -6 and +6, right? So we're not dealing with infinite integers, and we don't have a lot of variation around these minute details. We've got negative values and positive values, and we can use that oscillator in the way that traditional momentum oscillators are used by everyday technicians. We can look for periods of extreme overbought or oversold conditions. On a GoNoGo oscillator, that's going to be above +5 or below -5. We can highlight those areas of overbought and oversold extremes. We can also look for periods of divergence. So the core concept behind divergence, Alex was just talking about this, as price makes a new high up here, right? We want to see, is the vehicle still accelerating? Is it like my kid sister when she was learning to drive, speeding on the on-ramp, speeding onto the highway, getting onto the highway, and just continuing to push that car to its limits? Well, in this case, no. We're seeing a bearish divergence. Hopefully you can follow my little laser pointer. We see a lower high in momentum. So still have positive momentum, but it didn't reach a new peak in our momentum oscillator at the time that it made this new peak in price. That's a bearish divergence, and we see the move away from overbought extreme, and indeed that leads to a correction in price. Similarly, we can have bullish divergence, where price makes an ultimate lower low, but our momentum oscillator is making a higher low, right? So we're still seeing negative momentum, but it's much less enthusiastic. All the technical analysis is doing for us is helping us to visualize what's happening in the marketplace. What are these human behaviors that are at play? And at this point, we can see as the price makes an ultimate lower low, there are fewer and fewer sellers willing to part with their shares of this company at those ever lower prices. When there's nobody left to sell, it can't go lower. The selling stops and then the buying begins, okay? Now, Alex, let's get to the meat of today's presentation. The most important part for trend following investors is this interplay between price action and momentum. So walk us through how the GoNoGo oscillator works here with our zero line.
Yeah, so this was really sort of the piece for us that we hope adds value when using momentum with trend. And so we've done the reading. Other people have done the fantastic work to understand what happens to momentum indicators when in trend. People like Connie Brown have written great works about that. And what was found was that when in trend, momentum indicators will trade in a range. They won't necessarily go overbought to oversold, because if the price trend is up, heavy selling, overselling doesn't make sense. So what they saw was oscillators will go overboard, they'll come back to their neutral territory. They'll go overboard, they'll come back to neutral territory. And so there are ways to use oscillators in trend to identify those ranges, and people will be looking at those charts, and some people will like to use 80 as the peak for RSI, let's say, and 40 for the low when in an uptrend. But what if that oscillator gets down to 41? Does that count as a touch of support? What if it gets to 38? Does that count as a break of support, or is it sort of close enough for it to be okay? And that's the problem with all of these oscillators, or some of these oscillators. They're very fast moving, and they like you said, as it goes from 6 to -6. Some go from 0 to 100. Some are unbounded. So having that objective ability to set ranges is very, very difficult. And some people will change those ranges for different markets, different asset classes, different even different securities if they think that they trade more in a more volatile way than others. So what we wanted to do with this oscillator was calculate it in a way that when all of the inputs to that blended momentum analysis are in their respective neutral territories, our oscillator goes to 0. So we have an objective level that can then be used as support in a go trend or resistance in a no-go trend. So what you will find is that when we are in a strong trend, the oscillator should in theory stay at or above 0 and continuously find support at that level, because any amount of excessive selling, any amount of oversold criteria being hit in the back behind the scenes would be a threat to the go trend. So what you'll see over and over again is the oscillator continuing to find support at 0 if in an uptrend, or find resistance at 0 if you're in a downtrend, and that allows you to stay with the trend. And now we go all the way back to the beginning, which is when you were saying about let your winners run. And we're far more likely as human beings to lock in a profit. So like, yes, we got some money. We're far less likely to close a position when we're losing it. So we want to know the likelihood of this trend continuing. So every time the oscillator finds support at 0 and moves back into positive territory, then we can say we are seeing signs of trend continuation because momentum is resurgent in the direction of the trend.
So every trend reversal is going to begin as simply a correction, right? What starts as a small pullback, then extends, continues lower, becomes a deeper correction, and then finally we can identify that it is a complete trend reversal. How about the irresponsible behavior of so many TikTok traders in 2021 saying, don't worry about it, dude, just buy the dip. Anytime price rolls over, that's just another opportunity to add more. Just buy more, buy the dip. That's irresponsible because there's no rule around when to not buy the dip. What Alex is talking about is a quantifiable way to measure when we've found legitimate support, when there are still more buyers coming in for this security, to offer us a trend continuation. So every time the GoNoGo oscillator is coming down to test the 0 line, when we're in a go trend, it's positive momentum, we come back to test 0, that's when we know, when it resurges positive again, that indeed this trend can continue. Breaking below the 0 line is our first leading indicator that there is trouble with this trend, and in fact, sellers are overwhelming buyers. So now, real quick, we like data visualization. In fact, we're deeply passionate about it to make sure that we're calling out those areas on the chart that are most important to us. So we just walked through this GoNoGo oscillator. You can use it in the traditional sense to identify those areas of overbought and oversold. But most importantly, what we were just talking about is areas of trend continuation. Where can you objectively identify that you should buy more on the dip and not, in fact, employ your risk management to close out the trade? And it's these green circles when we're in a go trend. We're going to show you a no-go trend example here in just a second, where the oscillator reaches the 0 line and pulls back positive. It's going to signal us right on the price chart that this is an opportunity to maybe scale up our position, a logical point to enter a trend if we don't currently hold this security. And of course, we still want to use momentum in its traditional sense. So when it has been an extreme overbought, when that starts to cool, we want to note that on the chart. Counter trend correction, that does not mean trend reversal, but it's a point at which in the short term, price may struggle to move higher quickly. That's also a logical place. If you needed to take some profits out of a certain trade to go deploy them on other opportunities, that's a logical intermediate period high that we just identify by looking at momentum cooling from an overbought extreme. Let's look at that in reverse. I know not all of you are long only investors. Some of you might love the options market, trade to the short side. Can we use trends in that direction? Of course we can. And what we're doing is just a mirror image, right? Momentum is negative. It comes up to test the 0 line, and where that proves to be resistance, where it moves back to negative territory, we're signaling that on the chart. Trend continuation icons are these red circles. Similarly, in the traditional sense of using momentum oscillators, we can look for oversold extremes. And when those counter trend correction arrows show up for us, perhaps we cover a portion of our short. What's important for trend followers is that we can stick with this short trade through the life of the move, and by identifying areas where momentum is resurging in the direction of the trend, we can see that we're going to have that next leg lower. Understanding what's happening in the underlying asset can be very powerful to your options strategy. And I know we've had a lot of options experts on this week's conference. Hopefully you can combine some of these core concepts in GoNoGo charts to help you with that. Now, Alex, what is the last, final, important piece for us in terms of volatility compression?
Yeah, that is it. Volatility is the last piece of the puzzle for us, and being able to have an understanding of volatility really ties it all together. I remember when we were, sort of coming up with these ideas, and even before with GoNoGo charts, being able to talk to a client at any point about any security over any time frame and give them a complete sense of the technical analysis included trend, momentum, volume, volatility. So volatility right here, what we've done is, given we now understand the importance of the zero line and how when in trend that zero line should hold either as support and resistance, we can now look at it and watch for moments where it gets stuck at that level. So when the oscillator gets stuck at zero, that tells us there's very little directional pull. It might be heavy trading, but nobody winning, right? So it could be a tug of war between buyers and sellers. And so for every bar that all of our momentum inputs remain in neutral territory, the oscillator stays at zero, we allow the grid of the GoNoGo squeeze to climb. That's the amber grid that you see there. So for every bar that nobody's winning the battle, the grid starts to build. And then you can see in this case, this was a max GoNoGo squeeze that was very extended and lasted for a couple of weeks. So during that period, you can see you're moving through the chart from left to right, price is moving lower, we get a lower high, the price trend weakens, but then you can see the price trading range shrinking and sort of moving more sideways and compressing as that happens. And when you see that, and then you see the GoNoGo squeeze, we know that that can't happen forever. Prices can't move sideways in a small range forever. Something is going to happen. I was always told, think of a tube of toothpaste. Eventually, if you squeeze it long enough, the top will pop off. And so that's what we were looking for when identifying volatility squeezes. And so you're trying to find when the momentum comes back, in which direction does it come? And so in this case, knowing that we were in a no-go trend, what should have happened, all else being equal, that zero line should have acted as resistance, and the oscillator should have gone back into negative territory. Then we would have got a no-go continuation icon, that red circle. But it didn't happen. It broke into positive territory, forced the squeeze to be broken. Oscillator moved into positive territory, and that told us momentum was out of step with the no-go trend. And then, of course, you see then the go trend coming in, and then you have the go trend with momentum confirming and with momentum being positive. The one thing to note is that these squeezes can happen either at reversals, as it has here, right? A sort of a tug of war at the end of this trend, and then it goes in the other direction. Or they could be continuations in the middle of a trend. You might see, exactly as you see here, price, the oscillator threaten the zero line, test it from below, but then roll back over into negative territory. And of course, then the trend continues in the direction that it was going.
So if you're familiar with using Bollinger Bands or Keltner channels, like a coiled spring, it's building up energy in that tug of war. And when it's finally decided that either the bulls or the bears have won this knife fight, then everybody moves to the same side of the trade. The shorts get covered, they're squeezed out of their position, and we see a higher velocity move coming out of those volatility compression areas. All right, here we are in the last few minutes of today's presentation. You guys are fantastic. Thank you for sticking with us on a Friday afternoon. Let's go through some real-time examples of how you would make trade decisions, but removing the analysis paralysis, eliminating the indicator overload. If we only answer 3 questions, we can stay on the right side of market trends. We can use these tools to get a complete picture of the technical environment to help us put probabilities on our side, but without all of that analysis paralysis. So 3 questions, 3 things to consider. What color is the trend? Where is the oscillator at, positive or negative value? And is there anything important happening at the zero line? So Alex, Let's have everybody on the webinar just shout these out at home. We can't hear you, don't worry. We're looking at the S&P 500. We've already reviewed this. Alex, I'm going to call on you. Where are we at? What's the trend?
Yeah, so real quick, 3 questions. What's the trend? The trend is a strong go. We see blue bars, and it's at new highs. Where's the oscillator? The oscillator is at a value of 3. Is there anything interesting happening around the 0 line? At the moment, we are in positive territory, but we recently broke back into that positive territory, and volume is heavy. Tyler, let's take this 30 seconds to talk about volume. I'm not sure if we emphasize that enough. Volume is incorporated into this suite of tools in the Metastock implementation by showing a blue ribbon across the bottom when volume is heavier than its average volume. So when we see relatively heavy volume, we see that blue bar along the bottom. So at the moment, as we hit new price highs, strong blue bars, momentum in positive territory, we're also seeing heavy volume. So pretty bullish for S&P. And I think if we go forward from here, one of the things we just want to touch on real quick, let's do the weekly one we've looked at already, but shout them out again. What's the trend? Strong blue go bars at new highs. Where's the oscillator? It's at 3 again. Anything interesting happening around the 0 line? Yes, we've just found support again at that level. So very bullish on the weekly, becoming more bullish again on the daily. And then I just wanted really quickly, because I know we're up against the time, in Metastock, some of the features of the implementation that are so powerful. One is Metastock's expert commentary, which is where you can hover over any bar and get that interpretation that we just talked about for any security. So you can hover over the bar and see what it says, what the interpretation is. And it's sort of like having us just there saying, okay, trend is this, oscillator is this, what does that mean? Are there any icons?
It's like Alex and I looking over your shoulder all day long while you're trading, only not in a creepy way. This is just right in your Metastock implementation.
Definitely not, but super powerful implementation. And then, of course, the other thing which you're probably sitting at home thinking, I wonder if I could screen for this stuff, and that's Metastock's exploration. So being able to find all the new goes in the S&P 500, to be able to find all examples of trend continuation in an index, those kinds of things are so powerful. We've actually added some screens, some scans, some explorations to this. So you can now search for all of the different GoNoGo criteria and then just display them on a GoNoGo chart. So really, really a time saver. And I know we're up against the time.
So for everybody who is enjoying this kind of idea, simplifying your trade decisions, but you also know there's a universe of thousands of securities we could be trading. There's a lot of macro environment factors. We maybe need to spend more time understanding those cross-asset relationships. If that's you, and it would be helpful to you, Alex and I write institutional grade research subscription products for all of our institutional clients, which would be happy to make available to you as well. 2 publications each week. On Monday morning, the flight path just takes a longer narrative form. We're going to talk about our plan for the week, and we're going to take that top-down approach from the asset classes into the sector groups, into industry groups or individual securities that are most likely to succeed in the current trading environment. We're going to spot rotations as they're happening, and we're going to find where the trend is. Even if there's a bear market in equities, there's a trend somewhere, right, Alex? All right. And on Saturday, we like to practice what we preach, which is to step back from the market, look at some longer term charts, and go through a chart pack. We call that launch conditions, and that's going to give us a cross asset view on longer time frames to get a sense of the context of our trading environment that we're in. Alex also writes daily notes every single day for premium research subscribers, important things that have shown up on our scans and screening tools, setups that we want to pay attention to, perhaps holdings in our portfolio that we're looking at, managing risk, maybe even taking some positions off. So there's a lot that we've gone through today. We did bring more examples, but I know it's already 5 o'clock on a Friday. So let's, we don't have to drag this out. Happy to bring you back on, Jeff. If there are any questions, we'd be glad to answer them.
Yeah, we do have one question from the chat.
Okay, great.
Greg wants to know, why are Saturday and Sunday the strongest days of the week?
Oh, dad jokes. I don't know. Why is that?
You look worried there for a minute, Tyler.
Like, we're trading
the rest of them are weekdays.
The rest are weekdays. I love it, Greg. Thank you very much. You made my weekend. When I put my daughter to bed tonight, I'll ask her that same question.
Kirby says,
That's going straight in my repertoire. I like that one.
oh, you have a database as well. I see. Let's see. Kirby says, great presentation, Tyler and Alex. Very compelling and a nice wrap up to the conference. Thank you very much.
Thank you guys for having us.
Ricky says, oh, I'm sorry, go ahead. Oh,
No, I said thanks.
Alex is like, go on, tell me more. This was brought up. If this was brought up, I missed it. Sorry. Does the tool accommodate for day trading? Can you use this on intraday timeframes?
Absolutely.
Whatever intraday periodicities you or you support or you look at, that's the beauty of technical analysis, it being fractal in nature. Any time period, any asset class, anything where there's sort of tradable history or data history, good technical analysis should be possible on any periodicity. Yeah.
All right. Cool. I have. I think that's it for the questions. Thank you for wrapping up. I'm going to tell them about the great offer that we've arranged for the GoNoGo. Have a great weekend, guys. Remember, tomorrow's a strong day.
Tomorrow's a strong day. Thanks, Jeff.
Thanks,
We'll see you guys real soon. Thanks so much.
You make me the presenter here. They do a really. I'm going to go ahead and turn on my mic. And we'll go ahead and just kind of clean up a little bit here. Okay, very cool. They do a really good job of showing kind of the tools, talking about how the scanning is, showing how elegantly everything kind of fits together. And so we'll just kind of talk a little bit about this, the package a little bit more, how it can help you identify the trend, the momentum. You get the icons that kind of signal when there's an opportunity that exists on the chart. You get the squeeze, all that stuff is included. It's crystal clear, English definitions in the commentary, all that kind of stuff. And of course, scanning. Scanning's available in this. So normally this is $149 per month. If you subscribe as part of the conference, you're going to get it for 3 months. It would be great to pair up with that Metastock subscription and the kind of the Learn Metastock that we talked about earlier. Basically means for $50 a month, you can use it until December. Okay, so you buy 1 month, we get the second and third month for free. That'll include some bootcamp training that we created, a trial to Metastock if you need it, and a 30-day money-back guarantee. So to do that, give us a call at 800-882-3040. Get in touch with us at metastock.com/saleschat or metastock.com/conf-promo. Neil says that was a great presentation, GoNoGo. I'll make sure they know. They're actually, okay, thank you, Neil. All right, Greg, we have some wrap up to do. I promised that we would do a mega prize.
Well, I'm here and I'm excited. I was going to deny any responsibility for that last joke, but seeing as how it was so popular with Alex and Tyler, I guess I'll
Yeah.
I'll allow it.
Well, did you like how I kind of framed it? Like I kind of snuck it in there. It was sneaky.
You did, yeah. Well, my ears perked up when you said I was the one asking it. So.
All right, let's go here. I have a brand new list. Let's talk about the prize. Maybe you can help me out with kind of what the prizes are. This is probably the biggest prize of the conference, as far as I'm concerned. We're going to give away 3 months of Metastock. Have you heard of the Metastock platform, Greg?
Meta what now?
Meta, not Facebook. No, not Facebook.
Yeah, I think I've heard that before.
Okay, yeah.
So wait a minute, you mean the one that's won the Task Reader's Choice Award for like 30 years now? That one?
Oh, 31, yeah, 31, yes. Yeah.
Okay.
Scanning, testing, we've talked a lot about it this week. Our patented forecaster is in there. Huge toolkit, real-time commentary, alert signals. 3 months of that. That's worth $300.
Wow.
We're also going to give away 3 months of the Xena service. That's valued at $165 per month.
Okay.
And Zenith, they spent $1 billion creating it.
I've heard of them.
2,000 reporters, 200 plus news bureaus around the world. So that's $165 value. We're going to throw that in. We're going to throw in 3 months of Learn Metastock as well. Learn Metastock, Kevin just talked earlier. We're going to give you that. That's a value of $99. We're going to throw in 3 months of the Magic Trader Elite, which is normally $199 per month. We're going to give you 3 months absolutely free. We're going to throw in 3 months of the Magic Trader Elite consulting service. Peter talked a couple days ago. He talked about, I talked about how people really that are in the consulting service really like it. And so we're going to give away 3 months of that. The retention is really amazing on that. So just the value of that, I was trying to keep track. I have a calculator over here.
It's got to be like $1 million.
So that's a monthly value of $728, I think, if I got all the things in there. So it's a value price package of $2,184. Should we give it away?
I say let's do it.
All right. And now I have a fresh list, so I have more numbers.
All right.
I just need any number between 1 and 8,241.
8241. All right, I'm going to concentrate for extra randomness. Are you ready?
Okay. I don't see the concentration in your face, though.
Oh.
Okay, there you go.
Yeah. That number is 5288. 5,288.
All right. I'm gonna actually fully. I'm gonna discuss who this actually is. Don't tell me. This person registered under the name of J Trader.
J Trader.
J Trader, yes. Jay, congratulations. You're registered with the Yahoo address again. We've had a tremendous amount of Yahoo addresses.
That is by far the best prize we've given away. I mean, that was like waiting till the end of the Price is Right.
Yeah. Was it the Grand Showcase? Or is that what they called it?
Like Monty Hall and everything. No one under 50 is going to get that.
Yeah, I don't get it. But I am technically 50, so I didn't understand what that was. Anyway, meta stock. Okay, let's wrap up then. I hope everybody enjoyed the conference. I want to say thank you again to Stocks and Commodities Magazine, www.traders.com, CMT Association, cmtassociation.org, AAII.com. Of course, our new partner, the Traders Forum. Join the community, thetradersforum.com, and we'd love to see you in there. And then, of course, we're Metastock. All of the offers that we had that we're offering directly here can be found at metastock.com/conf-promo, metastock.com/sales-chat, or you can call us at 800-882-3040. Greg, I feel like that went really well.
Hey, I thank you, Jeff, for all your effort this whole week.
Thank you for all the help. It was a lot of fun to kind of do it.
It was a great, yeah, I like that. That's everything about it. And thank you again, as you mentioned, to all our presenters, and of course to everyone who came out and hung out with us. It was a lot of fun.
We really appreciate it. Like the speakers, obviously they came and talked about a lot of things, but we couldn't really do it if nobody was here. And the audience is an important part of this, right? And so thank you for coming. If you've watched on YouTube and you learned anything, like and subscribe. We do a lot of these. It's good to see you. Thanks for being here. Have a great weekend. Stay healthy, stay safe, and we will see you next time. Bye, Greg.
Bye-bye.
Bye, everybody.